Yo, 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 good morning, everybody. Welcome to the last trading day this week. Well, last stream for this week. How's everybody doing? My name's Richard Butler. Welcome to the Thursday morning stream for the 5ers funding and beyond. Sorry, guys, I'm just a little distracted. I'm busy marking up a trade that I'm in, which I forgot to mark up, but I am busy with it right now, and then I can share screen, and then I can show you what I am busy with. We are currently in a NASDAQ buy, and I've already hit TP1. Now I'm waiting for TP2 to be hit so I can finally be freaking break even. Well, a break even trade. Let's put it like that. All right, cool. That is done. I am going to say hello to anybody or to everybody that's in today. Jackson Christian saying hello today. Gold analysis. I will get on to you or get on to that for you in a moment. We've got MGN saying greetings. Good morning to you, MGN. We've got Azrael Trades. Good morning, guys. Azrael, you have not responded to the email that I have sent you. Please go and have a look. I've sent you an email. I've sent an email to all of the 1v1 participants for next week. You need to check your email box so that I can see that you've seen my message. Kavisha saying morning London and Protea boy, may you have a great day. No London boy today. We have William with a day off. He has some family business to attend to today, so you will have the pleasure of my company for the next hour or so. Sending love from London. Daniel Bartle, good morning to you, sir. Elliot, hello all, good morning to you. Yuhiko with a wave, good morning to you. Where is Will? Like I said, Will took the day off. He's doing some family stuff. He's got some family business to attend to. Kasim saying hi from Uganda, good morning to you. We've got Solomon Musa saying hi Richard, good morning to you, Solomon. Nduta Njiri saying hello. Njiri, did you get your account? The one that you won, what was it, last week? There's 3 people that won accounts, and I think one of them did not send me their email, so I'm not sure if that person got their account, but I did send your information through, Nduta. I didn't notice. I will respond now. Please do. It's so that I can get you all into the live stream next week. There's some stuff that we need to talk about, some things that I need to discuss with you all, so please do. Dan Bolger saying good morning from Malta. Good morning to you, sir. We've got Pratik also in with a lot of emojis. That is awesome. Thank you very much. Kavish saying, Rich, yesterday Dirk's analysis was more good. I agree. Dirk's analysis yesterday was good. Actually, I didn't see Dirk's analysis at all, so I have no idea what you're talking about. I'll go and have a look. Good morning, bro. Good morning to you. Yes, sir. Up and running. Excellent. I am happy to hear that. Glad that the account is up. So, good luck with that. Mind to millionaires. Any surprise for us? The only surprise that I have for you is that you're going to have me for the next hour by myself. Can you tell me what account means? Is this your money? What do you mean account means? Are you referring to the trade that I'm in? Okay, so I'm in on this trade at the moment on my personal as well as my prop accounts as well. So this is an actual trade that I am in currently. So I will talk about this in a second. No worries, Mr. Boyce Crypto. How can I get a funded account here, mates? It's very easy. What you need to do is you need to join us every day, like and subscribe, be a part of the channel, and then from time to time we will have giveaways, we will have events. Like, to give you an example, this afternoon, after the stream completes at 2 GMT, you will be auto redirected to the TSG channel, which is Trade Set Go, which is our sister company, our sister brokerage, let's put it like that. And they are having a giveaway today where you can win one of 5 high stakes accounts. So all you need to do is just go and participate there. And like Nduta has already said, he received their account that they won, what was it, 2 weeks ago? It was 2 weeks ago, or it was last week. I can't remember. My memory is fading. So that's how you can win an account, or at least receive an account without paying for one. It seems as though my TP2 is almost close to getting hit. I'm talking about the GU because I requested it. Oh, okay. Fair enough. I am now on a short on AU because of the 4-hour fair value gap. Excellent. All right, cool. Let me run through this trade. Let me just see how close it is. It is tantalizingly close to my TP2. Come on. You can hit it. Come in. Anyway, while I wait for that one, I will discuss why I'm in this trade as of right now. So, yesterday, this is NAS, by the way, so NAS 100. Did I just move? Oh, it's over there. So, yesterday we had a slow upburn. We were talking about how slow this upward momentum was on NAS and us being a little bit unsure about the direction. I ended up wanting to have price come down. I took a singular trade which did not reach TP3. My TP3 was just underneath this swing point over here. I got a TP2 trade, which I tried for a buy, which ended up being, well, not trying for buy, tried for a sell over here, which ended up being a little bit preemptive. And that then ended up in me taking a small little loss. I believe my entry was somewhere over here. So I ended up getting swept out, but I did end up taking another trade as this candle here closed. Believing that the direction was still correct, it ended up going to about TP2. It missed my TP3 by fractions. And then it ended up coming back to break even and tapping me out. Yesterday was a 0.125% day for me. Anyway, so we had FOMC as well as Trump having a little speech yesterday, which ended up in this price action at New York Open. And then when we had FOMC, this was the move. So I did not trade anything from New York session onward yesterday. There was just no point. I don't trade FOMC. News information is just too much. There we go. TP2 has been hit. This is now officially a break-even trade. Or a risk-free trade. My apologies, not a break-even trade. So on that one there. Currently still in this one. So right now, break even. There we go. Yes, there we go. All right. So that's good. I've already locked up 0.375% on this one. I'm back on 0.5% of risk. It is post FOMC, so I want to see what the market's going to be doing first today. Anyway, so that is not bad. That's great. Excellent. Excellent. Happy about that. Perfect. Perfect. All right. All right. There we go. All right. You've got my attention now. Sorry, guys. All right. So the reason why I took this trade was because of yesterday's FOMC pushing price lower. We ended up coming to rollover, which was this candle over here. So let me just remove that over there. You can see clearly. This was the rollover candle. Not really much in it. We came back, or we came down to this area over here with New York as we exited it. If I go over to the 4-hourly, you'll see that we came in and filled that gap of Monday, and we basically wicked this area over here, in essence. If I could just, let's say something like this. So it was a bit of an area of interest for me. We had it act as a resistance area. We had it tested, become a supply area, retested supply area, breakthrough, another resistance point, another resistance point, eventually resisted, but then gapped through and then retested again. So to me, this area over here was a higher time frame area of interest. So a very nice area of interest, in my opinion. I was looking for potential sells initially based on how strong the FOMC movement was yesterday. But the fact that we rejected off of this area was the thing that made me think, you know what, there is a strong potential we're going to try and push up from here. So going down to the hourly, we had two, oh, that is the opposite way around. There we go. We had two very strong bearish candles coming down into this area, and then we immediately started picking up. Now, as you all know, during the Tokyo session, I am fast asleep. So what I saw was on the 15-minute was us really struggling to break this zone over here. We had a very nice bullish run from this low end, which was good. We did not sweep that FOMC high and then all the way down. We had this little area of consolidation here, but we did not have any follow through when we started breaking this consolidation that we had here. Let me just mark this as consolidation. We did not have any follow through when we started pushing lower. So basically we had consolidation, breaking lower, coming into this 15-minute base area that I had. And then from there on, we started to push back into this area of consolidation. And then this was before I took my trade, started pushing out. So I wanted to see whether or not we were going to respect this consolidation by pushing a little bit lower here. And these 15-minute candles, if I look at it on the 5-minute, you can see it really struggled. It looked like it was going to reject and start pushing lower. But during this period here, as we were exiting the Tokyo session, we started getting these very nice bullish candles. And to me, this area of consolidation just faded away. To me, this base area became a much stronger reaction. So I decided, okay, I'm going to wait for a bit of a pullback in the London session. So you have a rally and then a base and then another rally. And then I entered on this closure of this bullish candle. So that's what led to this trade. I am a little bit more bullish today than I am bearish. So I am wanting to see yesterday's highs be taken. Come on. I want to see yesterday's highs taken. Hopefully we will have a full runner today. If this hits TP4, this is going to be a 1.25% trade. This is was at least 0.5% of risk. Each TP point removes a quarter of the risk that I had on initially. So if it was 1%, it would remove 0.25% at each TP point. In this case, I've only had 0.5% of risk. So it means that it's going to take a half of a quarter, which is 0.125% of risk. Doesn't seem like much, but remember, percentages become a lot more, it's important, but the percentage itself doesn't tell you much until you start knowing the size of the accounts. When you start looking at the accounts and you realize that 0.25%, 0.5%, 1% on, let's say, 100K, that's quite a bit of money for a singular trade. So just take that into consideration. All right, so break even, this means that there's no more risk on the table. So everything that's down here is now zero. So what it means is I have that 0.5% risk that I initially placed onto the trade. I can place it on another trade now and be risk-free today. So yeah, that's where we are right now. All right, cool. I will have a look there for you. Rich, you looking a little down. Everything is good, mate. I'm sick, mate. I'm currently, it's dead ass winter here by us right now, and I am sick. I woke up not to complain, but I woke up this morning, headache, sinus, just throat is dry and raspy. I've been having a bunch of drinks this morning, just trying to soothe my throat. It's that time of the year where it's winter for us, so we get sick. So if I feel down or if I look down, it's because I'm feeling sick. It's not because I don't feel happy to be here or anything. It's just just a little bit sick. Ilya's asking for AUD or XAUD. Okay, so I was about to say AU USD. I thought you were asking for Australian dollar. No, you are asking for gold. All right, cool. Let's have a little gander at gold. Let's go over to the daily and see where we are. What happened here? Okay, so we had the gap, which was filled yesterday with FOMC as well, I'm assuming. Yes. We had a bullish order block down here. What is this? Okay, so this was previous area of interest. Oh, wow. Okay. We just wicked the top end of it, which is great. And then started pushing lower. Okay, so for right now, this area up here is of no interest to me right now. Right now, it does seem as though we have a little bit more bearish price action on gold, considering that this acted as an area of support. So if you were to pull it all the way through, you would get some area where it tested it. How far is it on this one? Yeah. All the way back to there. These areas over here didn't really respect it, but that's fine. It was a last area of interest to me. So the way that I drew up this was basically, if I zoom in here, I think it was down on the 1 hour. Yes. So on the 1 hour, I took that very last this very last bearish candle before we started pushing bullishly. So you effectively had the low down here, a attempt to push up, a retest, and then a strong volumetric push up higher. So it means that this area over here was a strong contender for a potential area of like a order block or something where price volumetrically pushed out of, like with real conviction. So it was a real convicted move. Anyway, then what we had was, oh yeah, and then I marked it down with this reaction there. That makes sense. We then eventually started pushing lower here on the 5th. Had a bit of a decision point with the New York Open, volumetrically pushed into it. So was an area previously, an established area. Now it became an area to be tested. Price pushed through and then eventually retested it over here before volumetrically sinking lower. So price came back into this area on Monday, attempted to push lower, but no lows were swept all that much. So that was the low of Monday. This reaction here only got to that point there. So all of this over here was untested. Eventually, we continued pushing up. So we had bullish momentum. We came to the very top of it. FOMC pushed price lower volumetrically, sweeping all of these low points that we had and filling the gap. Like, wow, it seems as though here it literally just filled the gap in its entirety. Nice. All right. So then from there on, we started to push back up again, started pushing volumetrically. That's nice. Slowed over here around this bottom end. Okay, I'm going to start removing some of the drawings because there is so many drawings right now. Okay, so this area over here became an area of support when price pushed off of it. So gap, push up, retest, push up, struggled to break through, and then only here broke through in its entirety. But what we had is we didn't test this area all that much. We tested this consolidation here, as you can see. So this area over here was an area of consolidation, which we tested this area of interest, which was a previous area of support, got pushed straight through and then tested on the just above it. So we broke above that. So this area does not exist anymore. It's only this consolidation, which has now become an area of interest, which is now a breakpoint. All right. So I have too many arrows as well. Sorry, guys, if I seem a little bit flustered, but my brain is working on fumes as of right now. So this does look like it's roughly the golden zone. Okay, so we pushed just above the 0.618, but did not take the 0.25%. So there might be a little bit more attempt to push up from here. We'll see. All right, going down to the 30 minutes. It does look quite good for bearish movement. This is on the 30 minute. We have a 30-minute base over here that wasn't tested. Is there one on the 15? So that's the 15-minute. It is slowing down. So the last half an hour or so, it's been struggling after this reaction. We are below the 50 EMA. What is the 200? Okay, so we're below the 200 as well. This might just be the beginning of a potential downward push again. Can we get back to this established zone down here? Or potentially this low that we had here? How does it look on that? Yeah, this looks all right. All right. So if, and this is a big if we respect this area over here, meaning we respect this consolidation, break, retest, continuation lower, retest, consolidation, and new break. If we respect this area here, meaning price, if it does come back up, it doesn't close above the top portion or even above the Tokyo session high, like here. If it does not close above that point or above the box, and it starts printing potentially what it's doing right now, slow downward price action, because you have that as a high, you have this as a low, you now have a lower swing high and another lower swing low. So you are creating downward price action with these 4 points. So high, low, lower high, lower low. If we respect this zone up here and we continue with this downward price action, so we've got a low, we now need to get a lower high swing. So price should come up a little bit and then continue lower. If it starts breaking this lower low, then it's definitely going to, well, I'm not supposed to say definitely, it's more likely that we would have this area down here get tested on gold. We do have some weak resistance points here, which is areas where on its way up, the bears tried to break the upward push. So gold, if we respect this upper section, we can continue lower. However, the inverse, so that would be we push up and then we start doing this, we can potentially get in our trade. However, the inverse can be that this resistance area over here, which was also a little bit of a reaction point there, could potentially start reacting as an area of support, pushing price higher. So we're currently in these two areas over here. So this area here and this area here. I want to see one of the two break. If we break this upper section, which is the Tokyo high, this break point, if we do start pushing higher, then obviously we need to see how we're going to react over here, which is yesterday's high point. So we have a very nice area of interest there, but you can always break a little bit lower by taking the last bullish candle and then saying that could be a potential area to be tested. So if we do break above this, bullish price action. If we do break below than this, bearish price action. If we break above, test would be over here. If we break below, the initial low of yesterday to be tested. So those are the two areas and two directional movements that I see can happen. We can also have just an absolute flat day and be stuck between these two areas for the whole day. Now, it doesn't seem like much, but if you take the low and to, let's say, that bracket over there, that's 32 points. So if you're scalping lower time frames, 32 points doesn't seem all that bad. And you can definitely find a trade there. Let's have a look at how my NASDAQ is going. Okay, so TP2 was hit, and it seems as though it's busy pulling back. Okay, what the hell? Okay, As your trades, I see that you have replied. Thank you very much. Appreciate that, my friend. All right, so it does seem as though we're coming back now to test the Tokyo high after breaking above. Did we sweep this? No, we did not. We did not sweep the FOMC high before pushing lower. So let's see how this retest is going to go. It's probably going to hit stop loss over here, which is okay. That's a profitable trade. Happy with that. How do you set up your TP's 25% close at TP2 and so on? Very simple. So I will show you with, this is a play account. This is a demo. We play with this when we do competitions, myself and LJ or myself and Will. We use this account. So what I have is I have a position sizer, which is a free to use EA that you can get from earnforex.com. I would seriously ask anybody to give me any bad information about the position sizer. It's great. I love this position sizer. Anyway, so what I do is I have, let's start from the beginning. I'll make it very nice and simple. Okay, let's say hypothetically I want to risk 1% on, in this case, GU, all right? It gives you a stop loss line with a take profit line. If you select lock, if you unselect lock, then you can move the stop loss around and it doesn't affect the take profit. But if I lock, it will lock it to this ratio that I put here on the left. So if I were to take a trade right now, this would be an effective 1-to-1. So I would risk 1% to try and make 1%. Makes sense. I can add multiple take profit points, and each one of these take profit points is going to take in consideration this 1-to-1 ratio. If I make it 1-to-2, then the TPs are going to adjust to make it 1-to-2 risk to reward. So what I normally do is, is I make it a 1-to-1, and then you go to the trading tab, and then you can select which share of the risk needs to be closed at which point. So you can divide it however you want to, so long as these numbers add up to 100%. So I can make this 40, I can make this one 30, I can make this bottom one 20, and I can make this one 10, and that will then equal 100% of my initial risk. So it's the 1% and then the percentage of that 1%. So in this case, if TP1 were to be hit down here, it would close 40% of that 1% trade. So if I go back to the main, and you'll see the position size here is 0.6, it will close 0.6% of that at TP1. All right, so I have a 0.25% of the initial risk be closed at each TP point. And then what I do is, you'll see this break-even box up here when it reaches TP2's point. So in this case, TP2 would be 670. So I would then select it as 670. And if I were to take the trade now and it reaches TP2, it will automatically move the stop loss to break even. So every single one of these, you can see what profit you could have at them. So that's profit target 1, 2, 3, and 4. And then your total would be, in this case, I would be risking $200. And this is a full reward. So it means TP 1, 2, 3, and 4, all of them were hit, would then equate to $500 of risk. This is a free-to-use EA. I use it. A lot of the people here at the 5ers use it. A lot of the people on the live stream use it. It's really great. It takes away a lot of the guesswork. If you're not comfortable with trying to figure out what is 1% risk in terms of 2% risk in terms of your account size with your lot sizes and so on, I absolutely love this EA, free to use. So yeah, it's got shortcuts. So if I were to take a trade, I can just use shortcut keys. So that's how I do it. Apologies. Please explain your trade management style. I don't understand what you mean by risk-free after TP2. So it's exactly this. The moment TP2 gets hit down here, this stop loss that is here would be moved to break even, and then there's no more risk on the board. Which means that if price were to, for argument's sake, come back to my entry point, it's going to be a net zero. There's no risk. I can't lose on this trade anymore. So now it's without risk. So whatever risk I could have had, like for argument's sake, if TP1 gets hit, 0.25% or 25% of the initial risk gets removed from the table. But I also take 0.5% in profit. So the 0.5% that gets removed leaves me with 0.75% risk if it was a 1% risk trade. Okay, so it means that between TP2 and TP1, I'm still sitting with quite a bit of risk on the table. If it hits TP2, it moves my stop loss automatically to break even, meaning that even if price were to come back down, there's no more risk here. I can't lose money at all unless I get slipped. News event that starts pushing it lower and I get a little bit of slippage. That's the only case where I would lose money on this trade. So in this case, every take profit point locks up a percentage of the gains. And then eventually I can have it completely risk-free, meaning there's no more risk on the table. Because as it moves up, it moves the stop loss. It's not a trailing in that sense. It's just a break even after TP2. Does that make sense, Solomon? Josh, does anybody know why it's taking so long to receive payouts lately? Thanks. I think there was a issue with one of our payment providers last week, but from my knowledge, it was sorted out. So there should just be a little bit of a backlog, and then they'll sort that out. But if you haven't received, you can reach out to help@the5ers.com and they can assist you there. Mixie asking, Rich, don't you trade at all on FOMC? I trade before FOMC. So long before FOMC. So yesterday, where's my mouse? Yesterday, I traded this segment here. So while we were trading, I was in this area here. And then obviously New York, I won't trade the New York Open. So I don't trade in this segment here, basically. So I don't trade during pre-New York or the New York Open itself. Give or take half an hour, 45 minutes, depending on what price action is showing. And then FOMC by my time was 8 o'clock. The evening. So long before that, I would have wanted to be out of a trade. And the thing is, the gap that we had here and the gap that we have here leaves me with all of this in the middle that I can trade. And it's just not worth it to me. So I just don't. I just don't trade FOMC at all. Anyway, next question. It's okay, bro. Try to have a soup. We'll see. We're going to have some Thai red curry today. Hopefully that helps as well. Put an eye on GU and AU to if you get the time. Yeah, cool. GU. Yesterday, the FOMC did indeed push the price quite a bit lower. So if you have a look at the indices, you'll see on the index, it was good for the dollar, pushing price up. We did have these areas that eventually got reacted and then broken off of. What the hell? There we go. It was good for the dollar, pushing price up, and it does seem as though there's continuation now, which to me just shows GU potentially coming down even further. So GU actually had a very lovely 15-minute base area right there, which happened to be also close to the low of, it's probably going to be on the 5-minute a little bit better. Yeah, okay, so we'll take this whole 5-minute area here. Very nice break and retest of the Tokyo low. So if that's the Tokyo low, basically, you swept Tokyo high, you volumetrically pushed through Tokyo low, retested and continued lower. This is very nice bearish price action. However, we do have yesterday's low to be contended with. Is there another low on the 4-hourly? All the way over here. Let's have a look at this. Okay, so this segment here was the lowest of low that we had on the 4-hourly, which potentially can be tested next. So that's what, 70, that's about 70 points lower. If we break this area here, which happened to be the previous day low, if we break this with conviction and retest and continue, then we're coming down here. Because there's very little resistance. It was on the 4-hourly. There's very little resistance before that. Okay, I'm saying that, but there is a little bit of resistance here. So let's say this to that. Let's see how that looks. Apart from this down here, this actually does look decent. So if we do break through, we have two areas of interest. This is very bearish. And this is basically just a very, very slightest of retracements and then an attempt to push lower on the 4-hourly. On the hourly, it also looks pretty good for continuations. This is very strong coming into this zone down here. We have 22 more minutes before this hourly candle closes. I would love to see its reaction down here. So that's GU. GU looks very bearish. If we're going to react here, we do need to break the Tokyo high. And then from there on, we can potentially come back up to this area up over here. Yeah, so this segment here is the first area to be tested, definitely, if we're going to come back bullish. If we can break through this bullish portion here, say we react from down here and we start printing up higher, we need to break through this. And then if we can break through this and start showing a potential of pushing higher, we'll come back into this area over here, which was pre-FOMC. Yeah, so right now, very bearish on GU. I'm assuming AU is going to be the same. It's going to be strong across the board for dollar. At least with AU, you do have a little bit of a deeper potential area to test should price continue lower before it has a potential resistance point, or in this case, support area. Okay, we do have... Okay, but this is horrible. This is look how crap this price action is. And then volumetric reaction and then retest. All right, so basically where we are right now was a... Let's say take that area over there. Tokyo low. We're going to come and test Tokyo low now. I'm not too fussed by this kind of price action here. That is weak. That is weak. I would be more interested to see if we can get down here again. So AU, if we can break through Tokyo, retest, we can definitely continue lower to come and test down here. And it does look like we're probably going to have that. Let's see. Sir Jones Analyst, good morning, my South African friend. Morning, everyone. Richard, hope you're good, mate. Looks lacquer cold in their province. It is nice and chilly here, my friend. It is nice and chilly. What is a Quasimodo? Well, you're very fortunate in this regard. We have two experts at Quasimodos. We have Victor, who's going to be on a little bit later, and then we're going to have Pedro that's going to come in also a little bit later. They are experts in Quasimodos. And Quasimodos is... I don't know if you've ever watched a Disney film about Quasimodo, where he has one shoulder that's higher than the other. So you can imagine, and I'm not an expert, so please don't take my word as you have a high, a low. So you have you have the shoulder coming up, you have the neck midline, and then you might have a higher head as an example. Come back down, and then a much higher... This actually does not look the way that it's supposed to, but you can imagine something like that. If this was the head, this is the left shoulder, this is the head, that's the right shoulder, and then you eventually break lower than the previous neckline, so down here. So that's that shoulder that's up much higher. And the way that this usually works is it indicates a potential continuation much lower. So you sweep the high of the head and then you push lower. But once again, Quasimodos to me, I'm not a Quasimodo expert. Victor and Pedro are Quasimodo experts. They will really assist you with this thing quite a lot better than I can. Useful insights. Yeah, thank you. My ego, my style. Hi, Richard. How do you effectively use MAs like the 50 and the 200 on your chart? Great question. To me, an EA or any sort of, not EA, any sort of moving average is exactly that. It takes a combination of a bunch of bars and shows you on average where price was. So I use the moving average as an indicator of whether or not we are how strongly we're moving away from a specific area based on where we were on average. So if you look at this 50 EMA right now, generally when we're trading very close to it, prices piercing through this area, it means that at that point right there, that was the average price over the last 50 bars, as an example. When we start pushing away from it, it means that there's something happening in the market that means that we are trying to move away from our average, which means that in this case, the bears might be trying to take over from the bulls. So it's always this back and forth, but at this point in time, the bears at least was trying to break this back and forth, to try and gain control. And then eventually you come back to it, and then you start pushing away from it. And then what I would do is I would look at how volumetric the candles are as they're moving away from the EMA. In this case, we were trading around it. You can see with these candles here that we're really struggling. There's no real side. The wicks and the candle bodies are very similar. There's a large wick above and below in relation to the candle body, which just signifies that there's balance. It's unsure. Nobody's really in control. And then eventually we start getting a little bit of momentum pushing up, larger candles in relation to the candle body, also larger candles in relation to the previous candles. We have an attempt to try and push it back down. It just comes and retests this EMA, and then we start getting nice volumetric movements pushing up higher. So this to me signifies that at this point in time, the bears have taken over. So it's taking the average price and seeing how we are reacting at that average price. That's what I use it for. It's that I combine it with momentum to see if we're moving away from where price was on average, because to me, I see the market as a arm wrestle. I see it as the bulls and the bears are wrestling, and there's this constant attempt to move the one out of the way. The one is trying to overpower the other one. That's just how I see it. And areas like this, where you start getting these momentous candles start really pushing up, that's basically the bulls overwhelming the bears for that segment. And then what happens is there's a second round. That's a next candle right over here. That's another attempt for the bulls and the bears again to get back into an arm wrestle. So there's a round every 5 minutes, every 15, every hour, depending on which, or regardless of which time frame you use. That time frame indicates to you who is busy doing what during that time frame. So just because the bears beat the bulls at a specific area doesn't mean that the next candle is going to be the same, because now it's a new round. There could be some new invigoration from the bears or from the bulls to try and break this downward cycle. And that's just how I see it. Bears and bulls, arm wrestling, and eventually one of them will win. It's going to be a back and forth. They're going to be in the middle, and one's going to lose for that round. And then we start pushing up. And then it's how strongly did they lose? Was it a back and forth like we had over here? It's going to be like this area over here, where it's just constant. They're constantly, okay, for this round, the bulls just barely won. The next round, the bears just barely won. Is it going to be like this? Or is it going to be like this? Where now there's conviction. It's really pushing. The bears are really trying to break the bulls, but the bulls are just stronger and it starts pushing up. That's how I view it. So in this case, if you look at how strong this was, this is the bears here just absolutely broke the bulls' arms pretty much. And then eventually when the bulls did try and come up, they could not even break close to their previous strength, and then it just continued lower. So I use that as momentum. And the EMAs helps you to visualize this prior to you actually needing to go and look at what the average bars is. That's how I use the EMAs. I like the EMAs also because the weight of the more recent candles has there's a bit more weight on the most recent candles. It still takes the last 50 candles, but if it has to plot the price, it'll take, let's say, the last 10% of the candles in consideration and weighs it a little bit more heavily. I hope that answers the question. Sorry, very long-winded way of answering it, but that's how I tend to answer things. It's very long-winded. Raphael, good morning to you. Richard, due to the news events yesterday, EU and GU dumped. Does this mean EU and GU are still bearish? I mean, you can have a look at price today. This is AUD. If you have a look at EU, when we had an attempt to try and push back up, look how flat that was versus how strong that downward candle is. So the momentum is definitely on the bear's side right now. We are continuing to push bearish. We do have areas to test down here, but it's still very bearish. So if you're looking for sells, right now it looks pretty good for sells. However, I would always preface caution when you're getting close to previous swing points, like for argument's sake, yesterday's low. There could be a reaction there. Though, if I look at how weak this was, I would not expect it to be the strongest of reactions, but do be careful around that area. GU also. Okay, so GU broke through. No resistance whatsoever. Are we going to have a retest, or are we going to just continue sinking lower? So that's for you to decide. That's for you to look at the market and say, you know what? It's volumetric. It's momentous. It looks good. It's strong. I'm going to look for a potential retracement, and then I'll get in. That's why I use the rally-based rallies and the drop-based drops. I use areas like this over here where price pushes lower. So it's a new directional move. You have an attempt to push price. So you have a drop here. You have an attempt by the bulls to try and break this new downward direction. So it's a drop. This is a base area. And then you have a confirmation of the drop on this candle. So what I would do is I would generally enter a trade there, have a set TP, a set stop loss, and then I would just have it play out. Sometimes price retraces a little bit deeper, maybe sweeping that high, knocking you out depending on where your stop loss was before continuing lower. But you get more opportunities. Like there's another opportunity down here where you have the continuation pushing lower, another base, and then a nice bearish candle following it up saying, look, we're convicted, we're definitely going down, and then looking for a trade there. So in this case, I think we're definitely very bearish on most. AUD, bearish. We've broken through the Tokyo low. One more minute before this one closes. How's my US? Okay. All right. This looks okay so far. We effectively reacted off of this last attempt here to try and push up. There, I might get my TP3 yet. We'll see. We'll see today. It's a pleasure. I'm of the opinion that if you are trading, you should do whatever you can to simplify the trade itself. The analysis can be as complicated as you want to have it, but the barrier for entry should be as simple as it can be. I need to make sure that I'm not struggling to enter. Like, oh, okay, now I need to drag... where is my mouse? Okay, so now I need to mark that, and then I need to drag this, and then I need to drag that, and then I need to go and set my stop. I'll set my take. See, my brain is fuzzy today. Go and set my lot sizes and then enter. So whatever I can do to simplify that whole process, the faster I would get into a trade, the better pricing I would get based on my entry, and the more conviction I would have with that actual trade. Because if I wanted to be in, let's say hypothetically, let's choose a different area. If I wanted to be in on a trade over there on the close of that candle as an example, and I get in down there, I'm not going to feel as confident because maybe potentially my stop loss would be below that point. But if I got in there, my stop loss would be above that swing point. It's just an example of if you can do something to assert that trade, whatever you can do to make it simpler for yourself, do it. Anyway, Raphael said, I just hit TP on an EU short. Congratulations to you, my friend. Talking about TradingView as a platform in the 5ers. Yes. So everybody saw that email. I saw it as well. Did not get an opportunity to test it. So maybe we should see where can we do that. It's under the trade, right? We should probably log in, isn't it? Where do we select that? Is it trade? Let's see, the 5ers. The 5. Okay, so I'm going to have to go and read up how... Is it TSG? Okay, I'm not entirely sure how to set this up because I can see IC Markets is here and stuff like that. You know what? Let's reach out to help at the5ers. Let's reach out to help at the5ers so they can maybe assist us on how to do it. I saw the email. I have no idea how to select it, but I do know that from that email that they're saying that TradingView is now partnered with the5ers, so you should be able to trade with TradingView. Maybe it's with TradeLocker. I'm not sure. We'll go and find together. Toxic FX saying, "Hey Richard, hope all is well on your end of town." Yeah, it's going okay. It's going okay. Syndicate trades 150 pips booked. Congratulations to you, sir. Gold finally touched the support zone but closed back above the point of interest. So as of right now, gold is quite bearish and we're gaining a little bit more momentum. So if you look at this kind of like candle structure here and you compare it to that and this, you will notice that this is way more volumetric, way more convictive. Definitely wants to continue lower. Whereas this one over here might indicate we're not quite sure. Personally, we're already below the Tokyo low. We're probably going to start coming down to the daily open, which is here on this candle. Where is it? I think it's this candle over here. This looks very convicting. So I would want to see one or two bullish candles, something like this, and then a bearish candle like that, a strong one. And then I can get in on that for a sell, continuing lower on gold. But that's just how I would try it. Daniel Bartle, would you be cautious trading the GU today with Bank of England being a little later today? I didn't even have a look at Forex Factory. We had the monetary policy of the Swiss franc. We have the monetary policy today, 1 p.m. my time, so that is 11 GMT. What are we expecting? They're expecting it to stay the same. I mean, if it's to stay the same, I don't think that it's going to have much of an impact on where's GU on the current movements that we're having right now. We might have a push up, one or two candles, and then a continuation lower. But right now, to me, the dollar is quite strong. And with the dollar being quite strong, I don't know what the pound needs to do in order to kind of like counteract that. But once again, I would always preface caution around news, because news can react so volumetrically and so violently that even if you had the direction right, your stop loss might not be at the right place. So I agree. I would be cautious trading GU, but not like now. I would be cautious, let's say 1 hour or so before the news is going to come out. Then I would be cautious, because then people start positioning themselves for the news event itself. So you might have a little bit more volatility, you might get a little bit more volume, and it might be in the opposite direction of what you intended. So in this case, GU right now is very bearish. Let's say 1 hour before the news, let's say the news is here, I would not want to be, or let's say the news is here, I would not want to be trading this section here prior to the news. That's how I would generally approach it. Yes, please, if you guys haven't already, please hit that like button and subscribe and notification bell and all of those lovely things. It's the only way that you're going to know when we're going live, if you are not every day just part of your routine clicking on our video, which I'm happy if there are people here that makes us part of their daily routine. We do appreciate it. We love you guys being here with us. Kavisha saying, I already came out of a short on AUD with a 1-to-1 and I went down. It went more down. I don't know how to run winners. Well, do I have an option for you, my friend? Consider taking partials and letting some of your trades run. So like I did here with my NASDAQ trade, which is probably going to hit stop loss now, which is still fine. When you have these multiple TP points, you lock up profits as you're going up. And then eventually there's going to be one or two of them that is going to give you really good profits if you're afraid to let them run. A 1-to-1 is great because you can lock up all of your profits and then you can move on to the next trade. But let's just see. Yeah, okay. I am out of this trade. This trade hit TP2, did not hit TP3. So this trade is now done. Right. This trade, it is over. Anyway, we're starting to print a little bit more bearish price action in relation to what we had in terms of the bullish price action. So I'm going to start looking at NASDAQ. We didn't even reach the FOMC high. Interesting. We'll see whether or not we're going to start having this now. In which case I would potentially look at trying to sell and then potentially come back down here. Anyway, so the idea of the partial take profits is that you're locking up profits as you go. And yes, it's going to be less than if you were to do, for argument's sake, a straight 1-to-1 or 1-to-2. But what it helps with is that psychological effect of leaving profits on the table. And you're locking up small amounts as you're going. And then you start getting used to allowing some of your trades to reach the next level, because you're looking at it from the sense of, okay, TP1 was hit. Great, I locked up 0.25% as an example. Ooh, TP2 was hit. Great, that's another 0.25%. I'm 0.5% up. If I move now my stop loss to break even in the way that I normally do, now I know, like, even if it were to come down now and hit stop loss like it just did on my trade right now, I'm not losing anything. The profits that I had are locked up. And it's great. This trade is over now. It's good. I didn't lose anything. I locked up a bit of profit. Excellent. Now when I go into another trade, I do the exact same thing. I might be very fortunate that it's going to go TP1, TP2, TP3. Wow, this is good. This is a great trade now. TP4. And I know the moment TP2 gets hit, I'm at break even again. If price comes back down, I'm not losing anything. I've locked up yet again another 0.5%. And now I'm up 1% for the day, as an example. So I would consider looking at that, especially if you're somebody that struggles with letting trades run. You will slowly get used to leaving your trades to do what they need to do. So in my case, this I found is the best way for me to make sure that I let some of my trades go. So it's planned in to the trade. I enter, I make sure TP1, 2, 3, and 4 and my stop loss is where it should be. I make sure that my break even is selected on the trade manager and I let it go. Done. I don't need to do anything else. TP1 will be hit if it does. TP2 will be hit if it does, and so on and so forth, and it will do its thing. I can come back later. I can go and do something else. I don't need to manage my trade. I don't need to come and look at my trade. It can do whatever it wants. When I get back, I'll see what it did. Novel Navigators, hello. Rich, did you trade FOMC? No, I did not. I am a little scaredy cat when it comes to big news events like that, because movements like this happens. And how much was this? From the top of that all the way down here is almost 600 points. That's a bit much for me. I can't participate in that. And it moves too volatile. So I like volatility, but I like this kind of price action a lot more when I compare it to this. There's a lot of people that make a crap ton of money with this. That's not for me. I'm not comfortable with this kind of movement. I'm more of this. So, but I'm pretty sure somebody's gone and taken it. Hi there from the heart of the Austrian Alps. Wow. Void VN form. Welcome to the 5ers live stream from the Austrian Alps. I don't know if you've met Dirk Hartig. He is our German friend. I am obviously Austria and Germany is not the same country, but he's much closer to you than we are. I'm all the way in South Africa, so welcome all the way from Austria. Hit TP on GU, very content. Great. And that's what it should be. If you've taken your profits and you're ready to move on, great. Don't try and force it. Like yesterday. Yesterday I had a 0.5% loss and then a 0.375% winner, which ended up resulting in me being down 0.125% off the day. I was content. I was happy with that. It was fine. Is the web it's web terminal, you got a purchase account to use it. Thanks, Void. Appreciate it. It works similarly to CTrader. You need to choose Trading View as an option when buying an account, and then from there on you can follow the instructions. Thanks, MGN. Appreciate that. Rich, I am in the same NQ trade. I haven't partialed at all, and it looks like it's heading south. Lol, dang it. Yeah. Well, right now it's come to test the 50 EMA. Let's see how the 100 and the 200. There might still be enough in it to push it higher. I mean, if you just look at the EAs, the EMAs, my apologies, it could potentially continue pushing higher from here. We could see, but I like taking partials. However, to me, I'm not the biggest fan of how volumetric these bearish candles were on the 5-minute, considering the kind of reactions that we had yesterday with these like downward pushes. It might still want to try and push lower, but taking a partial where I did, I'm happy. So I can just wait for the next trade. In this case, it may continue pushing lower. We'll see. How do you calculate the TP switch? They are 1-to-1s and then multipliers of that. So TP1, when I have a 4R, TP1 is a 1% block of the stop loss. So in this case, TP1 would effectively be a 1-to-1 R if I had the whole movement, the whole percentage. So 40 points, 40 points. My stop loss is 40 points. My take profit in this case is 40 points as well for TP1. TP2 is 80 points. TP3 is 120 points on NAS, and then TP4 is 160 points. Daniel Mullins saying, have you checked long-term profitability of taking partials against a 2-to-1 simple set and forget? 2-to-1, it's a 33% win rate to break even. If your trade keeps running, just re-enter at a valid signal. Yes, so that's 100% correct. However, I like the idea of taking partials. So the profitability is not that much different. The 2-to-1, if you purely either get a win or a loss for a 2-to-1, 33% yes, break even, you're going to have your expectancy be slightly better on your 2-to-1 because you're taking off more of the risk at 2-to-1. So you're getting a flat 2% win or a 1% loss. Okay, so the difference between that is 1%. So you are on average making 1% per trade. If you are, it depends on your win rate, obviously, but if you just compare those two to each other, where mine is I've got 0.25%, 0.5%, which if you add them together is 0.75%. Then I add another 0.75%, which makes it a 1.5%. And if TP4 gets hit, it is another 1%, equaling 2.5%. So on a full trade, I get 2.5%. But if you average every single one of those and you look at them from an expectancy side, it is slightly lower than a 2-to-1. I just prefer having the partials. I'm more comfortable with it. I like the idea of a trade paying me a little bit and then the next one paying me a little bit. I like that a lot more. So sometimes the expectancy and the way that you reach that expectancy is not the same. So you can have a 1-to-2. The question is, are you always going to run it like that? are you always going to have exactly the same entry point and so on and so forth? I know it's like me nitpicking now, but to me, it's the idea of choose something and stick to it. And if it gives you solace, if it makes you feel less stressed when you're in a trade by trading a certain way, do that. Good morning, Rich. How's your trading week so far? Anything significant? I mean, yesterday was a losing day, but not that much. Today so far, I'm up. And I think Monday was a pretty decent day as well. I think I had one full winner on Monday. I'll have to go and check my stats. I had a good winner. I am up for the week so far. But I don't think I'm up by much. Raphael saying you need to start accepting the profits. I need to start accepting the profits I got and not going mad how much more I could get if I left my TP on its original place. Understand this. It is not about the profits. It's not about the losses. It's about the process leading to the profits and the losses. If you are happy with if you're happy with the process that you took and it was still a loss, then you're doing good. Because then you're not outcome based. How you feel emotionally, mentally is not based on the outcome of a trade. It should be based on the process that led to it. If you put in good effort, if you put in good processes, whatever the result is going to be the result. And you should be happy with that. Be happy that you followed your process rather than it led to a loss. Because the more you lose, the bigger your losses become, dollar-wise and stuff like that, the more anguish you're going to go through. So I try and focus just on the process, not the actual result. Obviously, it's nice having profits because that's why you're here. You're here to try and make money, and you're trying to find the most efficient way to make money. But if you're only focusing on money, you're going to be controlled by it. You're not going to manage yourself. The money is going to manage you, and that's the wrong way of going about it. I do have a nice payout, but could have had more. I guess a TP is better than no TP. Yeah, I mean, you could always have had more, but that's always in hindsight. And that's the thing that I think a lot of people misjudge, is the fact that you're looking at the outcome of this trade as if you would have made a different decision without that information. You didn't make a different decision. You chose what you did in the moment, and you made the right decision in that time given the information that you had at hand. Whereas looking at it after the fact, you're like, oh, I should have. Regret only comes in when you've got the full picture. And unfortunately in trading, this is a game of partial information. You don't have all of the information at hand. It's easy to say, oof, I should have, because you saw the outcome. But not knowing the outcome, you made the right decision. And you should be happy that you made the right decision. And you should stick to the decision that you made. Because at that time, you made the decision that you did based on the information that you had at hand. Simple. Appreciate it. Yeah, agreed. Oh, I don't know. I read this as 100% mate, like you agreed to him. I read the appreciated and I read the 1000% mate, and it's like I appreciate. Yeah, agreed. Sorry. Void saying I have just bought a CFD 3-step program on the 5ers, which is our bootcamp. If you are a beginner trader or you're somebody that is a little bit more risk averse, the bootcamp is really good. Have only traded Bitcoin before with a simplified read the market strategy to some success. Now I wonder how much adaptation or learning curve I should expect for trading gold CFDs. All right, so trading gold is different than trading Bitcoin. They don't move off of the same information. They don't move off of the same volatility. They have their own learning curves that you need to go through. However, they're not that dissimilar. They also tend to have quite a bit of volatility. They can have running days, strong pushes. So what I would say is go and look at how they're similar, not in how they're different. No, opposite. Don't go and look at how they're similar, look at how they're different. And then try and build your strategy around that. It shouldn't take you too long. Gold currently still broke through and continued lower. So this is exactly, where is my box? This is exactly what I would have been looking for a potential entry. We're breaking lower with conviction. We're making a base. We have a drop on the close of that candle right there. I would have wanted to get in if I were trading gold. I would have had my stop loss at an area which would have been back tested previously, and I would have had my take profit at an area that I would have back tested previously. So I would have wanted to get either a 1 to 2 or a 1 to 1 or something like that. But this is where I would have wanted to get in. Nice strong drop, an attempt to push price up, fail, and then a continuation of pushing price lower. On the close of that candle, get in, and then I would try and look for a potential exit point. Raphael saying, it is really annoying to see price hit a level you originally had placed and moved it to hit your TP quicker, but then it's on for your first TP idea. Out of should have. Real funded after the challenge. If I can pass boot camp, should I get a bigger account instead of 20K? I would say this. That account is going to provide you with actual money. All right? So it's real money in your pocket. If you are comfortable with the 20K, build this one up. If you bought yourself a 20K bootcamp, build it up. See to where you can get it. It's a low barrier of entry, so it's a low cost for entry for you to get into the challenge. If you start making payouts and you start getting pushed up, that's great. No sound. Bro, life got blacked out. All right, let me have a look at that quickly. Let me have a look. Bear with us. I think maybe my internet may have dropped a little bit there for a second. Okay, no, it seems like we're good. Apologies. Apologies to everybody. It seems we're good now. Yeah, no idea what happened there. We're having a communication breakdown, mate. Yeah, my apologies for that. Now working. Cool. Yeah, sorry about that. It's probably because I see everybody that was in. It could be our streaming platform because Remy and LJ were here and both of them got kicked out as well. So I think it was our stream. I think it's back to normal though. Void saying, my doubt about the whole thing is I am used to low win rates and very high average return in profits expectancy in Bitcoin. How does it translate into trading with gold? So the thing is, gold is done with leverage. Same with Bitcoin as well. So gold is a leveraged asset if you're trading CFDs. And I'm not sure what Bitcoin's leverage is on the CFDs because I don't trade Bitcoin at all. But gold is 1 to 100 with, for argument's sake, a high stakes account. With a bootcamp account, it's 1 to 30. If you can and you're comfortable with it, just try it out and see how it works for you on the bootcamp, the 20K account itself, if that's the one that you purchased. And then see how it works out for you. You can still look at your percentages, try and risk 1%, 0.5%, that kind of like stuff, and then test it out for yourself. Because remember, with the bootcamp one, you have slightly less drawdown available to you. You need to make 5%, and you have 6% in drawdown. No, sorry, it's the other way around. You have 5% in drawdown. You need to make 6% per stage. So you need to make a total of 18% to pass, and you've got 15% in total across each one of the stages. So stage 1, you need to make 6%, and you've only got 5% drawdown available to you. Play around with it. Test it. Find out which approach is going to work best for you. Yeah, so in this case, you've got 30. But let's say it's a 20K account. You will start off at 5,000, and then you would have a 30 times leverage on that, which gives you $150,000 of buying power for a 5K account, which is, I think, is enough. Which means that if you were full margining, you can go up to 1.5 lot sizes on a regular USD GBP, on GU as an example. But go and test it. Get yourself the earnforex.com position size calculator, and then you use this position size calculator to see, like, where's gold? AG. AU, sorry, that's silver. So here we have gold. This is a 20K account. If I were to take one, where is my, it's all the way down there. Let's say I were to take a buy right now with my stop loss being just below that last swing point. That gives me, in this case, it says 1,300 points, but it's just $13. So it's about 13 points. I can trade 0.15 at 1%. If I were to go 10%, I can't trade that. I don't have enough margin available to me. So if I look at margin, I don't have nearly enough for that, unfortunately. So my trade would really struggle there. Where can't. What is my theoretical maximum with this? Let's say 1.1. That's my theoretical maximum at 10 lots. Or 10%. Obviously, I won't be trading at 10%. 1%, you can still have that. And I mean, a movement of 0.01 is $1 per pip movement. Per pip. So this movement here would net $400. So it just depends. It just depends on your risk appetite. Let's put it like that. It seems as though LJ is struggling with his mic today. Is that trade shell, Richard? Does it come with the MT5 terminal? No, it doesn't come with the MT5 terminal. What you need to do is you go to earnforex.com. So right here. So maybe I can give you... Remy, do you still have the link for it in the background? Can you just paste it there? Because if not, then I can quickly get it and then just paste it. Wanted to click on this one. Which I thought leverage on gold CFDs on the high stakes is 1 to 25. At least that's what the website says. I haven't checked the website in a while. Has it changed? Let's go check the 5ers website and see what it is showing for the gold. Okay, yeah, it's 1 to 25. It's slightly less than the 1 to 30. Yeah, there we go. So you can go to www.earnforex.com, MetaTrader Expert Advisor Position Sizer. You can download it for free. It works for MetaTrader 4 and 5. And then you just follow the steps. But also make sure that you read through all of the information there so that you understand how to use it. Richard, I was able to make 1.5K today with a 50K funded. Congratulations to you, Raphael. Congratulations. That is very good. That is nice. That is 2.1% for today. That's pretty good. It's good going. Sorry about this one. So excited me. I am on a high stakes account and I'm currently on good profit on the first valuation stage. I hope when I'm done, my account will be funded. So high stakes is a 2-stage evaluation. So first stage, obviously, once you've passed that, that would be really good. The second stage, once you've passed the second stage, you will get a funded account. So it's a high stakes two-stage passing one. Appreciate it. Thanks. Yeah, no problem, mate. My style, is it necessary to always check the US volatility index before trading pairs like EU and GU? I mean, you don't have to, but it is a good practice to kind of see generally. And so this is DXY. So you have VIX, which is the volatility index for this one. You'll see right now that it seems like we're a bit flat. But if you go and have a look at this period of time every day, it's always going to look a little bit flat. And you only start getting real, let's say, movements during the New York session. That whole segment there is flat, you start getting a little bit of movement there. That whole segment is flat, you start getting a little bit of movement. So when you're looking at the volatility index, it can. I don't. I just don't at all. I don't need it. I trade NASDAQ, but I don't use the volatility index at all. But you can find cross-correlation between EU and GU when you look at the volatility index. You definitely can. Buy now, question mark, on what? It's a pleasure. In the boot camp, I was risking 1% on challenges. I had this losing streak on the challenges and still survived it somehow, but on the funded, maybe 0.5% is better. Okay, I'm going to tell you this. When you are comfortable with something, continue with what you're comfortable with. However, if you feel like 1% was a bit risky, go down to 0.5% and see how you feel there with the funded account. Personally, myself, when I got into funded phases, I always reduced my risk. I took it, if it was 1%, I would go to 0.5%, or I go to 0.75%. The idea is you've worked hard to get to that funded phase. Now you want to ensure that you get a payout. So I would reduce my risk and slowly build my way up to getting a payout. So for me, that worked. It could work for you if you tried that. If it doesn't work for you and you have a different approach, try that as well. At the end of the day, trading is a personal adventure between yourself and yourself. It's a battle between you and you. So if you're going to do that, make sure that you are comfortable with it. I just have to hear your thoughts on this. So I personally would go down to 0.5 because to me it's a marathon, not a sprint. So I don't care how long it takes me to get funded, but I do care how long I can keep that account once I'm funded. That I care about. So if I get funded in a week and it takes me 3 months to get a payout, I'd be happy with that. Obviously, circumstances are different between different people, but in my case, I'm happy with that. Do we have any offer if I lose an account, I will get one more chance to clear it? I think that is until next week, Thursday. If you get the second chance offer, I think until the 25th. So if you buy a 2.5K, a 5K, or a 10K high stakes account, if you buy as you can see on the top of the screen, as a first-time user. So as a first-time user of the 5ers, you will get that. 5K and 25K trade the pool account and a 25K futures account, the day trading one. If you're a first-time user of the 5ers, you've never purchased an account before, if you take any one of those accounts and you failed the first step before the 25th, you will get a refund. I always make buffer on funded to increase my position. That's also a good process as well. Gives you a little bit. Does depend if you have a daily end of day drawdown. Oh, LJ is struggling. He's struggling to stay in the account or stay in the stream. Yeah, mate, reducing risk on funded is key. I worked hard in getting an account and losing it before payout because of over-risking. Yes. So nothing burns that. Is burn the right way to explain it? Nothing hurts more than knowing that you worked so hard to get to a funded phase and then your impatience or your over-risking takes over and you lose an account because you could have reduced your risk, but you chose not to. It's about adaptability, I think, as well. I think LJ is really struggling. You're having the same issue as yesterday. Let me just answer LJ. Nothing hurts more. Yeah, that's kind of like I said, my brain is a little wonky today. It's really struggling. We're having some issues with our streaming platform. Well, some people are struggling to get in. Yeah, my brain is a little weird today. I'm tired, feeling under the weather and whatnot. So the words that I'm trying to grab at are there, but it's just like, is that the word I'm looking for? I don't know. All right, let's look at NASDAQ. What is NASDAQ doing now? Okay, so it just came and wicked me out, and it seems as though it is struggling now to pick a side. We're getting a little bit of some movement. We basically respected. Don't really have an area to respect. Maybe this area of consolidation here, but not all that much. It's more that we respected the 100 and the 50 EMA, let's rather say. So we're getting a bit of expansion here. Price is moving away from the 50. It was moving away from the 100. It came back down to pretty much test the 100 and then looks like it wants to. If we can get a nice push now and potentially sweep that high there and then pull back and then continue up, then we can definitely see this high point of London being taken and then potentially the previous day high as well being tested. So right now we have a lower low in relation to this low that we had here. We had a high and a lower high. So far, it's printing yet again another lower high. So we're looking at a bit of a downward channel right now. Hopefully, this is a short-lived one for Raphael and then potentially continue higher, break and continue higher of this little downward channel that we've had. Another thing that I also like using is the MACD. The MACD, once again, is just basically two EMAs, two moving averages that are compared to each other. So it's a 12 and a 26. You can put a 12 and a 26 on here and you can actually see how it operates. It's exactly that. It's just two moving averages that are compared to each other. But it's basically how close or how far these two moving averages are from each other is going to depend on this movements that you see here. And then the crosses like there. In this case, the 12 would be lower than the 26. And then that's where you have the cross. You see this. And then how close to the zero line you are is basically how close those two moving averages are to each other. Right now, it's flattening out ever so slightly, but it makes sense. We've come back down to the 50 EMA. We're also struggling right now. It's a little bit flat as we're talking about it. If we go and look at the DXY still pushing up, but it is a little bit slower now. Then no more conviction, less conviction, let's say, right now. So we'll wait and see. We'll see what Nas is going to do. Gold, bit of a rejection after sweeping this low over here. Bit of a pullback. What is the 15-minute showing? Okay, how far are we into the hourly? We've got 28 minutes. I mean, this hourly candle here, when compared to the previous one, we might be seeing a potential pullback, and then we'll see whether or not it's going to be a continuation lower. Okay, the hell? We can potentially see on the hourly. Oh, why are you so slow now? What happened? Are you broken? That is weird. There we go. Go back to gold. Okay, there we go. All right, so as you can see on the hourly, this hourly candle here is starting to present quite a bit of resistance. So this area is struggling to push lower. So we might see a potential attempt to push back up and then continue lower. We might see that. Or alternatively, what we might see is that this might be a complete turnaround. We start pushing up and then do not push lower and then eventually start creating a higher push on gold. What is GU and EU doing? GU and EU still very much bearish, continuing on the hourly. Still looking very good for potential continuations lower. It seems as though I'm going to be solo the whole day because nobody can get into the streaming platform. Dude, I don't know what needs to happen there. How to balance family and trading together. My lovely daughter don't let me sleep proper or work, so give me your sense on that. All right, so I don't have children, so I can't really say on the work-life balance when having children because it's a different... It's going to be different for every person. Let's put it like this. Some people want to be a lot more hands-on with their children. Some people want to have their children to be a little bit more independent. So the level of interaction with children. But if you're looking at a work/life balance, I would say this. Choose a segment of the day that you have set out entirely just for family time. No other distractions, no phone, no work, no PC, nothing. Choose a time of day that is that specific time for you and your family, all right? Sleep is a little bit different because sleep schedules gets disrupted often, all right? And that can then disrupt whatever plans you had for the rest of the day. So in your case, you have a daughter and you would like to spend time with her. You probably also have a wife, and in that case, set time aside to spend with them where you have no other distractions. Make it clear that that time is theirs. Your trading time, the same thing. Give it the same kind of commitment. From this time to this time, I am purely focusing on trading, or I'm purely focusing on learning. Try and segment it. Try to get the input from your family as well. Hear from them as well. Do they need more of your attention? Is there stuff that you need to do more? Try not to get too enveloped with one or the other. I don't know if what I'm saying now is like really advice, but I would just say that keep yourself open to all of it. If your kid is there and you're not currently in a trade or you're not currently waiting for a trade, spend time with your kid. Maybe something like that. Or find a way to have slots in the day for specific things. I am still long on NQ. Yeah, I mean, we'll see. It has slowed down quite a bit now. Still potentially bullish if you look at the 15-minute time frame because we're still making these higher highs and these higher lows. We'll see. We'll see what it's going to provide us for the rest of the day. Just refresh trading view. Yeah, sometimes it just doesn't want to. Sup Rich, hope you're well. Feels like I've not watched the stream in a while. Work. Yeah, Wesley. This thankfully is my work. So in this case, I get to be here every day. But in your case, Wesley, I hope you're doing well, mate. Trade Viz, what setups are you looking for on NQ? So I already had a buy, which hit my second TP point, but then eventually knocked me out. Now I am looking for a potential same convictive move. I want to see price definitely start breaking these highs, pull back a little bit, and then potentially go higher for me to get in on an entry point, potentially pushing higher all the way. Oh, okay. So those lines disappeared. All the way potentially to yesterday's high. Each one of these swing points to be taken, that would be lovely. As of right now, it does look as though we are potentially going to continue pushing higher. We're starting to get a little bit more bullish candles. The only question is this going to be a bullish candle and then we're going to pull back all the way again and then close within this segment again? So you can consider this area right here now as a little bit of consolidation. So we'll see whether or not we're going to continue pushing up like we did over here. We had a slight little bit of consolidation there as well. Eventually got the break. So we'll see. We'll see how this goes. It does look good for a potential continuation higher. So first target point basically here, which was the high point of the FOMC swing. And then beyond that, it's going to be maybe the New York session high. And then after that, it will be the daily high of yesterday. It's looking good so far. Lone Wolf today. Yeah. Will is spending some time with family. LJ is struggling to his backside of the street. But this is weird. What camera are you using, mate? Oh, no, he's out again. He is struggling today to get in. So yeah, a little bit of a lone wolf today. Bro, have any entry this time? As of right now, I don't really have any entries. Let's have a look at gold. Gold did push lower, but it's flattening out ever so slightly. So let's see this area over here, how price is going to react there. I had a look on GU and EU. GU and EU was pushing a lot lower as well, but it's doing the same thing as what gold is doing right now, rejecting a little bit. If we go over to the hourly, we can see we have 20 minutes left, and it looks like it is rejecting ever so slightly. So we can have a potential push up higher from where we are right now with this hourly candle, or a bit of a retracement. We can see potentially, if we had this whole hourly move all the way down to here, what can we have if we come back down to this golden zone on the fib? What would it look like on the 15? So somewhere over there, maybe potentially again, let's say the low of Tokyo session. We'll see if that is a potential area. What does it look like on the 5? Yeah, maybe this whole segment, because we had a bit of consolidation there. So I would say if we're going to have a retracement, we can probably retrace all the way to over here. If you just look at the hourly, this is very slowed. What did we have here? When was this? Oh, that was a while ago. Oh, wow. We did react off of that order block. Oh, wait, what does... This could be exactly in this zone here. Will you look at that? Anyway, GU and EU is looking like on the hourly as if it is reaching a little bit of a decision area. It's slowing down. The downward momentum is not as strong over the last hour. Last 30 minutes, we had a bit of a bearish candle. 15 minutes, it's slowing significantly. And on the 5 minutes, you can see that we've effectively flattened out. So it does look as though we have a potential pullback scenario here, where price is going to pull back a little bit. And then we'll see whether or not we're going to have a continuation to push price lower. So that's it for me so far. NASDAQ is still looking good for continuations higher. JPY... Oh, wow. 11. What news was this? Was there Did we have unexpected news? Two hours that was a Swiss bank. Nope. Okay, so not entirely sure what caused this movement here on JPY. Can't really see what. Anyway, let's have a look here. Go see CMBM trade strategy. Thank me later. Claire, it seems as though you're trying to get people to go to maybe a website that you are a part of. I'm going to advise you strongly to A, stop spamming, and B, try not to convince people to go and check something. It's a bad look, I would say. I like this. No, thank you. Looks really bad. No, thank you. I think there's a problem with your ISP. Sometimes voice distorts. Yeah, it can happen. Definitely one of those things. I do apologize if my voice either breaks or it distorts or my stuff freezes a little bit. That's sometimes the way that it goes. I do apologize for it. Look at the 30-minute. There is a clean base on EU and GU. All right. 30-minute. Going back. I mean, we just swept the low here. Is this what you're referring to as a clean base for EU and GU? Or are you referring to my way of looking at bases, which is this area over here would be considered a nice base, potentially. So an area to be tested, which is then basically the low of Tokyo. So a potential test area over there. And GU, same here. So the low of Tokyo session. So a potential, that looks good, yeah. What about a GU? Like we said, GU, here we are on it right now. We've slowed on our way all the way down here. Very bearish. We broke through yesterday's lows. Now we need to see whether or not we're going to have a continuation pushing lower, or we're going to have a bit of a retracement and then a continuation lower, or are we going to see a retracement which turns into bullish price action trying to sweep this morning's highs. Giveaway, not today. We don't have any giveaways today. We do, however, have a giveaway on TSG, which is Trade Set Go, this afternoon at 2 GMT. Once this stream closes, you will be automatically directed to the Trade Set Go one, where you have the opportunity to win one of 3 5K high stakes accounts. When you take entry on gold, I'm not taking a gold entry today. Gold itself, like I said, is looking like it wants to potentially retrace. We'll see if there is another confirmation of entry before I get in. It has formed right now. Okay, so you're looking at this area down here. So this on a 30-minute. Yeah. So for me to see whether or not it is going to, yeah, my way. Yes. Your way. So for me, it is that base and then a potential continuation. Only once it creates a continuation would that be considered a base. The base is basically that point where one tries and then fails, and you can only get that failure. So if this is the drop, these candles here, that's the base only after this drop is confirmed. Otherwise, this is just a retracement, because then it's a pullback. So yeah, we can see here, it is right at this low. So it means that this area over here is an area of interest right now. So we're trying to see what we want to do here. I can hear... Nope. LJ's in, then he's out. Then he's in, then he's out. I'm facing problems, guys. Some people watching from outside and say I'm I'm a lazy guys or unresponsibility guys because I'm a full-time in home and they're going to work and they don't understand what we do. That is very interesting because this is not just exclusively to do with trading. It's pretty much to do with you can take this concept and you can go to any other work-related thing and you can find the same thing. People view certain work aspects from their point of view. So they will see it as if you're not working 9 to 5, you're lazy. If you're not working the night shift, you're lazy. If you're not doing a specific thing, you're lazy. What I would say is cut that out completely. So if this is something that you're serious about and you want to make the most of this, you don't need that negative reinforcement from outside. You need positive reinforcement. So you need people around you that supports what you're trying to do versus what these negative outside people are saying. Because the negative outside comments are going to make you, like right now, feel like you are lazy or you don't have responsibilities. Remember, everybody's journey is different. And the way that you're going to approach something is not necessarily going to be the same as someone else. And it doesn't mean that either one of you is right or wrong. It's just that it's different. So in this case, put in your hard effort, put in your time, and eventually you will prove them wrong. But that's going to be reliant on you, whether or not you're willing to put in the time and the effort to make that a reality. What do you think about yesterday's FOMC? I actually did not watch it at all. I switched everything off. I had dinner with my wife and then I played some games. So I was actually hoping for LJ to come in today and to get his point of view of it, but he's really struggling getting into our software. Doing the freedom we have, that is where the problem is. So the thing is, you are just as caught up with anybody else's 9 to 5. So if you imagine there's a guy that wakes up in the morning, he has a retail job, he goes to his shop to open up, to sell his products in his store. He's going to have times where there's going to be a rush hour. He's going to have times when it's quiet. It's the same for you. You wake up in the morning, just because you're not traveling to go somewhere and you're at home, doesn't mean you're not working. You're sitting there in front of your screen. You're putting in the time. You are going to have quiet times. You're going to have segments during the day where it's rushed for you, where all of a sudden you're trying to do a lot of stuff. Just because you're not traveling to go somewhere doesn't mean you're not working. Am I right to assume that you use a version of the RTM for trading? I heard rally and drop and so. So for me, I'm not entirely sure if there's like different variations of it. I just refer to it as rally base and rallies, or rally based drops, or drop based drops, or drop based rallies. I like referring to it in that way. So I'll go and have a look up about RTM a little bit and see if there's any similarities to the way that I view the market, because I'm not 100% sure if it's a different variation of it or a different version. I need to go and compare it and see, oh, okay, no, it is actually the same way that I trade. As your trades, ignore the noise, man. Ignore them and don't care what they think. You are working on yourself, improving yourself. Never care what outsiders think. Yes, to a degree. Sometimes that outside noise comes from a place of care. So the people are looking at you and they assume that you're not doing well because maybe you were a very outgoing person and now you're confining yourself to your house all that often. They might view it like that. But in that sense, I think maybe it's trying to understand where this is coming from. If this is coming from an area where it's just plainly critique and it's the comparison, where they're comparing themselves to you and you're not aligning with the way that they want you to be, then maybe you can consider saying, you know what, I understand where you're coming from, but what you're doing now is not good for me either. So in that case, then cut them off. So there's always, it's not black and white. Let's put it like this. There's colors in between as well. And you need to kind of like look at where it's coming from and do the comparison. Kavish saying, how to win a giveaway. I know TSG, but I do not know. I know TSG, but I did not know they come live as well. Yes. So TSG is our... So the 5ers is an umbrella company, basically. We have a bunch of other companies in underneath us as well. So you have the 5ers, which then has a partnership with TradeSetGo, which is a sister company as well. We have TSG, which is TradeSetGo, which is our brokerage side. So Trade the Pool is the stocks side. You have the 5ers futures, which is the future side. And then now you have TSG, which is our brokerage side. So it's all part of the same thing. And we have a live stream for each one of them as well. So like I said, once this stream is over, you are more than welcome to stick around. It's going to auto-direct you to TradeSetGo, and then you can go and participate in the TradeSetGo's giveaway that they have. I just want to see here. I see LJ. Oh, LJ gave me a video. I can't watch it right now, mate. Where they have a webinar today on TradeSetGo, and it's about surviving drawdowns. So if you're struggling with drawdown, go and watch it. It's really worth it. Giannis is really, really knowledgeable, and I think you can take the information that he has there and you can learn quite a bit from it. No, earlier you marked was the one that I was talking about, small body and large wicks. Yes, yeah. Ty Keith, good morning to you. Got in a bit late. Yeah, don't worry, mate. We're all here. We're all here. Where were we? Do you like RPGs? I love RPGs. I have been playing Gothic 1 Remake and a lot, and it's awesome. Great game if you liked Skyrim or Witcher. Skyrim is one of my favorite games of all time. I'm also a very big fan of Elden Ring, Baldur's Gate. I loved all of the Elder Scrolls games. I genuinely love role-playing games. It's my favorite genre. So I played the old Gothic. I did not play the remake. Because I don't get the time. I really just don't get the time to go and sit down and like really envelop myself in something. And which is what I like doing when I play a role-playing game is that I like to immerse myself in it. So I don't like it if I get distracted by other outside of that world like stuff, like real world things. I want to go and sit down, make a day of it. I just don't get the time to do it. So here we go. Here's the YouTube channel for the TradeSetGo broker. So if you guys want to, go and do that. Go and support Giannis. Go and subscribe and like and watch his videos. It's really great content. All right, guys, let me know what you guys are looking at. Oh, would you look at that on the half hour? 50. Let's go to the 15-minute. We are strongly pushing up now. Once again, it is a shame. It is a shame that my TP2 got hit and then my stop loss got hit. It is a shame. But that is what it is. It is one of those things. It's looking good. It is looking good for a continuation. Let's look at this. It's expanding. The lower, yep. Cloud is expanding. It looks good. Gold. Very slowed. Not such a momentous attempt to push up. 30,500 on NQ. So, come out. 35,500. 3,500 is all the way up over here. I mean, I can see that. It's this segment right here, this last candle. That actually does look pretty good. However, we have quite a bit of price action to break through before we get to that point. But I do like that area potential. Yeah, on futures, I think the futures one is very close right now. Currently, the futures is 31.81 and we're at 31.73. So the futures is very close to the CFD one. So what is this? 500. Yeah, it's the same area. It looks good. 500. Yeah, it's the same area. I like it. It's good. But like I said, we have a lot of price action to have to, let's say, work our way through before we can get to that. Rich, do you re-enter on these setups even if the SL was hit? So if I got knocked out and the price action still indicates that it looks good to continue higher, I'd be willing to consider getting in again. But then in that case, obviously it needs to build up the right way. So right now where it is now, I can't get in just yet because we are very close to what was the high of the day so far. So this whole segment here, we might need to see how it's going to react now. It could reject at the same area and then eventually start pushing lower. And then we ended up having this M structure, which is a double top. So I, in this case, would want to see it push up, then retest and then continue. Or from here, push down lower, but do not sweep this low. And then start printing another attempt to try and push up. And then I would potentially get in there. But for now, I would like to see how it reacts here. I'm, let's say 80-20. I'm 80% certain that we're probably not going to sweep lower than the lows of the London session right now. I'm more inclined to see us potentially look at this area here and push up higher. I see the price taking the previous daily high at New York Open. Yeah, so this is the previous daily New York Open, and then there's the daily high. So daily high, definitely. I feel like we're going to try and test that. New York Open, yeah, maybe. Let's see if this guy can stay in, because then I have company. It seems like he's staying in. All right, I've got company. Ah, look at those guns. Please put them away. You're going to make me feel self-conscious. All right, so we've got Richard Wells in the back. Give him an opportunity to set everything up, and then he can join me, and then I am finally no longer flying solo. Kavish asking, which pair or indices or anything have cleaner price action? Gold is a monster for me. It depends on what you want. It really does. If you are more of a trend following, look for assets like, for argument's sake, the indices. That tends to trend a little bit better. If you are more of a... Are you staying in? No. Just when LJ thinks things are going right, it drops for him again. If you are more of a mean reversion kind of trader, look for currencies. They tend to revert more towards the mean and then move away from it again. Gold, to me, has not been the most favorable unless you get like real strong movements in a specific area and then break out of it. So consolidative break, retest, that kind of like stuff. LJ, mate, what's going on? I can hear you. Shall we? I'm going to bring it up on screen. Let's see if it works.
All right, yeah.
No. Damn it. It's not working. Ay, 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 ay. He's really struggling. Thanks, Azrael. I appreciate you, my friend. Usama is saying, I am aiming for FOMC high or the previous day high, though. I agreed to that. Yo, my namesake partner in crime. How are you, Rich?
What's up? I hear we've got some technical difficulties this morning, so I figured I'll hop on and keep you company. What's going on?
Oh, dude, quiet day so far. It was solo Rich today. Now it's duo Rich for a little while longer. How have you been? How have you been, Rich? Tell me.
I've been good. We've launched the Trader's Journey section in the Discord, and we're still waiting for your humble self to come and join us in that space. We've got what do we got? We've got dozens of traders now that have linked arms, and they're all sharing their journeys in there. We've had traders getting funded for the first time. We've got some really interesting reviews and homework assignments coming in as well. So it's a space that we created as a part of the performance coaching department. And it also pushes myself as a trader. So I absolutely love it. I always say that old phrase, beauty is in the eye of the beholder. I always say that value is in the eye of the beholder. So you can have two people look at the same thing. One of them will go, nah, not for me. The other person will really cut their teeth on it, and it can be the making of them. It can help them hit that next level. So we've created a space. It's not going to be for everyone, but it's going to be a space that anyone can use if they're a 5ers trader. It's totally free. You come into the Discord, you go down on the left, and you see Trader's Journey. Click on that, you create your own channel, and it's a space that is uniquely yours to use very, very intentionally. We spoke to some of the 5ers team, and they're going to be opening their own channels, and some of them have got some interesting ideas as to how they would like to use that space to help them navigate maybe new obstacles in their trading, maybe a new asset or two that they want to forward test or get used to as well. So for myself, it's my space to, because I got my own space in there as well, so it's my space to make sure I carry out a thorough weekly review, and I seriously track the difference between what my strategy produces and the result that I'm actually getting. I identify why, then I go and do the work, and then just post the results, and not just the results, but the feedback in there as well about, like, for an example, let's say we had 3 trades set up this week. 2 of them we didn't take. And we didn't take them, Richard, because of that dreaded fear. You know, you see that trade and you go, I don't know, I've just taken a loss. I don't want to take this trade again. And you don't take it. That trade's a winner. And that creates a difference between, well, the strategy said you should have got 1 to 1 or 1 to 2, whatever your TP target, but your actual result was a flat, big, fat 0. Nothing changed because nothing changed. So it's about identifying, well, why didn't you connect with that trade the way that your strategy said you should? Why is there a lack of confidence? Why is there pain avoidance? What's the work that's going to help you move through that? So for myself, I've identified a list as long as my arm, and I've got really long arms. And it is a 4-step process that's going to walk me through the mental hurdles that I feel creates a little bit of a speed hump for me that's unnecessary. So I'm going to be working through them and then posting them one at a time once I've done them. And it's a really cool environment because I get to see the work other traders are doing, and some of it resonates with what I'm doing, and I'm like, oh, that's a really cool exercise, or that's a cool way of documenting stuff. And you can take little tips and tricks from other traders as well. So it's not a flashy space where you go, look at me, I made 20,000. It's a space where you see behind the curtains, and obviously you can share as much or as little as you like, but it's ideally not a space that we just rock up and go, hey, got funded, look at me, I've made massive payouts. It's like, well, what helped you get funded, and was there any hurdles along the way that you had to navigate? And then we all get to use that space and learn together. So that's what we created and launched a little over 2 weeks ago, and it's been it's been really in flavour with the 5ers traders as well. And my heart is full because I get to help other traders become the best versions of themselves, which is pretty much all I want to do within my role. So just make the most badass traders we can, badass in a good way. So yeah, other than that, outside of that, market's being very generous this week. Took me on a big old drawdown, which I really feel is an unnecessary thing for the market to do to me personally. But it's like,
how dare they?
Yeah, it's like, no, Rich, you're going to get the same treatment as anyone else. So it took me on a big old drawdown, and over this week has pretty much said, all right, we'll release the pearl. We'll give you that profit back. So yeah, it's been pretty cool, and it's been very confidence inspiring because what I'm trading is a new to me system that's a slightly different way of reading price that we kind of chatted through and spoke about, kind of different ways of following markets. You were talking about, yeah, yourself. You were talking about if you want sort of like maybe a trend following system, maybe look at like an indices. If you want a reversal system, maybe there'll be a different asset. Not all markets are made equal. I mean, they move, don't get me wrong, but from what I've studied, they move very differently and they have different drivers behind them. So I can take one framework that I know works in the Forex market, but when it comes to applying that into, say, gold or the indices market, maybe DAX or NASDAQ, I get absolutely squashed. And it can be a hurdle, even for a trader of several years, to have a system works, then bring it to a new asset, and then just feel like you have no edge can really play with your mind as well. And you go through these stages of like, diversifying and trying to build a second edge or a third edge. You almost fall back to that state of feeling like you're unprofitable again because the stuff you test and refine just doesn't work. And it's like, I have no edge, but you do. You have another edge on another asset. So that's my mission this year. I was like, what's better than one edge? 4 edges. Let's build out 4. So that's my one every quarter this year. That's
One
what I'm
every
working.
quarter.
Yeah,
I
I'm kind of behind
I
schedule.
like that. I like that. For anybody who's not sure what we're referring to, Rich and I had a little call last week, Friday, and we were just discussing just random stuff around the market and other things in general. And one of the things that popped up was the idea of, I would love to trade DAX on the futures platform, but it ain't there. So I need to find something else that I can use on the DAX. And I was like, well, why don't you just try InQ? I mean, you can try that. And he was like, yeah, but I don't know how it moves. And I was like,
Yeah.
well, try this. Have a look at it like this. And he was like, that is very interesting. Why would you do it like that? And then we had this long discussion about that. And I think it's nice to have people that trade different assets and view it completely differently, so that when you do have two people that come together, they can have a discussion about it. Not to say that the one person is the authority on it, but that maybe the one person has slightly more insights than the other one, and they can use that information off of it, to play off of each other. Like, I don't trade DAX, but I can at any point in time go to Rich and I can say, look, Rich, I'm looking at DAX, but I'm seeing this. Did you ever come across this kind of like behavior? And you'd be like, yeah, no, I've got X amount of data across this amount of time. So I think it's great, especially since you were talking about the trader's journey, where people can go and see that information and they can see where people's thought patterns kind of align and where they deviate from each other. So you can go onto the Discord, you can go and join, write down your own process, and then there's going to be somebody that's going to see that and think, I never thought of it like this. What if? Or someone else can be like, oh, wow, here's another person that thinks exactly the same way that I do. Let's reach out. Let's be friends. That kind of like thing. So it's a great opportunity, I think, for people of different opinions and also people of same mindset to get together and kind of learn and riff off of each other. I think that's great.
Dude, whenever someone says, let's be friends, I always think of In-Betweeners. The child in me just always plays that stupid voice in my head of, oh, friends. But your ideas bucket will never be empty. And this is also, it's a good thing, but it's also something that has to be managed responsibly. So as traders, we are ultimately in control of how we try and interact with the market. Now, if you try and practice 10 kicks at the same time without really having one down, you can just get massively confused and you end up going around in informational overload circles that don't really bring you closer to your goal. So for me, I was like, well, what's my goal as a trader? My goal is super simple. I want to make 5R a month. That's it. So if I risk $1,000, I want to make 5,000. If I risk $500, I want to make 2,500. That's my goal as a trader. Now, I'm like, what's the most reliable path that I know of with my experience and my lens that's going to be very different to anyone else in here because I've studied different things. My brain has just seen different patterns, right? Been exposed to different life experiences. But my mind says, okay, what's the most reliable way that I can get 5R a month? Now, for me, that's low TP targets and a higher win rate. Now, for other traders, it'd be like, no, I'm just going to go for 1 to 5 and try and hit one winning trade in a month. Or now my brain just doesn't like the lumpy journey that a high risk to reward, low win rate strategy produces. So for me, I'm just going for 1 to 1. And what I want is something that's around about a 58 to 60% win rate, or maybe higher, with a little bit of quantity. Now, if I can get enough opportunities, that can produce my 5R a month. Now, it doesn't produce it every month. Dude, in my back test, I had a month that stacked 30R at 1 to 1 in a month. And I'm like, okay, I have found the edge. And then it's like other months where it's like, no profit this month. So what I'm looking for is an average of 5R a month. Now, the edge I trade has the ability to trade higher than 5R a month, which is great because it gives me a little bit of runoff. So if it does 7R a month, well, I can make a little bit of mistakes. Like for an example today, trade setup, I didn't even see it. I was just so focused on a little nuance study that I'm doing within the edge. I didn't even see the valid trade. And it was right in front of my eyes, and it printed and it pushed a TP before my brain went, hold on a minute. And so it's about bridging these gaps. Well, why didn't I see this trade? Because right now the strategy produced 1R and my account went 0. It didn't move. So it's about identifying, well, why? And it was because I was looking at something else. So the premise, yeah, and this is where, for me as a trader, all I want is a simple path to 5R a month. That's it, just 5R a month. Then what I'm going to do is I'm going to align that within System 1. System 1 is all about how you choose to align your edge. So the edge for me is the tool. System 1 is how you choose to use that tool. System 2 is what I do on the back end, which is what I do with payouts and scale and stuff like that, which when you have this stuff all dialed in, it takes the pressure off. My strategy must perform. Like, I've got to hit this 5R every single month. So it's been pretty cool to be working through that stuff and chipping away at it. I mean, it feels like a mountain of tasks. I'm trying to do one edge every 3 months this year, and dude, 5.5 months later, I'm still not quite finished on the first. I'm very close. So I've got like a library full of other ideas that I'd love to start experimenting and exploring into, and trading the NASDAQ is definitely going to be one of those libraries. But trading gold is going to be another one as well. Caught a nice sneaky little trade on the futures account this morning on gold, and it was cool. So yeah, just looking to build on those skill sets and just figure out what's not working. Let's get it away from me. What's noise to me, and what's compounding that journey and bringing me closer to my goals. Trading can be incredibly simple. Most of the time, we confuse it. Most of the time.
I have a question for you, and it's how can I put this? Okay, I'm going to state it like this, and this is probably going to lead you in this direction in any way. It's not a critique. The question is not a critique. It is a genuine want to understand your viewpoint on it. At what point do you, Rich, decide that, okay, I've done enough backtesting on a strategy, and I'm just going to implement?
So for me, it's when the confidence is there to want to backtest because there's no to want to forward test because there's no grey areas within an edge. So traders can get stuck in a backtesting loop that never ends because it's a constant search for more information to try and avoid losses. And effectively, they're just trying to avoid the pain of losing. So for me, I'm totally cool losing. Like, I'm okay losing. I have no pain associated with that stops me from trading. The problem I have is my edge. I think we used the Cluedo analogy, didn't we? Where it was like you've got 10 people that you trust, and that's like 10 trades, but 1 out of 10 is an absolute nutter and just turns up randomly on your charts. And when you see it, it's like, I don't know what to do with this. So I've got this area in my trading that effectively creates a grey area. Now, I like a simple rules-based strategy that I know what to do in every situation. If I'm ever left scratching my head, I'm going to cut trades early, I'm going to average into losses, I'm going to extend my stop loss, I'm going to do all the things that I know typically doesn't have an expected value. So 90% of my trading is mechanical and rules-based, but there is this opportunity to take grade B trades. And these grade B trades set up, and sometimes they conflict with my grade A trades. And I've got no data around whether they're better, worse, or the same. So what I've got to do is go back through my massive sample size, 650 trades, and I've got to study and quantify these grade Bs and bring them in line with a rules-based approach, the same as grade As. Once I've done that, I've either got information that's better than what I've got previously, and I can include grade Bs to the party in a rules-based way. My edge is then mechanical, rules-based. I know what right and wrong looks like across the board. Or grade Bs are a whole bunch of steaming noise, and my job is just to say I don't pay any attention to them. I just take the first offer that I've on the edge that I've already built. But this is the confusing thing. When I've gone back through my data, I've realized that 20% of my trades I would now mark as grade B, whereas in the past I didn't. Now that means that when I back tested the edge, I recorded the results differently to how I'm willing to trade it moving forward. So there's already a disconnect between how good the strategy could do versus me now being selective and fabricating these grade B trades out of nowhere. So the backtest
Yeah.
is for me just about clearing up that information. And I'd say probably 40% of the way through it. I reckon another good couple of hours on it, I'll have that section done, and then I'll have my answers. So for me, when I get the answers, that's when I'm like, there's nothing left to backtest. It's a menu. I've read the front, I've read the back, I've read the terms and conditions. I know in any situation, I can look at the chart within 10 seconds to say, yeah, valid, or not valid, need
Okay.
to skip it. And I know that behavior is then backed up by statistical data. So I am very
Excellent.
much a perfectionist when it comes to my data, and sometimes I can go a little over the top with it. But I don't know another answer to confidently trade the edge without this insight, other than just going studying my ass off for hours to get the answers.
Fair enough. All right. So that then leads to the next question. When is it enough? Is there a number? Is there a time allocation? Like, at what point do you say, you know what? I think I have built up enough confidence. I can now just execute. What if, hypothetically, you've been backtesting for the last 6 months, and then all of a sudden you have a shift in the market regime? Now all of a sudden you go into, I'm going to now start taking these trades, and they don't work. Is that going to then force you to go back to re-evaluate all of those trades that you took? Because I feel like that's something that a lot of people do. They get to that point where, like, all right, now it's perfect. I can't backtest anymore. I need to start going into the market with this. And then they get their absolute backsides handed to them because there's been a shift of some sort. And then what they just do is they, oh no, I don't have enough data, and they revert back to that. At what point is backtesting moot? Let's put it like that. I think that's the overarching question then. It's like, at what point, in your opinion, is backtesting moot?
Okay, so I look at backtesting as two camps. Either you're backtesting to try and refine an edge and curve fit it over whatever sample size you've tested. It could be 3 months, it could be 3 years. You're basically trying to find the most optimal way of trading that edge in that period that makes the most amount of money. Typically, this is curve fitting. Now, when I backtest, what I'm reminding myself that I'm trying to do is actually understand how to interpret the candles on the chart and build a big sample size around that. So for me, the backtesting ends when I understand the concept. And I thought I understood it, then I've seen a bit more information and gone, now there's something I don't understand. I want to understand that. So I'm not trying, although I let the data lead my decisions, I'm not trying to curve fit. I'm just trying to understand, is there an opportunity to take these moves on the chart and follow this move to the downside? And then I categorize the trades into continuations and reversals. And then I look at the difference between the two. So for me, I'm just trying to understand the edge. That's simply all I'm trying to do. And the backtesting stops once I've understood the movement that I'm trying to frame. And I'm like, overall, I'm like 95% of the way there. I can trade probably, I get a high frequency of trades. I can get 5-6 trades a day. So in a week, I could easily see 20 trades. Now, there might be 5 trades in those 20 trades that set up additionally that I like the look of, but I need information around those. I need to understand, is there edge in those? And if there is, then dude, I'll take them all the same. And what I want ideally is the expectancy of those to be the same as the grade A's. And then what I can do is scrap grade A and grade B and just say valid is valid. When the market produces this pattern, this candlestick formation, you just do this. And to me, that's as simple as trading can ever be. It's properly like yes, no. And that's what I want. Ultimately, that's what I want trading to do. I do tend to overcomplicate it to get to that point, but by the time I do get to that point, I can display a massive sample size that we can mutually agree, yeah, you have edge within this. Because it's not like a 1 to 50 risk reward and you just got lucky and hit a few massive outliers. It's a 1-to-1 risk reward over a big enough sample size. Now, moving forward, what if the market shifts? This is the risk that every single trader has, that we can never guarantee. You can backtest for years, finally execute on your edge, and the market just says, nope, we're changing. And you wouldn't know until you've gone through a big enough sample size to realize that the market's now no longer working. So in module 3 of the course, we talk about how to deal with drawdown. So what I do with this, when I build a system, is I have a number, a line in the sand. So let's say Richard, you've got your system that you back tested, you trade it, and it's producing a profit. Now, let's say it's up 100R this year, just for round numbers' sake. Now, there is a line that if it pulled back and went on a losing streak, more than a certain number, you would go, okay, something shifted. So for you, let's walk through this exercise. You're up 100R on the year. Your strategy gives you 3 losses. Back to back, you're down 3R, but you're still up 97R. What do you think?
I'd be fine with that.
Okay,
If it aligned with my backtesting expectancy.
Sure. Okay, you continue trading your edge, and now all of a sudden you find yourself after a month in a 10 trade losing period, but your strategy is still up 90R in total. How do you feel?
I'm still fine.
Okay. You carry on trading, no problem. This is just a pullback. Let me buy another challenge account. I'm going to scale into this, try and catch the bottom.
Oh, wait, did I lose a challenge? Did I lose an account doing this?
If you were trading at 1% risk, then maybe, yeah, because you would have hit 10 losing trades in a row, right?
No. Then that's too risky. I would have been down to 0.5% already by this time.
Okay. So you're managing risk, but you carry on trading. And now all of a sudden you're at the end of the next month and you're down another 10 losing trades. You're at a 20R drawdown, but you're still up 80R throughout your whole data size. What do you do at this point?
Oh, I would definitely stop trading for a while. So I don't use the total yearly metric as to say, okay, I am where I should be. I look at it, let's say, from a month-to-month basis, and then I also look at it from a time frame basis to say, okay, I've had 20 trades and I've lost 80% of these trades. I've had a string of losses followed by another string of losses. And I would go and look at that information and compare that to what my strategy is supposed to be within a margin of error. And if that is grossly outside of that bracket, I'd be like, something's going on here. And I may then just pause and say, you know what? Or I would severely drop my risk.
Okay,
to the point where I can actually survive that bracket basically of drawdown.
Sure. Okay, so you're down 20R in drawdown. You drop your risk, and now the market just decides to play ball. You make all the money back, but you're now reduced risk, meaning your strategy is back to break even, but your account's still in quite a significant drawdown. Now, what this does at this point, it gives you new information about the characteristics of your edge and what new normal could look like moving forward. So for me, when I'm trading an edge live, what I know is what was my biggest drawdown in the past. Now, my biggest drawdown in the past was 11R. So if I was trading at 1% risk and I was unlucky that I just bought an account the moment my drawdown started, if I didn't adjust my risk, I would be heading towards rapidly the maximum loss on the account. Now, I'd have to be unlucky to do that, but it's still possible. Now, as I trade it moving forward, I know 11R drawdown is possible, but trading long enough, I know that much bigger than 11R is possible. So what I do is I create a line in the sand, and I just say, you know what, this edge is up 100% or 100R this year, whatever. I'm going to trade this edge until it hits a level that it should never hit. And if it does, I'm going to bow out. Something is significantly wrong in this edge. Now, a lot of traders will say, well, after 3 losses, after 5 losses, after 10, you don't have a strategy. But the random variance in the market can produce, and probably will produce in pretty much all strategies, or most if you're working on positive risk to reward, bigger than 10R losing streaks. So what I want to do is put a line in the sand that's so far down the line that if it hits it, I know, not emotionally my edge is fractured, I logically have to look at it and say something shifted here. Because the equity curve, although still profitable, has swung so severely the other direction that I can't ignore the information that the market is no longer moving in a way that I was trying to capture the moves. Now, for me, that number is, come on, I'll tell you what, have a guess. Where do you think that number is?
So the amount of trades that your system needs to fail to produce.
So losing streak.
Okay, so give me a base. How many trades do you take a day?
I'd say averagely I do about 60 a month. Averagely.
60 trades a month. And you're looking for 5R. that doesn't give you all that much. So you want, let's say, 60% win rate?
If you get a 60% win rate, you've got a 0.2 expectancy.
Okay, so that's not bad.
You times that by 60, you're about 12 hour a month, minus slippage, commissions, spread swaps, whatever. Like you'll be down to about a net probably 8 or 9 hour.
I think that your number in trades is going to be about 40 to 50% of that. So if you go through a losing streak of about 25 to 30 trades, I think you're going to be like, oof, no. That's what I think.
That was like the first 3 weeks. Literally, when you start trading something, the market goes, "We've been waiting for you." And no, I've been through sort of coming through the other side of that. My number is not so much a number of trades that I'm willing to take. So, like for an example, I would be willing to take 200 trades and be break even at the end, and still be willing to carry on forward testing the edge. But my maximum drawdown number is 30 trades. If I had a 30 trade losing period, so I'm talking about like, lose 3, win 1, lose another 3, win 1.
How close was like 25 to 30? And you were like, damn it, Rich, are you reading my notes?
It's pretty close.
Yeah.
So yeah, 30 trade losing streak. So it doesn't matter if I'm risking 0.1% risk or 1% risk. I know that number for me is a 30 trade drawdown. So total, I've lost at 1% risk. Total, I've lost 30% from my equity high to my pullback. Now at this point, I'm going to look at the investment vehicle and say it's probably not suitable for what I'm looking to do. Now, I've traded 4 profitable edges over the 8 years of being a trader. I've built and studied each edge, refined it myself, and then managed to bring it into profitability, got funded, got payouts every single time. Every single edge had one thing in common. It ran its course and it fizzled out, meaning it hit a level that I was unwilling to carry on with because the edge no longer produced a return that was worth my time. But what I will admit is in the earlier days of my trading, I gave up on the edge too quick. And what I've learned as a trader that's now much more experienced is I've got to let the realms of probability have a big enough sample size to play out. And you sort of know from poker, you can have some incredibly good players that have an expected value, and they can execute like 10,000 hands and still just get unlucky within that period. And if the trader or the poker player is willing to go through 10,000 hands and then go, do you know what, this expected value sucks. What if 10,010 trades or hands was the number that it then started to turn around and they built an entire career out of it? So we've really got to understand probabilities in trading. And with a 60% or 58% win rate, you will regularly go through drawdowns, our 10 trade losing periods. It's going to be statistically normal in probably every 150 to 200 trades. And if we can't get used to that idea that losing is normal, then we're going to quit after 5 trades. And we're going to take all those problems into the next strategy. And we're going to go back on the internet, and then we're going to go into the Trader's Journey channel and go, right, let's see what these traders are trading then. Surely they've got an edge that doesn't lose in the way that mine just did. And then you'll learn it, you'll trade it, it'll go through 3 losses. That's a load of rubbish. Let me go and find another edge. That cycle there keeps traders stuck and just going round in circles. And I know because I did many years of it. So you can catch an edge and then trade it, get funded, get a couple of payouts, and then maybe the edge starts to dry up or statistically shows you a bigger sample. Through that period, you just got to hunker down. And you are the navigator that decides where that line in the sand is. But from a mathematical probability and logical mindset, that number, if we're just basing it on maths, and you sat down with ChatGPT and had a proper session, it's not going to be a 3 trade losing streak. It's not going to be a 5 trade. It's going to be dozens and dozens and dozens of trades. This is why as traders, we can't start slamming accounts with 3% risk a trade because it's just not sustainable.
No, it isn't. And just to get back to the poker thing that you were talking about, if you are trying to establish whether or not something is going to, on a probabilistic level, be worth your while, you need millions of hands. So you have simulators that are going to simulate the probability of aces being the best hand. and they'll say, oh, 84% of the time, aces is the best hand. Yeah. What about that other 16% of the time? And you're looking at it from the sense of, okay, cool, I have millions of hands. Let's say 10 million hands that has been simulated. So sometimes closer, like in the hundreds of millions of hands that get simulated. And after your third time playing aces, you expect to win because it's supposed to win 84% of the time. But you expect it to win every single time you get aces. And it's like, okay, fair enough. I've done my calculations, and roughly 84% of the time it's supposed to win. But you're not going to focus on the 3 times that it won previously when you got aces. You're going to focus on that one time that aces got cracked. And you're like, oh, it's always when I have aces. No. So you get into this like mental battle with yourself where you know the data, but you're not getting the outcome that's in line with the data because you're looking at a sample size that's so small. You're thinking of like, okay, cool, I've had aces 4 times, I won 3 times, it's a 75% for me. Great. It's a 75% win percentage expectancy from the very small amount of data that you have. But the data that you used to get to the correct number was millions of hands. And it's the same thing with trading, is the idea that I think people either get too attached to what could be versus what is, and they think that it should always be like that. It should always be like, no, if I'm going to take a trade, I should always get 1 to 2R. And it's just not how it works, unfortunately. And that's the battle. It's the at what point do you turn around and say, maybe it's better if I just reduce my risk a little bit. Let's not try and force it now, because I can see I'm supposed to be here, but I'm currently down here with my expectancy. You don't need to change anything necessarily. Maybe you just need to give your trading strategy a bit of time to catch up to where it's supposed to be, because now you have a slightly larger size. Maybe something like that.
Yeah, and trading with smaller size gives you a bigger window to be able to see a bigger sample size with less pressure as well. If you go on a 10 trade losing streak, lost an account, think the strategy doesn't work, well, if you were trading with smaller risk, that 10 trade losing streak might be the start of a 40R up streak that will come over the next 3 months. Yeah. And we've got to see a bigger sample. The thing with poker, and correct me if I'm wrong on this, but poker is fixed mathematical odds. Trading isn't. So, for an example, you can look at a deck of cards.
Not entirely.
Okay, well, hear me out on this, because for my own sanity, right? You could look at a stack of cards. You could look at fixed odds. Like, for an example, the river comes out. So, or let's say the flop comes out. You know your cards, and you know the exact probability of hitting your outs, meaning you always know that there should be a set probability of hitting a certain hand, right?
Okay, so that's what you mean. Okay, so yeah. So you have 52 cards. So you can discount your own 2 cards, and you know that there's, for argument's sake, you have an ace, and in theory, there should be 3 more aces in the deck. So what's the chance of you hitting an ace? It's 2%, roughly. It's 2.0, 2.14, whatever. That's assuming nobody else has an ace. So it's fixed only if the original count is the same. But it varies based on who else may or may not have an ace. Because then the probabilities change. In your mind, you believe that it's 2%.
Yeah.
But in actual fact, it might be less than that. That's why I'm saying it's fixed, but it's also not. Yeah.
Okay. So it's fixed, but it has a small degree of variance based on players and cards you can't see, right?
Yes. Yeah, there is variance, yeah.
In trading, you might place a short trade based on that last candle close, and your variance is every other player that you don't know in poker, you would know there's 5 players at the table. In trading, you have no idea if one massive whale is about to sell down or if 100,000 people are about to buy into this and fade the move. So we have, in trading, we could never know with any degree really of accuracy what our success rate is on this exact single trade, because it's based on participants that we have no vision of as retail traders. So can you understand in my mind how to try and quantify your edge in trading is just to say, well, if I took this pattern, I think I have a theory as to why it works, and roughly I win 60% of the time. I can't pick the next winner because I have no idea what the other participants, like what they're doing, what cards they're holding. So my job is just to trade this pattern when it turns up with consistent risk. Because do you remember that story where there was an analyst that said to a senior trader that this stock, I think it was wheat, was going to drop to this level and then it was going to buy up. And he was like, no, I've done the technicals. There's a support level and it's right here. And when the market reaches it, it's going to buy. And the senior trader picked up the phone. This is years ago. And he just said, like, sell 10,000 contracts of wheat. And price dumped straight through this level. And I think this may have been in Trading in the Zones book, where it says it only takes one person to mitigate your edge. And you're never going to know whether that one person is there today, or is on your side today, or is just taking a day off and he's on holiday, or she's on holiday, or there's a group of traders. So our job is not to try and be right in the trade, because we can't guarantee the odds on a singular trade. And hence, when you get aces and you push in and you know that your odds are, say, 87% of hitting that last card, in trading, you go, oh, this is a grade A trade. You increase your risk. How emotional are you going to be if the river comes out and it's like hits for the other person and your trade hits stop loss and you've just doubled up because you're like sure about this? This is why it's consistency for me came before profitability. Just I risk one, and this is why I explain it as one. I risk one unit on the account. It could be $200, could be $2,000, but I just risk one, and I have to risk one every single time, because if not, I bring random variance where it's like pocket aces come, and then I go, right, I'm gonna bet 40,000 chips on this. Then pocket aces come again, nothing's changed, but I bet 10,000, and I can be like win one, lose one, but still at a loss. And I need to be break even when I win one, lose one. If not, I'm just playing a game of trying to get lucky and basically gambling against an edge.
Yeah. So to give a little bit of like a viewpoint into how I see it, I always refer to context matters. You can have probability, and probability is a mathematical outcome. It is based on known outcomes. So a coin flip, there's two outcomes in general that is accepted, but there's technically three. So if you are looking at a regular coin, any coin that you have, it's got two sides. So you would think that the outcome is it's either going to be heads or it's going to be tails. But when you look at probabilities, you're looking at all of the outcomes and what are the odds that it's going to land on that one often enough. So I know the outcome, it's one of two, doesn't mean that it's 50-50. And you can go and flip a coin thousands of times. The chances of you actually getting half of those being heads and half of those being tails every single time is very small. The chance is very small of that happening, because I expect this thing to happen, but the reality is completely different. And the context around it matters. Is the one side slightly heavier? Is the other side slightly lighter? Is every flip exactly the same? Wind resistance, all of those things plays a role. So if you look at poker in the same sense as well, aces, give or take 84%. Best starting hand that you can have. A deuce 7, worst starting hand that you can have. 23% chance of winning against a random hand. If you took aces and you placed it against deuce 7 offsuit, and you compare those two to each other, you would say, yeah, 87% of the time aces is going to win. In that context, in that bracket, that makes sense. But what if I told you that statistically, deuce 7 is the advantage against two players that both have aces? So you have aces, I have aces and someone else has deuce 7. They actually have a higher probability of winning that hand than either one of us has. Our probability against each other is split, apart from flushes. We share exactly the same cards, so we have no straight advantage. We share the same high cards, there's no more aces. Where the deuce 7 can get sets, well, they can get trips, not sets, because a set means that you've got 2 of it in your hand. They can get, there's 3 7s available, there's 3 deuces available for them, that's already 6 cards. They have the probability of the lower end of the straight as well. So they can get 3, 4, 5, 6. They can get 4, 5, 6, 7, and so on and so forth. They are at a loss for flushes if it's offsuit, obviously. So, but statistically, it's a higher probability that the worst starting hand, can beat the best starting hand given the right circumstances. And that's why I said context matters. Yes, you can look at trading and you can say, statistically, I should be winning whenever I do this thing because my probability is stating as such. But you don't have all of the information, and the context matters because, like you said, if I try and up my risk the second time around, I'm changing the variables. It's understanding that the variables itself that you choose is going to have a major impact on whether or not your statistical analysis is actually going to have a good probabilistic outcome or not. And that's why I say context matters. If you do the same thing over and over and over and over again, and you keep your variables the same, you get a much closer reflection of what is actually your probability and the expectation in relation to that probability. But if you keep changing things, the variables, as you're going through with your trades, your expectancy is great, but your outcome is poor. And it's that same thing. And people need to accept that if you keep jumping between things, you're never going to get a solid foundation of what it is that actually works and what doesn't work. And it's allowing your system the opportunity to play out its expectancy. That's why I like when you were talking about earlier, like if you reach 30 losses in a row, it's probabilistic that, you know, your strategy is kind of like taking a bit of a hit. And it's understanding that. Give it enough time and you will eventually see it. It's the rule of large numbers. You need more data. That's why I was like, okay, at what point do you say backtesting is now moot? We're done. You know, we don't need more backtesting. Backtesting is one thing. Now you need to see whether or not you can replicate what you've backtested. And then you want to see how close or how far you are to what you tested, assuming certain information stays the same. So if I'm going to take a trade now, based on my strategy, I have a certain expectancy. Granted, I keep it the same. If I now decide, no, I'm not going to risk 40 points, I'm going to now risk 50 points for my next trade. I've changed the variables. And now my strategy is no longer the same. I can now no longer look back at my backtested data and say, I have a theoretical area of expectancy, give or take some margin of error. It doesn't work anymore because you've changed variables. So it's an interesting concept. Sorry, before we go on, I see Kevin Mungais asked, hey, Richard Butler, can you kindly tell me the name of the indicator that you use at the bottom of your chart? It seems an interesting one. Are you referring to... Oh, I just clicked on the wrong place. My apologies. Are you referring to this one here? This is just a MACD. It's Chris Mooney's ultimate MACD or whatever. It's just a good old-fashioned MACD. This is a 50 EMA, and then this is a sessions indicator, and then every now and then I have a zero lag moving average that I just kind of like use as a visual to see momentum and changes in momentum. So I don't know which one you're referring to. This bottom one is Chris Mooney's ultimate multi-time frame MACD. It's a sessions indicator by Leviathan, and then it's a good old-fashioned EMA. Generally. All right.
Oh, hang on. I was muted. A good old-fashioned EMA. Dude, I got EMAs on my chart. I've muted them. I've put them on invisible because I find it's a line. So for an example, if you use an indicator, I would work out every variable of that indicator that I use to make decisions and then delete every other aspect of it because it just becomes noise to me. So moving averages was actually one of the tools within the indicator. And I looked at it and I was like, it just brings additional information that causes doubt when I have a setup. I was like, I haven't backtested based on that information. I'm not willing to go through the sample size because of that information, because otherwise you end up in this loop forever. And I love what you touched on, where you were saying that, you know, when I do something different, I bring random variance, and then it just mitigates pretty much all the information I have in the edge. At some point, a trader has to move from a back testing environment into a forward testing environment, because it's not just does the edge continue to play out and move, it's can the trader manage themselves and execute on that edge to achieve that result as well. And that's a whole totally different set of skills. Building the strategy, I mean, I love building strategies. I think there's a real skill in it as well. But
It is
that
fun.
component,
It is
it's
fun.
very, what would we say, like two-dimensional? Because you just look for a set of variables and you just keep identifying it. You train your eye to see it, and then you go, right, this is an entry criteria, this is the framework, stop loss, TP, whatever, or however you manage it. But when it comes to executing, it's like now we enter into the 3D realm or the 4D realm, because you might be out on a walk, not see the trade. You might be distracted, you might be tired, you might not be at the computer. You might have a technical issue with your PC, your internet might crash. You might be having an emotional day. Like, there are so many variables that can now produce a different result to the result the strategy produces over time. You might get a better result because you gamble on your risk. You might get a worse result. Most of the time, traders will get a worse result than their edge over time, simply because they're
Generally.
willing to hang on to losses for longer or close winners slightly earlier. And that's the skill that we created the trader's journey for. It was all about the traders that come through the course, they've learned the theory, they've built their edge, or they're building their edge. Now, where do you go and practice that skill set, that edge? And it's very much a learned skill. And emotional intelligence ties heavily into it, because if you realize your emotional volume is getting louder, you've got to get to a point where you say, okay, you know what, I need to have a break, or I need to stop. You used to have this rule best of three, and it was an incredible rule for just having a hard rule to stop you from just trading 20 times a day on any potential entry criteria. So there's things that we can do. For an example, traders might be more tilted if they see $2,000 of risk on an account, and less tilted if they see $20 of risk. So therefore, the trader might say, I'm going to trade on a very small account with $20 risk and connect my other accounts to a trade copier in the background, because it's just one less friction point within their trading. A lot of little tips and tricks that we can do to help us get the result that the strategy produces. But I would say typically it's easier, but I would say it's easier to build an edge than it is to execute on it for the majority of traders. I think testing is a two-dimensional skill. You can build an edge in the market through a sample size in a spreadsheet, and I'm not taking anything away from it. It's a very developed skill set and a very unique skill set to be able to do it. But to it's ones and zeros. It's yeses and nos. But psychology has grey stamped all over it. And this is why I look at my psychology and I say, well, how do I turn that into a rules-based way of, did I do the right thing, yes or no? And it helped me become more objective, and that's backed up through processes, weekly reviews, stuff like that, which is cool. I enjoy the whole package, but I would say typically I enjoy building a system more than I enjoy executing on one.
That's fair, because when you're building a strategy of some sort, you pretty much have all of the information at hand, don't you? So you have the complete picture effectively, to a degree. If you're just looking at backtesting, you're looking at data that is ready printed. It's right there. But when you have to execute on it, you have a lot of assumptions. You have a lot of maybe it's going to do this, maybe it's going to do that. So you're adding that like doubt just straight from the get-go because you don't have all of the information at hand. We're building the system. You're looking at it like, okay, I see on this date, this is what happened. This is the movement. Now I need to go and see if there's a way for me to make money off of that. And I think that's why a lot of people don't enjoy the execution portion of it. And it's also why a lot of people, they don't always meet their expectation, or at least they don't reach the level of expectation that they assumed that they were going to reach. Because of the fact that it's known information, and now you're expected to react on unknown information. It's a very, very interesting topic. Rich, would you be so kind as to just give me 2 minutes? I need to just quickly hop off and go to said bathroom, and then I will be back again in 2 minutes, if you don't mind.
Problems. No problems.
Okay, thanks.
Yeah, expectations are a dangerous thing in trading. So if your expectation is that I'm going to make money because my strategy produced money in the past, and this is a really strange relationship. You could backtest an edge. You could see that it has a positive expectancy, but when you execute on it live, if you have an expectation that it will produce money on a trade-by-trade basis, and it doesn't, that creates disappointment. That creates pain. So in my trading, what I did is I shifted my focus from I have an expectation of an outcome, because this is kind of what we were talking about last week with having goals. I want to put a goal in my control. So if I say I'm going to earn 5% this month, I can't control that. I'd like to earn 5%, but what I can control is my execution. So what I do is have this, I gamify my trading and say, my goal is to execute on every valid trade within 90% consistency. So 10 trades set up, I want to make sure that I nail 9 of them. 1 trade, I'm allowed a small error. So when it comes to expectations, I make sure that I put my expectation in my ability to execute my edge. My expectation is I can just trade my edge consistently. That helps so much pain and misery in the market from taking stop losses, because I get to say, well, I did my job. My job is to execute the edge on valid trades. It was a valid trade. It went to stop loss. It's one good loss. If I have an expectation, this is a valid trade, I'm going to win on this trade, and that trade moves to my stop loss, now what I've lost is everything that I expected to gain on that trade. Prime example, right? Richard Butler, he goes to an airport. He's got a holiday booked. And he gets there. and then this is going to be two weeks in the Bahamas, right? Sandy beaches, palm trees, pina coladas. There's going to be just a gentle breeze, sunshine every single day, sitting in the shade, 10 hours sleep a night, and just lazy, chilled days with the occasional paddle in the sea.
Okay, please stop there. Please stop right there. Don't carry on with what you're about to say, because you're about to ruin it.
So this is the picture. This is what Richard's looking for. He's paid the money. He's booked the time off work. He's ready to go and enjoy this amazing experience. In fact, his friends had been to the Bahamas several weeks before and recommended this is why he's going. He's seen the pictures. He's literally visualized it. And his expectation is he's going to go there and he's going to have an amazing time, just like his friends did. He gets to the airport and his flight's cancelled. Now, from a scale of 1 to 10, how much disappointment would you feel? 1 being none, 10 being, okay, I need to reconsider my life choices here.
Well, first thought that would go through my head is fuck my life. This sucks. Why me? I would have the grandest of pity parties for myself in that moment, because everything was booked. I was going to the Bahamas, pina coladas on a beach, and all of those lovely things. And then some person decided, hey, no, not today. Yes, I would feel very, very negative.
Okay.
So don't think that it would last all that long, though, to be dead honest. Okay.
Okay.
On a scale of 1 to 10, I would be 8 out of 10 annoyed.
Okay.
Maybe
now,
9.
Let's say the holiday was the byproduct of Richard going, I've got to go to an airport and just sit down on a plane. And then gets there and the flight's cancelled. Much easier pill to swallow. Now, sure, you still lost the holiday, but your focus was on, well, my job is just to turn up at an airport and get on a plane. The holiday is the byproduct. Now, the same footprint exists exactly in our trading. If we see a valid trade and we think it's that Bahamas holiday, oh man, if this one hits TP, I'm going to get a payout, $16,000, whatever it is, and I'm jet setting off into the sunshine. Now, if the trade doesn't hit TP, what have we lost? We've lost all of those wonderful things that we thought we were going to do with that incredible payout. And therefore, we've got massive levels of frustration. As Richard said, it would be very easy to be an 8 out of 10 in disappointment. Now, if our job is just to turn up and take a flight, it's exactly the same when it comes to trades. Here's a trade. My job is just to turn up and press the button. The payouts is a byproduct of doing what you believe to be the correct behavior over time. So this is, does it change the outcome? No, you still don't get the holiday. But what it helps us do is retain a level of neutral, what's the word? Neutrality?
Neutrality, yeah.
Neutrality. It helps us keep a level of balance. And then when we have a level of balance, it's much easier to say, okay, now here comes our next trade. And my job is just to execute on this trade. And this is what I said about emotional intelligence earlier, because as traders, if we allow ourselves to get too deeply rooted in the outcome of a trade, it's going to be so easy to put ourselves into a position where we just become emotional. When we become emotional, we just make terrible decisions. And those terrible decisions can snowball. And I'm sure there are dozens and dozens of traders in here that have made decisions based on past events. They've snowballed and then got an even worse result for it, probably ending in a daily loss or an account termination. We've all done it. I've done it. Maybe Richard Butler hasn't done it. Wait, let's see if he confesses to it.
I've done it. I think,
okay, good.
I think everybody's done it at some point.
I think so. Is this gold selling lower? Dude, I've got a really juicy level that I want to buy gold from.
Yeah, I'm selling right now, trying to, because I'm not in any other trades right now. I've had my little NASDAQ buy this morning that hit TP2 and then knocked me out and then started going back to that level, but then we're breaking through. So there isn't really anything that I want to be in at this point in time. But this gold trade, I want it to go all the way down here, which is 4227. So if we can get to that point, I would be so happy, so happy.
I don't think you get there in a straight line. I haven't got my terminal open at the moment, but I've got a bunch of levels that I've been kind of looking at and interacting with, and they're I can't wait to finish with this edge and actually start building out an additional edge on there. And gold would probably be my flavor, to be honest. But we're definitely seeing a good amount of downside. I want to quickly touch on two things that I see in chat. My apologies, we haven't touched on these earlier. So one comment says, if I made the strategies fade away with time, from my own experience, that's actually what's happened within my trading edges. This is big motivation towards why I would want to build 4 trading edges. If I'm looking for 5R a month, I couldn't care less what 3 of the strategies do, providing one of them can turn up and deliver, providing the 3 other ones relatively get around break even. So I'm not looking for 5R every month. I'm looking for the highest chance to get an average of 5R a month. And if I build, well, my logic is if I build 4 strategies that can all produce 5R, having something that might do 20R a month on average gives me a much better chance at landing somewhere around about 5R a month. If I can do 5R a month, I can hit pretty much my bigger visions when it comes to it. Something else I see in chat is, Richard Wells, are you a negative risk to reward trader? I spent many, many years being a negative risk to reward trader. Now I trade at 1-to-1, but typically I like lower TP targets and I do like a higher win rate. So that's just what fits my psychology. But there is a difference between closing at 3 pips of profit and actually allowing your trade to hit your full TP. So an example of this was a little study I did. I said, can I make 10 pips a day trading Euro USD and GBP USD? And I said, okay, your rule is you're only allowed to risk 10 pips per trade. So you might find 5 trades a day, but each stop loss can never be bigger than 10 pips. Can you make more than 10 pips a day? And what that done is I was able to go on and trade that. It showed me that I could now set a fixed lot size and a dollar value to 10 pips. And if I could average 7 pips a day, I can now work out like an R value on that on a monthly basis. But yeah, I like a higher win rate when it comes to. I haven't been able to find a way to get them both. Typically, you can't. You can have high win rate or you can have high risk to reward. If
Mm.
you want both, it's like a. Okay, I'm not going to use that metaphor, but there are. Use your own metaphor for that.
Yeah, I mean, I think I average around 60, let's say 60%, if I have to give it a round number. I would say my trading strategy is around 60% win rate if I were to take all of it together. My TP1, TP2, TP3, TP4, all of it together, let's say 60%. But I look at it from an individual level as well. So I know what TP1 is. I know what TP2 is. I know what TP3 is. I know what TP4 is. And I try and break it up for myself in a way that I can say, you know what, even if this doesn't hit, it's fine. There is going to be a next trade that would probably hit that as well. So I don't try and limit myself only to the idea of looking at win rate. It's the overall, everything together. How does it play out in general? What can I expect? Room for error. Certain assumptions that goes along with it. How do I feel on the day? Am I feeling good? Can I execute at the best of my abilities? And so on and so forth. And the one thing that I have realized is that we tend to, as humans, stare ourselves very, very blindly into the numbers. And we forget to just experience the actual trade itself. I know that's going to sound like super holistic and weird, but if you know that a certain outcome is expected and you get a different one, just realize that it's expectancy and there's no reason for you to get mad because this was also an expected outcome. Because if you have a 60% win percentage, theoretically 60% of the time you should be winning. But that also means that 40% of the time you should be losing, which is also an expected outcome. So
yeah, but trading edges don't perform like that. So if you have a 60% win rate, you will have periods where your win rate is literally 30%. You will have periods where your win rate is like 70, 80, 90%, and the average is 60%.
Yes.
And this is what traders often forget, that they go, oh, I got a 60% win rate. Nope, you average a 60% win rate. It's very different. You will literally go through periods where you have a 0% win rate for probably a week, and then other weeks you have a 100% win rate. The average, 60. But it's again, this is why we can't YOLO accounts on single trades. If I knew my next trade wins, I don't need risk management. But I have sadly never figured out a way to know if my next trade wins. Well, not sadly, I have figured out how to make my next trade a winner, and that's by reframing the idea that winning is actually following my process, not the P&L. And that's what keeps me in the game. That's what helps me stomach the drawdowns. That's what helps me follow the process until we get to a point where the number in the sand is hit and we say, edge is cooked. It's time to build another edge. And if you've got 4 edges or 2 edges or whatever, and one edge goes off the boil, it's not the end of the world, right? If you've got 100% of your eggs in one basket and you hear the bottom starting to crack, a lot of pressure. And with pressure, typically performance doesn't go up.
I know how to have 100% win percentage. I can make this trade a winner right now. One click of a button, and this trade is a winner.
But tell us, Rich, why wouldn't you just close this and just take the 100% win rate that the market's offering you?
In this case, okay. I have to preface this. This is a demo trade. This has got no bearing on whether or not I'm going to get paid this month. This is a demo trade, but it's the concept is I have an idea in my mind of what I would like to see and what I assume the market can give me, and I would like to see that play out. So in this case, I won't close it because I'm curious. Even though this trade itself has no bearing, there's no actual risk on the table for me. So, but if this was a real trade, it would have been based on a back-tested strategy that I have conviction in, and me closing would go against that process. So it's realizing that, yes, I can ensure that this is a winner right now. I can cut it short. But if this is something that I'm going to repeat, I should not even consider looking at the back-tested data and try and follow that, because I'm just going up against it the whole time.
Yeah, Be interesting to see. I'm trying to open my terminal because I really, really want to see where my and then what we'll do, we'll get you to put some lines on the chart, maybe in and around that stuff, and see kind of how price behaves. So your TP, I'm just looking now. Your TP is there. All right. So it's going to be different, isn't it? We're going to have different price points.
Mm.
But let's just say you'll hear my alert pretty soon, and when my alert goes off, mate, it's time.
You're buying.
It's,
Okay. So
yeah.
if you're buying, where are you buying from?
I'm buying in front of your TP. If you're charting up what you're seeing on
Front
that
of
trading
it.
view screen,
You are buying from this candle here.
what's your
Wait.
data on that? Who's your data? Oh, Anda, what's your price point on that?
So this would, oh, come on. This would be 230. 4230 on CFD.
4230. I'm buying ahead of that.
Even ahead of that, okay? So
Yeah,
the
I'll be
next
getting higher than
spot,
that.
the next spot would be this, which is 4240.
4240, pretty close. Yeah, that's as close as I'm going to give you. Pretty close. So, and this trade could totally fail, but for me, all I'm looking for is a small reaction point. So I don't need a huge swing in the market, although sometimes price will turn around from areas I want to trade. But it doesn't mean to say that, well, I haven't got data on it. So typically what I'd look for is just a small drive and then see if we can, if the market can fade its move from there. Also, if you want another one, GU as well. I see we've got a comment in chat. Does pound red news folder mean that we can't trade USD pairs without pound? No, it just means you can't trade the pound pairs.
Yeah.
So if you look at GU, I'm actually in a trade at the moment on GU, and
Are you in a sell or buy?
I'm going to buy from 32 to 100.
32,200 flat. All right. So you're in right there.
Yeah, and my stop.
What are you looking for?
My stop.
Are you low-hanging fruit these days?
This is just me trading zones. Basically, you got a 4-hour quasi, so you would have your stop on this at 31.58 at the bottom of the 4-hour chart. You have to zoom out fairly.
31.58, which is there.
It's a big old stop. So this would be like a swing trade.
62, and you are going to look for, this is the 4-hour, you're going to look for potentially, is it this move up over here? So 34415.
This will be negative risk to reward this trade. I think I could target
Negative.
Yeah. This will be like 32.91, something like that. It'll be like 60 pips, 65.
32.91. So okay, so you are smack bang in this section here.
Yeah, I want to be in front of that.
32.91. So right, I can't. There. Okay, I get it. I get it. So 71 pips versus 62 pips.
Oh, it's not negative. Okay, it's pretty close
No,
to
it's positive. Yeah, it's very close. It's a 1 to 1.15.
So I've got two price points that I think hold and give me volume within this area. The first one is filled, and the second one is slightly lower. So the second one turns it into, well, still positive risk to reward if I'm willing to get filled. But if the preceding price action sets up in a bit of a strange way, moving down to the second level, then I will have a much, much lower TP. So it could still be a negative risk to reward trade at the moment. But we'll see. I mean, in these markets, anything can happen at the moment when it comes to
that
the
is
price
true.
action.
What would you be risking if you were doing something like this? Or would you be generally doing the set risk per trade, or are you looking for a risk percentile for the day across all of your trades? So let's say 1% for the day, several trades, you would then break it down and then trade that? Or would you say, okay, cool, I'm going to always risk 0.1, 0.12 or whatever?
Yeah, no, this is a fixed percentile risk of my drawdown, and my risk is 1% of my drawdown. So what I've got to lose.
Okay.
So if you bought a 100K account, you'd have 10K drawdown. So this would be the equivalent of risking $100 on this trade. And the reason why
Okay.
my risk is so mild on this is because this is an account that I bought, been trading for several years. It's gone up and up and up through the phases. So this isn't something that's me.
Ooh, ooh, I hear something. Is that gold?
It
Oh,
is.
we're getting close. Ooh,
Yeah.
we're getting close. You said I'd hear it. I heard it.
Yeah, this is, I need to get this set up actually. I wanted to go in on this on my futures account, but there's no way I'm going to be able to get that open on stream. So there is
So
no way
this
I'm
one
putting
is
two lots on it.
currently $175-ish up on a 20K account. This, once again, so everybody is aware, for disclaimer's sake, this is a demo account. All right, I am not trading any of my actual accounts right now. It's purely demo. Okay, and what I'm going to do is I'm just going to close the trade right now.
Yeah, you closed right where I'm looking to buy.
I'm doing that because I don't want the market to think that Rich Butler is does not believe in Rich Wells's trading. I believe in Rich Wells's trading, so I'm going to say yes. This is as deep as we're going to go. I'm going to close it.
Dude, my computer's having a hard time trying to get a stop loss on this trade. There we go. Let's try that.
Have you ever considered using the position sizer?
Yeah, I use it all the time.
Okay, cool, great.
Right. It's a really, really good tool. There we go.
Yeah, I've finally gotten to the point where I use the shortcut keys, and now I cannot go without them.
But you have to set your shortcut keys to keys that you would never use normally. Otherwise, you end up just spamming trades.
So I have the standard execute trade, which is Shift T. I never use Shift T. So, and I switch entry as S, and hide the lines as H, and then the tilde key on the top left is just to minimize and maximize the position. That's it.
Mm-hmm.
These ones here I don't even use. I can just remove them. It's these ones. It's Shift, hide, show, and take trade. So generally I would, I'll make sure everything is right. So I'll hide that for now. I'll open it up and say, okay, cool, 1%. I'm great with that. Make sure trading here, everything is fine. That's great. I'll move my stop loss where I want. I say, okay, it's over there. I'll say Shift T, and then I'll say hide and dip, and I'm done. And then I move on to the next one.
It's easy, isn't it? It's like a really nice tool to use just consistently.
It is. I absolutely love the position sizer. It was Victor that told me about it the first time, and I was like, oh, I don't know. I like the manual way of doing things, until I started doing the actual proper position size, using it, like using the multiple entry points. Oh, love it. Yeah.
Yeah. I think I've been using it for about 3 years. I struggle to trade without it unless I'm trading flat lot size. So for an example, on my master account, I always put this on, but I've always got to make sure that I put the dollar amount, because I trade a fixed dollar value in there, and what it does is it calculates the lot size on behalf of me. Dude, your exit on gold was pretty tasty.
Pretty clean, but it's because of you. You're the one that said, I'm buying here. And I was like, well, Rich knows his stuff, so I'm going to take this as an exit. For everybody that's asking about the position sizer, I'm just going to go up to where it was shared, and you can get it. There, no, that's the wrong one. Where is it?
Dude, that's a 60 pip pullback. That's 60 point. That's good.
Where did we put it? There we go.
Sorry.
For anybody who wants to know, this is where you can get it. It is a free to download position sizer. It works on MetaTrader 4 and it works on MetaTrader 5. You go here, you can download it, put it, follow the steps that they have. There's two ways that you can install it. There's the long way and then there's the short way. The short way is just to extract all of the information after it's been placed in a zip file. You extract it straight into well, maybe I can go ahead and do that right now. So I'll say File, Open Data, Location, MQL5. Okay, just give it a second to open up. So it'll be MQL5 under Experts, Position Sizer right there. So you would download it into that number, and then you would just paste it in there. So it's very simple. Just follow the instructions on the website, learn about how to use it and what each aspect of it is before you just go and blindly enter a trade. Read up about it nicely, and then make sure that you ensure your algo trading is selected on. And then when the position sizer is open on the common section, you should have allow algo trading on as well. And then it'll be on your chart.
Dude, that cost me dearly the first time I used that tool. And my mentor at the time, he was like, look, Rich, he's like, do not do it on your private account. He's like, just do it on a demo, learn to use it.
Yeah.
And I didn't. And I opened a huge position without meaning to. And you know what happens when you go, I'll just go back into profit. Please just go back into profit, and then I'll close it. And I watched this position run against me. And I'm like, it isn't even a trade. I shouldn't even have this open. And in the end, I had to bow out. And I took a 3% loss on my personal account. Yeah. So that was the lesson I needed to make sure that I rechanged my hotkey and made sure that I had it on my navigator. So one thing that I do that works really well for me is I've saved the tool under navigator as one of my favorites, right? And then what I do is when you open your navigator window, I'll show you how I do it. So if you save it as a favorite, and now grab hold of that box. No, not that. Sorry, the edge of the black box, and just slide it all the way to the left, and just leave yourself about 1/4 of an inch, so you can just see the icon at the left. Keep going. Keep going. Yeah. Now close the box off the screen. And if you had the navigator bar set as white, you would never even notice it. And the moment you need it, you literally click on that tab, you drag it onto the screen, you've got it the moment you need it. That's how I have my terminal set up, just to make it easy.
That's interesting. Never thought of using it like that. I generally have it for every screen that I want. So I would
and then it's on the screen.
Yeah, it's ready and waiting.
So if you went and you clicked on an asset where it doesn't have it, and then you just click on the icon of it and just drag it onto your screen.
So
Nope.
Market.
Nope.
Let's
not
create
that.
another one.
No, you already had it.
No, I meant like it's on all of these charts. Every one
Yeah,
of them.
but that's fine because you leave it in the navigator bar with the side window. So if you click the X and then drag your screen back across, now all you do from there is the icon at the top of that black column. You just click, hold it, and drag it onto your screen. That's it.
Yeah, but what I mean is it's already on all of these. I wanted to go and open up a new screen.
Sure. Okay.
Yeah. That's
Sorry,
what
makes
I wanted.
sense.
So I was like, go market watch. Let's say USD CAD chart window. Close that. Pull that there. So I do this. I have a template. It's called best. There we go.
Okay.
It's done. And then
yeah, and that's how
before I say okay, I just say load, and this one's going to see best again. Done. Hidden.
I'm a stigma for learning like just what works for me, and that's how I get access to it really quick. It's a cool tool. It's. I had a bit of an issue when there was a patch upgrade on a MT5, I think it was. But
that was a few months ago, right?
Yeah, had to change the font on it to work around it.
Yeah.
Well, gold has given us a beautiful little 70-point rally and is now diving back down. Now, I had 2 price points that I wanted to trade gold from. The first one, in my opinion, is now done. So just looking for small movements in the market. To me, I'm going to trade that with a pretty tight stop, and then I'll be now looking at the next level I've got a little bit lower down. It's kind of same story as GU, and this way, you know, you're going to hit a pretty high success rate with it and get paid. You know, if you 70-point rally, like you've got a chance to make good money in that.
Yeah, I mean, and there was somebody asking earlier about trading on gold. Primarily, they were trading Bitcoin. They bought themselves a bootcamp account and they wanted to know how it would be to trade gold on a bootcamp account. Now, I have very, very little experience on trading anything other than EU and GU on a bootcamp account. So I wasn't quite sure as to like the leverage and stuff like that. But generally, in my point of view, you can get really good leveraged moves on gold if you have a slightly smaller account. I just don't know how comparable it is to, for argument's sake, Bitcoin, because I don't trade Bitcoin at all. So
Same, yeah.
yeah.
And also I'm on the older bootcamp, which is 1 to 10 leverage. So the newer bootcamp is a lot more, I'd say a lot more fun. You can put a lot more behind your analysis. So for an example, like if we're trying to buy gold on this, I think my lot size is going to be much, much higher if I was on a new style bootcamp account.
Yeah.
So for me personally, with tighter stop losses, I'm one of the very few traders that's legitimately trading an edge that is capped by the amount of margin that actually then dictates my trade size. So for an example, I might be able to risk 0.3% on a trade, and that's the most I could risk at full margin because it's a low margin account. If we go to the 1 to 30 margin leverage accounts, then I can go a little bit more heavier. I can go like 0.5, 0.7. It all depends how tight the stops are. We sometimes hear traders that are trading 1 to 100 leverage, and they're like, this margin sucks. I don't have enough leverage to place my trade. And they'll be trading Forex major pairs, and it's the same. You say, how tight are your stops? And they'll be like, pip and a half. And rarely can I get an execution on a pip and a half and get filled and not get stopped. And I mean, on a 100K account, full margin's what, 65 lots, 70 lots? You're trading $700 a pip. And so although a trader would be, for an example, managing the risk by having a stop loss at maybe $1,000, the slippage, if something ever happened on that, and you miss your entry by a fraction of a pip, it's thousands of dollars difference if the market then runs and moves. So
like imagine you get slipped on a news event suddenly and it drops
account's gone
12, 13 pips before your account's like, whoa, okay, I will close now. You're cooked. Goodbye, account.
So it means that it makes it harder for me to manage risk around. So when I look at an edge, ideally what I want is an edge with a wider stop, because that way commissions hurt me less, slippage hurts me less, swaps hurt me less, because my lot size is lower. Although most of what I get drawn to is going to be slightly tighter stops, scalping, negative risk to reward, but you really do need an excessive win rate or a decent win rate to be able to get some traction over time. If not, you just trade for the fun of it. One of my accounts, I think, has lost, was it $20,000, $30,000? Like that's because it displays losses and then it displays wins. And obviously my wins are higher than what I've lost, but the amount of commissions that have been paid over the duration, when you are I say a high frequency trader, I wouldn't class myself as a high frequency trader, but you pay for every trade you enter. You have a cost attached to it.
I mean, high frequency, there's like different, holy crap, look at this, LJ is in.
I mean,
2 hours of struggle.
Dude, yeah, it turned out it was an ISP issue. They're having some sort of problem with like the porting. So, I put it to static IP. Like I called them, I got like a notification, and then just put it to static IP, and now it seems stable. So I don't know. They said they're going to have to reset it, so this might drop out at some point.
It's okay. We appreciate you jumping in. Rich, I know that you're probably on your way out, but before you go, here's the question of all questions. Who is richer to be called rich?
Do you know how many you probably get this in your life as well, and it's like, Rich, are you rich? I've had this. I'm also kind of I'm also pretty tall, and I think LJ similar height. Yesterday was the same. It's like, oh, you're pretty tall. Like you get these reoccurring themes, and I always say rich in many ways, but probably not in the ones that most people measure. But then I think full reference to what we spoke about earlier. value is in the eye of the perceiver, right? So
So in this case, if we're looking at who's richer, if we're talking about size-wise, I think Richard Wells is taller, so he's more rich. So you get more rich for your rich when you go with Richard Wells. I feel like I'm more stocky. You know, I think I'm a bit broader than you are, Rich. Not that we've measured,
rich
but
as well. Like if you were measuring width over height, you would go.
Yeah, then you would get more rich for your rich when you go to me. And then if you're going on who's the most South African, this rich is definitely the most rich. But the more British rich is, so it's contextual. You know, it depends on the context.
I was gonna say, if
money wise, he's so rich, so rich.
I was going to say, if you're going by who needs a haircut the most, I was going to say I'm probably the richest because this is getting pretty long. But then you're wearing a hat, so it's not a fair.
You don't want to see this absolute monstrosity that's growing out of my head at the moment. But I'm trying to grow my hair out, and then I'm going to be coloring my hair because we're doing a we're doing a Halloween/New Year's thing, and I'm going to go full out with the dress up. So
what color?
I need my hair. It's going platinum white. Like I'm going to have
Will done that, didn't he? Will done that a couple of years ago.
I think Will went silver, didn't he? He had silver hair. But he's so ginger. It's like he just looks at the beach and his hair goes white.
Okay, well, thanks for keeping this coming. I'm going to see about hopping out. Before I do, I'm going to just quickly give a shout out. We've got a workshop in the Discord, which is in 3 hours and 15 minutes from now. If you've never joined before, feel free to hop in. It's a call that we have on a Thursday, on a Friday, and we just chat about everything pretty much trading related themes. Sometimes we cover psychology stuff, other times we just kind of swear at the market collectively together. Today I've got something special lined up, so if you do want to hop in, that will be at 3:45 UK time today, and you can literally just listen along whilst we share the screen and draw some concepts on there and run through some stuff. But I'm going to fly off because the office is now 31 degrees in the UK. Do you know we got 35 degrees plus coming this week, or next week, I think it is.
Ooh.
That's a typical day in Australia.
Yeah. Ooh.
Okay, so going back to originally what we were talking about, if we were talking about temperature, LJ is the richest, right?
He's maybe we should refer to temperature as LJ. So if it's really hot, you're the most LJ, and if it's cold, then you're the least LJ. Something like that. Anyway, Rich, I wanted to say thank you to you very much for keeping me company. I really appreciate it. Normally you're on for an hour. You were on for an hour and a half and a little bit, and I really appreciate that. And then for everybody that was wondering, it's not just Thursdays, it's Fridays as well that Rich has his Discord session, and it is a lot of fun. So do go and jump in there and ask him as many questions as you want. He's going to answer every single one of them, and usually stays out late, way past his bedtime. So,
cheers, guys. It was a lot of fun. I'll catch you in a bit.
Cheers, Rich. Enjoy, mate.
Peace,
Yo,
Rich.
LJ, the Mr. Queenslander himself.
What's up?
Dude.
What's doing?
I had a great buy on NASDAQ that hit TP2, but then came back down and was wiped out. But winning trade, so I'm up for today. Very happy about that. We were taking a demo trade on gold, which ended up being a $171, not quite 1%, slightly less than 1%. I think it's 0.85% winner on this one, which is for a play trade pretty nice, because we were waiting for this consolidation to break. As it started breaking, I just took the trade. Anyway, but other than that, it's reasonably quiet so far.
Yeah, so far. Bit of play in the market. I've been trying to jump in, jump out. I haven't looked at too much. I don't really know what's going on.
So nobody knows this, but our platform that we use, at the bottom of it, you can see everybody that's in the stream jumping in and jumping out. So it's the back end of the stream. And every now and then you just see LJ pop in, and then LJ's out, and then LJ's in, and then LJ's out. Probably like 30 times. You just see LJ's in, out. LJ's in, he's out. It's like, okay, no, he's
Dude.
out.
I was doing my head in. I was like, oh, come on. And like, I heard you say before, you were like, what camera is that? That was me trying to see if it was working on the laptop.
Do you know what's funny? I just see you sit like this. Like you click, and then there's LJ, and then he's gone again. And then I see him again, and you're like, click. You look so dejected, mate. Like, it's just like you look so defeated.
Because the number of the, like, other times, outside of when I actually got in for a little bit, it was doing that like 10, 15 times, and it just would get almost to like where it was going to load and then just fail. And so hence I was literally there just like clicking, just seeing if it would work.
Okay.
I don't know.
Okay.
They did say they're going to do a reset sometime in the next half hour.
Well, if you fall out, it's okay. We can.
If it does, yeah. Sorry.
It is what it is. It's the last stream of the week, so we've had a good week so far in terms of technical difficulties. So it's bound to happen at some point.
Yeah.
There was a few questions about the position sizer. Sebastian asking, can we use the sizer in a high stakes account? Yes, you can. I mean, this is a 5ers account, so this is a 20k high stakes. It's a demo, yes, but the same rules still apply, and you can use it. It's not a problem. It's a trade manager. It's not a EA robot.
Yeah, it's not a bot.
It's not a bot. It falls under the EA section because it's considered an expert advisor in terms of it's not manual trading, clicking buttons. You do still have buttons that you're clicking, but it's not a bot. It's not taking automatic trades on your behalf. It's just a trade manager, and it's more than welcome to be used within the high stakes accounts. Any 5ers account you can use this on. The nice thing is it takes into consideration like the swaps, so it shows you the swap information as it's reflected on the actual account as well. So it shows you the information very clearly. So I'm so happy we found this, or we got into this.
Yeah.
So yeah, like Ty Keith is saying, I use it on my accounts as well. It's really good. It's great.
Can you still hear me?
Yeah, I can. You just went, Red, yes, I took it on here. Okay, LJ has disappeared. Or no. Anyway, I took the gold trade. Where is my? So as we were breaking out on gold, I took it on this little demo account of ours just for the fun of it. But yeah, I did end up taking it. Where do you download the position sizer? That we share it right there. Yeah, okay, thanks, no problem. And then even this question over here, which position sizer is it? It is the one from earnforex.com. Now, we're not sponsored by them. We don't have any agreements with them of any sort of thing. I just personally think when it comes to a free position sizer, in this case, a risk calculator for your account that works on any account, any MetaTrader 4 and 5, I think it's great. So if they ever wanted to sponsor us, or if they wanted to become a part of the 5ers, hell, for all means, maybe we should get in contact with them, but it's really good. Yeah, just as Novel Indicator or Novel Navigator was LJ, what do you think about FOMC statement after Warsh said half wants cut, half wants hikes? We could have voted to, but he didn't. Or he could have voted to, but he didn't. Would we see a bearish year 2026? We'll give LJ another moment to see whether or not he can get in. Oh, sorry, mate. Yeah, I just saw his comment now. He's busy typing. Oh, dude, that sucks. Anyway, back to just the few of us that's here. For everybody else that's out there today, that's with us today, I really appreciate you guys joining us. Some technical difficulties and a little bit short-staffed today. But what we do have is... Where is that? We do have... Mr. Pedro coming in very soon, which would then be followed by Victor and Samir just a little bit later at 12:30 GMT. So we're getting closer to them joining us as well. I wanted to have a quickly look at the news because we did have... Whoa, what was that? Deadline for Iran US final deal can be extended by mutual agreement according to the MOU. Interesting, that was 40 minutes ago. What happened 40 minutes ago on the chart? Let's go to 5, so it's 8. Not all that much. Maybe it's what pushed this a little bit lower. It's plausible. It's not that bad. Yeah, anyway, I wanted to have a look at the rest of the news. I wanted to see what... where are we? Thursday. So the pound official bank rate came out unchanged. The only thing that changed was that there was one extra person that wanted more, that voted for rate hike. So 2 to 7, where it was 1 to 8 previously. So let's have a look at what it did on the pound. GU. So it was this. Very precious little change whatsoever. Did it change? No, sorry, not that one. Did it change anything on the dollar? Very precious little. This just looks like, a typical price action. Just unchanged whatsoever. Oh, did we see anything in EU? Not really all that much of a change either. We are slowing down quite a bit now. So for those of you who know how I trade and have been following the live stream for a while, I refer to the candle momentum a lot. And when I'm looking for potential swing points, potential changes in direction of the trade itself, or maybe even just a retracement area, I always look at the candles in a set like this, and I compare them to the previous set of candles in general. And I look at the candle wick in relation to the candle body, so the highs and lows of the candle in relation to the open and close of the candle. And then I kind of look at in this case, you had a strong bearish movement, and then you had one bullish candle, 2 bearish candles, and then 2 bearish candles again, signifying, okay, this is flat price action. Okay, but the next time, so I take this into consideration, and then I look at the next time we have a similar attempt at a pullback. Notice how the next pullback's candle is a lot larger than the previous time that we had a candle pullback, but as a whole, the whole segment is slightly larger than the previous one as well. So every time we have this, it's down, it pulls back, it goes down, it pulls back, it goes down, it pulls back. I look at the length of this pullback in general, and I see, okay, as we're going lower, it seems as though there's a stronger attempt every single time trying to push back price up higher in this downward channel. So I take that into consideration as a potential, like look over here, we had a strong reaction there. There's a fair few more. Then I also compare how strong was the bullish movement that we had in between. Was it as volumetric as this push? No, it's a lot slower, it's still upward trending, but the momentum has died down quite a bit. And I tend to look at this as a means to say, how due are we for a reversal? How due are we for a potential continuation? And that's generally you can see that the very first move that you have is the strongest. So here we had flat price action. We eventually break out, effectively retest, and then continue. So this is the first leg. This is leg number 1. This is the first leg. From this point to that point up there, strongest leg. Then it pulls back a little bit. We have our second leg. This is leg number 2. Not nearly as convincing as the first leg was. Third leg, from that point over there to that point up over there. Look how strong this upward push is, and look how flat this one is when compared to all of these. So this number 1 and number 2 has the same trajectory, the same volumetric directional movement, but number one had a much longer leg. So very clear that it wanted to go up. The second leg had the same sharpness of the incline, but a lot shorter, creating a little bit more of a pullback in relation to the previous time. If we were to measure this, so from that high there to that low there, that was 68. If I compared it to this one was 89. So you're starting to see the directional movements slow down. The very next one should be even larger. It's 85. Okay, so it's slightly smaller than that one. Just something to take into consideration now. If we were to, for argument's sake, fail to make a new high and we break this low, so we go up, come down, the next time we push back into it, you might consider, okay, we might be turning for a potential downward move from here. Even though you have the slight little low swings there that get broken here. It's that follow-up to see whether or not it's actually going to change its directional movements. So just something to take into consideration. NASDAQ right now continuing lower. We had the high. We have a lower high. This was the most recent low. Now we created a new low just with this candle down here already. So right there, this is already a new lower low. So what are we looking at? We're looking at price has now gone from bullish price action to bearish price action. So it could be lower time frame. If I go to the 15-minute and see what it's doing, did we reach a specific area to test off of? We did not reach that high, but we came into that area, struggled. This is now definitely a higher area of resistance because it was created and tested twice and struggled to push through, of which the second attempt actually garnered a new low. So now my question is, where are we going? Are we going to continue lower? If we're going to continue lower, we had an area of interest right over here, which was that bearish, that bullish base. And if we continue pushing lower from there, we've got the daily open and all the way down to yesterday's lows. So I'm looking a little bit more bearish. So for the sake of shits and giggles, I am going to, where is NAS? There's NAS. This is on the 1 minute when we last traded it. I am going to find my lines. Come on, here we go. And I'm going to look at a sell. So where is 40 from here? So it's around about there. Okay, so this is fine. So 1% on this one when it pulls back a little bit. And this one is showing almost 40. I'll take a little quick sell here. Let's make this a 1 to 1.5. What does that look like? Yeah, that looks all right. I mean, it doesn't actually look that great. You know what? Fine. I'm just going to, for the sake of it, take it. But I am going to put my swing point up over there and take this to a 1.1. See, this actually doesn't look great, though. It is struggling. It's the 1 minute. Slightly lower low, lower high. How many minutes before this one closes? 15 seconds. I am not the most keen on this one. We might be entering consolidation. So what I'm going to do is I'm still going to put up 1%, but I'm going to have it up over there and just sell it here.
We're back.
Did they go and change your ISP again?
Yeah, they reset it. So it seems to be up now. Reset the router. Now it's working. I don't know. Hopefully it stays working. I don't know. Very annoying. I haven't been able to like trade either. You know, it's like, yeah.
I mean, today has been a little weird. There has been some good moves. Like for argument's sake, gold had a very nice sell-off as we came out of Tokyo session. Okay, so this trade is no longer in play. Very nice downward push on gold, which is great. We had a nice drop down on EU and GU as well, which is semi-expected considering yesterday's results on the FOMC, just on a technical standpoint. And then looking at the DXY as well today was also very bullish during this morning session. So there were a lot of people asking about the FOMC information, specifically like Novel Navigator. I did ping them for you. And you can, we can discuss that if you want to. Like this question over here.
Oh, here. Okay. LJ, what do you think about FOMC statements? Also, Warsh said half want cuts and half want hikes. He could have voted 2, but he didn't. Would we see a bearish year 2026? Very good question. Also, what about the changing how the Fed looks at inflation, and they will change how inflation is calculated? Yes, 100%. So, very interesting that we've got such a somewhat hawkish move. I think this is also partly related to, once we got that out of the way, what's going on with the Iran situation, where Trump's kind of gone back and forth. And I think Iran has just come out and said as well, there'll be a 60-day passage with no fees or anything through the strait, which is now going a bit counter to the whole situation being over and done with. You know, this is now starting to seem like we've got a temporary reprieve, which is to get some of that stuff back online. That goes into the things like fertilizer, helium, all these other core components that the economy globally needs. And then we might end up in another situation down the road. We did also move off the fact that, yes, half did want hikes. Half wanted either neutral or cuts, which is very split, right? And so I think the thing we're looking at here, it's then one, Kevin Walsh himself was very vague, right? He didn't want to answer anything. He pretty much just said, I'm not going to give you any details. Wait until the next meeting in 6 weeks. So the July meeting on July 29th, I believe it is. Then we'll probably get more information. And he definitely did outline these 5 task force sort of teams he's going to have. And wants to scrap forward guidance, the over communication altogether, right? So we're probably going to, anytime he gets asked a question, we'll just say, refer to the task force. And then you can't ask the task force questions because they'll just tell you what they want to tell you. So I think there's also a partial market definitely moved in on a bit of a risk-off element in that sense that the rest of the Fed, just like how we've got Jerome Powell hanging around for a while, can Kevin Walsh bring the Fed in line and direct it appropriately, right? Or do we get this kind of split opinions, kind of infighting type situation going on? Now, further to how we're going to start to read CPI. Firstly, on the jobs portion, he also said that he doesn't really care about non-farm payroll, saying that a lot of the data that the Fed uses now, he wants to scrap altogether, completely try something new, take a re-look at everything, especially with the jobs number. You don't really know the firm numbers until like 3 months later. So he hit the headline number that we see, and then the Fed makes a decision, but it always shifts 3 months later. So he's saying that that's very poor. We can probably do better, and we're going to change the entire way that we look at jobs and everything. So it'll be a far more like real-time data flow across the board, both for jobs, for inflation, for productivity, the whole bit, right? So that's why it's getting these 5 task forces. And I would say this is going to be far more dovish overall. So my suspicion is they'll start looking at something like this, like the Dallas trimmed mean inflation, PCE, rather than the core PCE that the Fed has already been looking at. So when we look at this, like, we're quite low, 2.5, right? And if we go looking at the 1 month right here, 2.5, 6 months out is 2.3, 12 month also 2.3. So this gets us very nicely into that 2% target range to then start cutting rates. So that's my suspicion that all this stuff will eventually be unwound. So it does result in a more dovish Fed overall. Sorry.
Interesting. That is interesting. I don't think I've ever looked at that information, to be frank. But it's like, I think you've spoken about this before. It's not always what is being said, it's how it's being said, and also kind of like reading underneath the statement itself with like a bit of a forward projection. So I think you said this a while ago already, that this is what you expected was probably going to happen.
Yeah.
With Wash coming in, but obviously you had no confirmation, let's say, of that happening.
Yeah, we were speculating once we sort of got the clear lean that it was going to be Wash, and I was talking with Dirk that this is probably how he's going to run the Fed. You can look at his past activity. He used to be part of the Fed, then went off, did some other stuff, and now he's rejoined the Fed again, right? Not a big fan of things like QE. Doesn't like forward guidance, all this kind of stuff, and he did sort of forward purport that that's the way he'd be leaning, right? But traditionally, looking at that would be more, or at least come off traditionally as more hawkish. But in this situation, it's a bit of a rewrite altogether. And then if he stops looking at the jobs numbers so heavily, and we are just looking at that like trimmed mean CPI, essentially just means rate cuts. So then it's the question of, can he get the rest of the Fed board on his side? And right now, hence, it's very split, which also seemed a bit of a political vote, let's put it that way.
Do you think it is because of the fact that Warsh is so connected as he is to the Trump, or do you think it's not that kind of political connection?
A little bit. I think it's on that, like all the same with what month was this? When Jerome Powell came out and made that big speech talking about the integrity of the Fed and that kind of thing, right? And Trump got real mad. So it does come in line with that.
That's a fair few months now. That was when he started calling for Powell to get fired and to step down. I think
this was like January or Feb.
Yeah, somewhere around there.
So it's a kick on of that. I think that has de-escalated greatly, but it's definitely still there. Just like how Jerome Powell decided to stay on for that exact reason, right? So he's still going to be a Fed member. Obviously not the chairman anymore, but try and steer the Fed in that direction. But overall, Kevin Warsh sees AI as ultimately being heavily deflationary, right? And that he's putting together like a whole like AI task force as well to measure that kind of stuff and how that affects productivity and labor and all the rest. So I think in the end, bearish, I would say. I think this pricing that we've got currently for the next meeting, 38% of a rate hike, no shot. Especially on the back of the Strait of Hormuz thing coming off, at least for the next 60 days, So that covers us right up to September. Pretty much, so. Yep. I think the market's a little bit off with this. I think there's going to be a bit more digestion. We come into next week, see where things are, see how people are, feeling it out. sort of try and read more into it. But yeah, I think it's the lack of conviction on him corralling the rest of the Fed right now. So
nice. If you had to look for a trade right now, what would you be looking at, mate?
I like long gold. This was the area I preferred to see yesterday when I was talking with Dirk, that we get a pullback into here and then potentially drive higher. So we're right in that zone right now. But yeah, overall, I would probably be looking to reverse some of these drops as a whole. So I think about 114.50 on the euro. Aussie, similar deal. I held that over from last night. That hit TP there. I'd probably consider re-entering through here now. On the longer time frame, I can see it doesn't look great on like a 4 hour.
I was about to say, I'm not sure if there's longs just yet.
Yeah, I think this would be a retracement point. So this is similar to what myself and Pedro are talking about. Breakthrough here and then see an eventual drive down into the 68.50 or so, 69 kind of area by the time this 200-day moving average starts to climb a bit higher. Then you come right in line with that block from a while ago, back in April.
Yeah, that was kind of like what I was looking at, because I was looking at AUD, I think it was yesterday, prior to FOMC. And I was like, I don't know. It just from a technical standpoint, not even taking into consideration what FOMC was dictating. I was just like, I don't know. I don't feel like this is a bullish move in the making. So, agree with you there. Higher time frame, I do think AUD potentially lower. And the area that you marked out was exactly where I thought you would potentially be looking at going short. So, going long from, let's rather say.
I'd be looking at something like another touch back up to here, just by this top cluster, where we did basically peak, pretty much 50% retracement and just to those weak lows. So I think we get something similar to that, but to the bottom side of that top horn and then come off.
Sorry that I'm giggling now. My cat walked in here and she's, you've seen her before. It's the gray one with the white paws. And her paws are also grey now. And I was like, what the hell? And she was digging through sand and whatnot. She comes running in here and she sits down and she just looks up at me with her eyes like all big and her paws like dirty. I was like, I'm not cleaning that for you. you go sort yourself out, mate.
Classic, dude. Classic.
Cats. They get zoomies.
Yes. Oh, dude, yeah. My partner was house sitting last month for a friend, right? And yeah, the little cat there, she's called Momo, like Mochi, because she's got this like black with kind of like brown spots, right? So, but yeah, dude, in the night, like she just gets the biggest zoomies and just like spacking around everywhere. My old cat we used to have here didn't really do that. Only sometimes, but she was very, she was weird. Yeah, it was the weirdest cat ever. So
I've got 4 cats, and they all get zoomies at different stages throughout the day. And they all have their own personalities, and their zoomies are different as well. And we have this ginger cat, you've seen him before, like fat, big ginger. His name is Ginger Snap. And last night, when we went to bed, you just hear him like come from running downstairs. He runs up the stairs and he bolts past the bedroom, bolts back again, and you just every now and then he stops, and then you like look at him and he just looks at you, goes down like this, and then bolts again. It's dude, I'd laugh my ass off when I see that. Such a cute little boy, and he's the most lazy cat out of everybody.
Yeah.
He wants to go and lay down, spread out, sunlight, enjoy his day, ginger cat, real Monday Garfield style. And then just on days where he just goes absolutely batshit, runs all over the place.
Yeah.
Azrael saying,
Yeah,
I have a porcupine. We had a hedgehog. Didn't have a porcupine. We had a hedgehog.
Oh, really? That's cool.
Yeah, many years ago.
Crazy.
Yeah, and a tortoise. But that's South Africa for you. Yeah.
Yeah. Hectic. I don't know if you can have one here. I'm pretty sure it's like illegal.
So,
or like in echidna, that kind of thing. I don't know if you can actually. I have no idea.
there is like an endangered species law, and like we have like the SPCA, which is basically the animal rights group here by us, and they come and inspect your house. There's certain metrics that you need to, adhere to, and then you're allowed to have certain pets. But certain pets you're not allowed to have them at all. Like there's laws stating you're not allowed to own this animal at all. They're either endangered or they're invasive or whatever they are. So yeah.
Yeah, I think the majority you can't have here, which is for the reason similar reason like we have so many animals that then people try and breed them and sell them overseas, right? So it's to curb that.
Oh, I hate that.
Yeah.
I hate animal breeding. For the okay, let me re-preface that. I hate people breeding animals for the sake of making profit.
For profit.
I love if people try and breed animals to save a species.
Yeah.
So we had white rhinos here in Africa and South Africa and whatnot, and there was a program to get them reestablished and to bring their numbers up from I think at one point we had less than 100 white rhino, and it was the last 100 white rhino, and I think we're back over 5,000 white rhino again in the last, I think, 20 to 30 odd years or whatnot. So it's conservation and it's trying to bring up their numbers again. That there I'm fine. Like breeding programs for that, 100% for it. But you breeding a dog to be 100% Shih Tzu, whatever, for profit, you can take a very long walk off of a short pier, man.
Yeah, it's the same thing even when I see pugs and stuff. Dude, that animal is not meant to be a real animal. They're just so... They've got so many challenges. I always see them. I'm just it feels so mean. They can't breathe properly. They got all this stuff.
Snort. Guys, they have these glands that need to be drained every few days. They have back problems. They can't jump. All of the anyway. They should bring back the T-Rex. There's actually a YouTube channel. There's actually a YouTube channel of a guy that basically simulates what it would be like to have prehistoric creatures in modern day society. So he did the megalodon.
Oh, yeah.
What would the ocean be like for a megalodon? What would it lead to? All of that kind of stuff. And effectively, if we had a megalodon right now, bar human intervention, so people trying to go out and kill the animal and stuff like that, the megalodon would pretty much lead to the extinction of most animals in the ocean. And then by extension leads to the extinction of humans, bar we don't intervene. So the megalodon itself, being of its size, would basically prey on other sharks, which would then disrupt certain feeding zones, and then eventually it would be large enough to go after killer whales, humpback whales, all of that kind of stuff. And it would drive away the natural ecosystem from certain areas, which would then destroy the natural breeding patterns of certain animals and stuff like that. And it would eventually just lead to the fact that there would be nothing in the ocean. It would eat whatever it could get its hands on, and which would then eventually... But anyway, it was just a really cool simulation. And one of them was if the T-Rex was alive. I think it was T-Rex, Spinosaurus. The other one was the Mosasaur, which is a large predatory ocean dweller, and then the Megalodon. Can't remember. There was another one.
What's the one called with the big, like, bomby knocker thing on its tail? And it had kind of like a shell-like body for like protection and spikes.
You had the Triceratops that had the spikes and the shielded neck with the 3 horns.
Yeah.
And then it was like an Ichthyosaur or something like that that had these 2 balls at its tail. Yeah.
Yeah. I always liked that one.
Yeah.
Back in the day. I played some like dinosaur game on like PlayStation. I think it's like that sold probably like 50 copies in circulation, but it was like a dinosaur fighting game, and I'd always pick that one, and you like whip them with the tail. So yeah,
I think it's Ichthyo. I'm just not 100% sure. I don't want to go and say, oh, it's this one.
Yeah, I forget.
Oh no, the one I'm thinking of is an ocean. It's like a dolphin-esque. The Ichthyosaur.
Ankylosaurus? I think that's it.
Ankylosaurus. Yeah, it's that one. Yeah, it's that one. Yeah, Ankylosaurus. Yeah, it's that one.
Yeah, that thing was cool. Yeah, because you'd have him like, and you like he had major defense against like the raptors and the T-Rex and stuff in the game, because you could he had like the shell body and that kind of stuff. Anyway,
swing the tail, the tail.
But yeah, so look. Also, I did see this as well, just while we're on it. Where is my cat gone? The cat has left. It went with my housemate when he moved out. It wasn't my cat, like we said. So the cat has left the building.
The cat's out of the bag now, mate.
I do want to get a cat, again, like my own cat, at some point. I know, I'll see where I move to next, if it's favorable as well, because I don't want to get like cat in an apartment. Yeah, it's cool, but I'd prefer if they can run around and
if you have them in an apartment, give them like stuff to help them not be bored. So have them have like stuff that they can climb.
So
so that they can play with each
friend.
other. Yeah, a PC friendly cat.
Yeah, exactly.
LJ, there's this thing that you can do. You can put your PC to sleep, and then or you hide your buttons. That kind of like thing, so that you don't have.
When I'm awake, is the trouble, right? Like I go, kitchen, like making food or something else, and then just run in here. Don't even hear it because small little black stealthy cat, and then just create havoc.
Okay, so I have a question for you. I have a question for you. Your hotkeys, do they depend on whether
they're all gone now?
No, I meant like your hotkeys, did they depend on whether or not the application was open or minimized?
Only when it's like
in screen.
Up on screen, yeah.
So before you leave your PC, minimize every single one of your applications, go and do your thing, come back again, and then see whether or not it's still safe.
Yeah, of course, yeah, but I didn't even think about it back then. And it was just, there's no like combination keys, it was just like F1, 2, 3, 4, 5.
Just straight up 1, 2, 3, 4. Yeah, okay.
Yeah.
Most of, all of my entry for the futures one is also like, okay, for futures it's Alt and press. Like Alt L for a long and just Alt S for a short. And then for trading, for MetaTrader, it's Shift and T. So unless my cat is really good at like pressing both of them exactly, it's probably not going to happen.
Yeah. Don't worry, it won't happen again. I'm not letting it happen again.
Please don't happen again.
Dude, I'm like traumatized from that. As far as the dollar, I will say we are getting that kind of megaphoning type aspect. So this is why I'm kind of thinking up here we actually get kind of a
bit of a pullback.
And this bearish, dovish type scenario comes back in play. Because outside of that, we're moving back into this upper range for the dollar.
Yeah.
Which is a little bit, don't know. We've seen dollar yen as well run a good bit higher. I did end up getting stopped out of that trade through here. Like I was talking with Dirk yesterday, I was like, look, if we run higher, I'm not going to hedge it here. It'll just get stopped, or it won't, and we'll see. So yeah, out of that for now, but
the next movement.
Yeah, I was wondering like what this dip was that we had.
I also
before.
had a look at that, and I couldn't see anything on the news.
It's not big enough for like any kind of intervention, but that is definitely 40-point drop almost. And this was also when my net was going in and out and just not working properly, so I couldn't really check. But
yeah, I couldn't see anything. Not on Forex Factory, not on Financial Juice during that era. I don't know what it was.
Seven. What time is that on?
So my time, this was 11 o'clock. So it would have been 7 o'clock your time.
Yeah, I didn't see anything other than it was right on the hour. So unless this is like just someone throwing in a big order, I didn't see any other headlines really.
Yeah, I saw nothing.
That are relevant.
But yeah, I guess it's just one of those, sometimes things move unexpectedly. There's really no other news.
I mean, we'll see if it was some kind of minor intervention at these tops, to try and defend the 160.80 level. We get that at the end of the Friday from Ministry of Finance, like seeing their books. So, I don't know. Bit odd. Not sure about that one. That, or it could just be someone fat-fingered something at a bank.
Can you imagine?
Added an extra zero. Oh, dude, that's happened so many times.
I want to buy. No.
Yeah. Because then when they do that, yeah, they get because of the risk team of the bank and stuff, they have to force close, right, immediately. Just the whole bit. So same thing we've seen at the past. Like there's been rogue traders or something. I think one of the ones was at like Societe Generale, right? Bought like 60 billion of some stock when he wasn't allowed to. It just went around his risk limits, all that kind of stuff. The bank forced them to just like auto liquidate the entire block in one go, and then it caused the S&P to drop like $500 million just from a $60 billion block trade. Right, so you always get that
rough
permeation. Yeah. Anyway,
that is rough. I see we've got Senor Pedro in the background. Whenever he's ready, he can hop in.
Yeah, it's a monitor. It looks like a chalkboard. It's got, it's just my, my background.
We can't hear you, Pedro.
I normally have it blank, like, just with the thing on stream.
That should have been burnt into your monitor by now. Like, if you were to switch off your monitor, it's going to just have the drawings.
Yeah. I did actually get a chalkboard, or my partner got me a chalkboard.
Question is, what do you intend on doing with the chalkboard?
Well, at some point I'm going to put it up in the back of the stream, and I felt it might actually be easy to go and like write some stuff and journal out things with like macro and
positive mental attitude. Slam the board.
like, this is what's going on with this. These are the numbers today. Like, I don't know, some general direction and bits and pieces, and also maybe do some more.
We are, and then you draw a bear, bearish, bearish today, and then you come back to the charts and you're like, see, bearish.
Maybe we will get some good old LJ Picasso drawings on there too. We'll see.
You can do the whole aliens, but like your trading version of like.
Oh, that's a good like Halloween costume actually.
Oh, what's that?
I feel like you're the only one with the hair that would like be able to do it though.
I've done Ace Ventura before.
Because it's like
with the pink tutu, the pink tutu and like the wild hair and stuff like that. I've done that one before, so I may as well just do another one with wild hair.
Yeah.
Pedro.
I mean,
Pedro.
Maybe it's not me, dude. I thought my my microphone's broken or something. Maybe it is the.
No. This is definitely Pedro. I can 100% let you know that it's Pedro because he did this last time and he was like, "Oh, sorry guys, I forgot to go and switch audio or something like that." Or
okay, I don't know. Everyone's had audio issues recently, so it's just odd.
You know what's funny?
I will say we are getting this sort of general pickup now
on Euro.
Yeah, it's starting to. So I think we will begin to find a
bit of a home
base through this, yeah. And then that comes in line with the Dixie, like we're talking about. We're up at the top of that megaphone type picture, which, hang on, we need to go to the 4 hour. Then there's just like a slight bit of play depending on where, if you put it to these highs or whatever. But yeah, we've tapped again right into that, starting to pull back. So we'll see if that continues. We get a bit of a retracement on this stuff. I did jump in the Aussie here as well for this retrace.
Oh, so
and then it's going to be the... Yeah, when we were talking about it, I was like, oh, yep, actually, I think we're about there now. So
you're aiming for
25.
070 Oh, 250.
Yeah, 25. Yeah.
Two,
so just below the like 28
okay.
ish level. Yeah, just to make sure it hits, that kind of thing. And that's where you've got the 100, 200 sort of clustering just there. So then it'll be the question of, from there, can we sustain above 70 cents and drive higher, or do we just collapse? You know? And I think that'll come back into some of the data through next week as well. And coming towards like end of month flows. My stream is lagging. I don't know if this is gonna crash. Can you hear me? I don't know.
I can hear you. Sorry, it's just No, I think it's just LJ. LJ's gone, as always. I'm back to just myself. Me, myself, and I. Lonesome gentleman. Stop Hunt Pro. I don't know what you're on about, but you can't use our channel as a way to promote yourself, bro. That is not allowed. We don't ask anybody anything payment-wise here. So if you want to go and promote your own brand where people pay you for stuff, you can do that elsewhere. You can't do that here. Hello from India. Hello. Welcome in. 6767. Yeah. Muscabin or Mas can bertaula. Mas Kadabala. What the hell did I just say? Anyway, saying I'm shorting silver at 68.2. Let's have a look at silver. 68.2. Okay. If it okay, this was 10 minutes ago. So you are waiting for it to retrace all the way back to there, and then you're going to short again. Okay, that makes sense. All right. If not, then no trade. Yeah, that's good. I like the fact. Did I YouTube official saying, sir, what happens if I fail first phase after the 24th of June? Is it still going to be applicable, the second chance? No, it would not. So the idea is that you try, well, you have basically whole of next week still to try and pass a first phase. And if you then failed, then you would get a refund. But if you don't fail and you pass, then obviously your second chance falls away. Pedro. Yes, I can hear you. I can see and hear you. You can say 1 2 1 2 as much as you want to.
Is it working then? Okay. Buenos dias, buenas tardes. Olá pessoal, bem-vindos. Hello, everyone.
What's up, Pedro?
I'm good. How are you?
Are you good? Really?
Dude, Pedro just disappeared.
Okay, we are back.
What is happening?
No.
Dude, it's such a mess today. Oh my god.
I don't know what's going on. All right, let's start afresh. Pedro, are you good?
Yeah, I didn't have any fun yesterday with the game. It was terrible. I cannot believe that Australia has more points than Portugal at this point. But no, it was too bad. We started well, but like it's unacceptable the way we played.
Congo, mate. Congo.
No, it's just unacceptable. And our manager is just not good enough. But yeah, it is what it is. It's just first game though.
Dude, Australia, dark horse. Come on, dark horse.
Yeah.
Let's go.
I'm not gonna lie. I didn't watch the game. I watched the highlights this morning. And I also watched the England one as well. Mm-hmm. And I thought to myself, I don't think England is taking it this year. There's a fair few people that were saying, oh, England. And I looked at the game, I was like, I'm not impressed at all. Granted, not a football watcher or knower or, any of that like level of insights. It was just purely on the highlights that I saw. And I was like, oh, man. Yeah, you did score 4 goals, but I felt like one of them was given to you, the first one. I don't know. I wasn't all that impressed.
No,
I haven't watched the England game.
I watched just a little bit. They have a good team that I think is going to be short for when the real games, the knockout stage starts. We'll see. We'll see how it goes because that's when it matters actually. And that's actually somehow that's why I'm still a little bit confident just with Portugal, because I think those guys, when it really matters, Portugal struggles with low blocks. So if the other team is just defending, Portugal is going to struggle. They're just going to pass the ball to the sides and don't do anything. But if it is kind of an even game against the top team as well, I think that's when they play the best. But yeah, we'll see. It's just early stages. Literally, the first game is just nerves. Of course, it would have been better to win. We didn't, and now we are. But we are going to qualify either way. But we'll see. Yeah, we'll see.
How many goes through? How many goes through to the next round?
Yeah, I think 3 teams can go through. Not in every group, but Portugal is going to at least be second. But we'll see.
Okay, well, I say good luck to Portugal.
Yeah.
You get there.
Yeah, we'll see. We'll see how it goes. I like this comment.
There's some fighting words.
No, it's good. I after yesterday, outside the Sam, the problem is the manager. Like if you see a
Them be
picture of
fighting words, partner. Them be fighting
if you
words.
see an image of the game yesterday, Portugal basically has the best midfielder in the world. Like 3-4 players there. They were playing in a U shape. Like no one was in the middle. Like everyone was just like almost look like I don't know what they were playing, but no one was in the middle. So I don't know exactly what the manager thinks or is doing. It's just terrible. It's just
I'm
absolutely.
gonna have to watch it now. I didn't watch it last night. I'm gonna have to go.
No, you don't need to. You don't need to watch anything from it. It's a waste of time. If you are struggling to sweep, maybe it's a good game to watch. I think you probably sweep quite easily.
I mean, when South Africa went up against Mexico, it wasn't all that much copium, but it was just like, yeah, sorry, Rich, your team sucks. That level of stuff, and then I kind of like watched the other teams, and I was like, yeah, I mean, South Africa sucks, but it was expected. And then you had all of these good teams that you expected not to suck. I was like, gosh, this is karma at its finest delivery. You know, just cool, calm.
Indeed.
Yes. Gentlemen, I'm going to bid you adieu. I've been on stream for about almost 4.5 hours now. I was flying solo today, and LJ had some issues with his stream and stuff like that. So I would like to take this opportunity to go and remove my ass from the stream. If that's okay with you guys, we do have Samir and Pedro that's going to be joining the stream in the next 10 minutes or so. So LJ, if you don't mind, just sticking around for the next, I don't know, 20 minutes or so.
Of course.
I would really appreciate that, guys. I want to stretch my legs.
Go ahead, man.
Totally fair, man.
All right, guys. Everybody that's in
Thank
chat
you.
right now, thank you very much for joining us. If you haven't already, drop us a like, drop us a subscribe. And then next week, Monday, Tuesday, Wednesday, and Thursday, we have the 1v1 battles. I've received the videos. I've received all of the thumbnails. It looks freaking amazing. All right? So all of the guys that's going to be participating next week in the 1v1s, I'm going to have a call with you all tomorrow. I'm going to get you all set up and all lovely and talk to you through all of the rules and whatnot so that you are prepared to beat the living daylights off of LJ and Will. So giving them every little bit of advantage that they can get, because I know that LJ is going to come in swinging. And I spoke to Will, and Will said no holds barred. He's going to go swinging as well. So if you guys would like to watch them go up against the two pros, please join us next week. It's going to be a lot of fun. And we are going to do this again in future. We're going to have more 1v1s where people from the crowd, from the chat, you can come and join us. You can go up against someone. You can win yourself an account. And then there you go. All right, gentlemen. I will see you very soon. Have a great day. And everybody else in chat, have a great day as well. Peace.
Thank you, Rich. Thank you very much. That's going to be nice. Can we bet on that? Can we kind of bet who's going to win on 1v1?
Yeah.
Yes. Of course, real money.
You guys can't hear, but Richard's talking in the background. He was like, "Yeah, throw money down on it." I'm sure we'll have something like that in the chat, like some kind of
some pools or something like that. Just to
something.
Yeah. No, but I think that deserve actually proper money down to see. I think that's going to be funny. All right, LJ. Just to finalize in here with these comments, did you do enough backtesting on the Portugal? We don't do backtestings in here, man. We just do forward testing with full margin, and whatever happens, it happens. That's how we do it, especially in the World Cup. There's no time to backtest. No, but I'm not that confident with the manager. And then we have a Brazilian guy saying that Argentina is going to do it. Dude, something's wrong with you, man. Something's wrong with you to be saying that Argentina is going to win it. Even if they were the favorites, even if Messi was 20 years old again, you cannot say that. I don't think Argentina is going to do it. Okay, I think Argentina is already experienced, already won it last time, and I don't think they are going to have enough in the knockout stages to that desire again to win it. I think Messi is going to just enjoy the game. Hopefully, well, if he continues to be carried by the referees, maybe Argentina can do it again. But otherwise, I think Argentina is going to lose somehow in the knockout stages. I think France can do it, and I think they are the favorites. But yeah, LJ, tell me, because yesterday it was the game, so I didn't really manage to listen to the press conference. Tell me news from our friend Kevin Walsh, and why did the market react the way it did?
News from Kevin Walsh. Yeah, we got kind of a more, I guess, hawkish reaction overall, right? However, that seemed to come down to the split of half wanting hikes, half wanting to hold or even rate cuts. Kevin Walsh himself was very dovish in what he said. Looking at completely rewriting how they've taken the data, what type of data they actually use for inflation, and also saying that he doesn't really care about non-farm payroll, right? About the jobs data. He wants to look at more like some of the other real-time data from the individual bodies, rather than non-farm payroll itself, because that's always like, it's lagged, it's got a delay. Yes, we get the headline number, the Fed makes decisions on that, but you really only know the true data basically 3 months after the number's released, right? Once it's like refined, all that kind of thing. And also, so yeah, a bunch of the other bits and pieces that they look at, it's just an old way of doing things. Like, they don't have a high response rate. It's all based on random surveys and this kind of stuff. It seems as though he wants to take some of the more nowcasting data, real-time data, probably start putting a bunch of this through like AI evaluations, try and integrate that more into the Fed. And then also the 5 sort of task forces that he wants to put together.
What is it?
So for like, communication, balance sheet, the data sources, productivity and jobs, and then inflation, right? And so pretty much anytime he doesn't want to talk about anything, he'll just be like, refer to the task force. You can ask the task force. And then people try and ask the task force, and the task force will be like, we're not saying anything. You can just you can listen to what we put out, and that's our opinion, right? So it's a complete lack
of communication,
of forward guidance and communication. Yeah, going completely away from that. So yeah, I got to say though, if they flip, my expectation they're gonna flip the away from core PCE and go more to the trimmed mean CPI PCE from like the Dallas Fed, which means we're already sitting down at about 2.5%, and the 6-month forward is at like 2.3. So this means very quickly we get into that 2% kind of target band for the Fed, and then hence rates start coming down. So yeah, we did get this more overall kind of like hawkish type aspect that came to that split between the committee, and then it's the question of Kevin Walsh is definitely on the other side, and so can he corral the rest of the Fed members to actually move along with him, or are we going to have this like split Fed the whole time, right? Which makes things very difficult. So hence we saw that kind of risk off element from that aspect. But I think that will start to reverse itself, and then also just we didn't get anything spectacularly dovish. He did just leave it open, and probably going to get more communication, like you were saying, in 6 weeks at the next meeting in July. Like he said that like 7 or 8 times. You know, he didn't want to give away anything this time. So we basically went into the current direction the market was already running in from like a technical standpoint, and just played that out. And that's about it. So I think it's pretty much wait 6 weeks and see what clarification he gives then. But overall, what he's setting up right now does look very dovish. And he also believes that AI coming through is going to be very disinflationary for the economy as a whole. And so you add all this together, rate cuts are on the horizon, not rate hikes, even though the market is now currently pricing in slightly more on the hiking side.
Did they mention something about the target, the inflation target, kind of maybe changing from 2.5 or something like that to maybe higher, or it was like to just carry on with the same target as always?
Yeah, he was very vague about it. Nothing like exactly specific. Pretty much just said gonna take a new look at how they measure it in the first place, and then hence obviously come up with new targets. Also wanting to get rid of like the dot plot. So exactly with that, like he just sees that as useless altogether. Which, to be fair, it's kind of not wrong. The dot plot has literally always just been silly, really. But yeah,
it's just a reference, right? Yeah. It's just. I think they're just trying to give some kind of reference. I think one of the main things from Jerome Powell and even the previous one, was it Yevon? How was their name? I think they try to bring more communication into the Fed, right? At least like for the average people to kind of understand a little bit what's going on and what they are saying. And I think he wants to go more kind of to the other side again. Like that is our job, and you need to get the data, and you're not going to be explaining in between the lines maybe what you're going to be doing in here. Fair enough.
So yeah, it's going to be very vague. He's going to be here for at least the next 4 years and probably reappointed again after that. So we're probably going to have like 8 years of Kevin Walsh being very vague, not really telling us anything, and you got to read between the lines of what they say, and yeah, it's going to be a very different time. So interesting. It's a big shift from traditional forward guidance. It's definitely much more like the sort of pre-2000s, pre-GFC days. So you get more surprises coming through, and it will mean that the data itself will probably be more impactful as it comes through, rather than just sort of the data's like, oh, okay, see that, see what the Fed says about it.
One second. Your voice, your audio. I could your audio start getting distant as Vittorio was coming in. Can you speak again?
Oh, did it? Yeah.
Okay,
so
your audio is back. It's back on. Sorry,
okay.
It's back on.
Each data point will be like more heavily scrutinized, because that's the best that we're going to get, right? Because we're not going to have that communication anymore. So we go very much back to all the individual data points probably being more impactful. We'll see a lot more volatility, whipsawing, more what's the word? Resources and input put towards like projections and that kind of thing. But yeah, don't expect too much from Kevin Walsh. He'll just say nothing. So,
but
refer to the committee.
Hi everyone.
How are you doing, Victor?
But I'm doing fine. Thank you for asking. How about you and Pedro? I see a feline creature passing by. Oh, very lovely and social. I was gonna say before I got distracted by that lovely cat. That what you're saying is actually music to our ears as traders, because if the policymakers are not giving clear, in advance indication as to what they're thinking about, what their considerations are, trying to get the surprise out of the market, out of the expectation, if they're not doing that anymore, then we get the opposite, right? We get more surprises. We get less transparency, or at least less insight into how they're thinking, what their considerations are. Because if you know their considerations, you can also sometimes, not always, you can already, given what they've said before, given what in the interim numbers have come out, you already can discount, all right, so they said, you can make some conclusion. You can say, they said if the inflation is above whatever number, we are likely going to be doing this or whatever other number. And if you don't have that tool anymore, that's, I guess, worst for investors. but because you have less information to make your decisions as an investor, but as a trader, it's actually music to our ears because it means that more people will get trapped, will not know for certain, you know, what to expect next. They may get, scared, get out of the market on certain moves, and we can see that. We can see when the market participants are in pain, and we can profit for them. Actually, it makes our job easier, more interesting.
Yeah, you'll definitely get more volatility, which, yeah, as a trader, you live and die by volatility, right? You need it, right? If the market's just sort of trending in one way or just sideways, like, you can't do anything, right? So yeah, it should breed a bit more of that. Will be very interesting seeing how that contrasts against the others like the ECB, Bank of England, Bank of Japan, that kind of stuff, which will still be communicating probably in the same way, right? But it will just be the Fed. So you'll have one portion that is communicating thoroughly and the other one that is very ambiguous. So it'll be interesting to see the back and forth playbook with that as well. So there'll probably be like a lot of moves to like fade into certain back and forth pieces, just like you're saying. Which, yeah, as a trader, very good. As an investor, difficult. Or not, or less favorable than prior. But yeah.
Yeah, it makes more challenging for the investor.
Yeah.
But changing topic a little bit, what happened to Portugal?
Okay.
Why did Portugal win? I mean, they have supposedly the best player in the world, right? What happened? Pedro, you're an insider of the Portuguese football. I know you're well connected with Infantino and high officials.
Let's messy style.
Please lay it out. Make me understand why did not Portugal win that match?
Okay, this is so funny. Pedro just got roasted about this before. So.
This is a picture. Okay, so this is our Portugal play. Okay, so a traditional team has some players in the middle. Okay, but Portugal played with a circle, which I have no idea what kind of tactics are these, and no one is in the middle. Okay, so I don't know what the manager wants to do. We have the best trio midfielder in the world with Vitinha, João Neves, and Bruno, even Bernardo, but no one was here. So I don't know how you can create dangers playing with this empty space in here. So and this was all the time. Okay, so this is what happened every single time. There's different pictures at different times that happen like that. If you see Argentina, for example, Argentina occupies all this space in here. Okay. Again, this is statics. This is space. Like in the market. Okay, just like in the market when you're looking for space.
Before you continue, are we seeing in one of those pictures below a selfie with Infantino and yourself?
Okay. Let's hide those ones. Okay, let's hide those ones. That's not supposed to be there. Thank you, Victor, for reminding me that this WhatsApp. No, that was the manager. That's the Portuguese manager. Okay, that's the Portuguese manager saying un Congo, which is do you guys also have this drink, bongo? There's a fruit, a juice. No. Yeah, that's kind of a Portuguese drink then. Yeah, making memes. Now it's full of memes everywhere. It's alright. But yeah, just like in the market, there is space, and these guys they just don't occupy the space.
I'm gonna be right back. 10 seconds.
Okay.
Be right back.
Okay.
That's so good. Victor.
LJ, what do you think then for dollar yen? Dollar yen now moved higher. Okay, so we are well above the 160. Do you think there's going to be any shift in here? Do you think you are going to still have a lot of pressure to move down?
Yeah, I think at some point this does reverse. Sorry, my screen's not there. There we go. So that long I'd been carrying for a while, got stopped out on that. I said to to Dirk yesterday, like considering hedging this, but at this point, I'm just gonna like if we hit the stop, we hit the stop, and then I'll look for some other kind of entry. But yeah, I would say like we're getting back up into that 161 type area, above the 160s once again. We could see a further push. We've talked about this big channel that we kind of have here. So the top of that channel is now approaching like 162. But I think somewhere in this top range, we will get some kind of reaction, intervention, that sort of thing coming through, especially once Bank of Japan actually reconvenes. UAID is out of hospital and back in good health, I guess. We'll probably get more commentary coming from Bank of Japan and the Ministry of Finance. So I think this is this is like a matter of time type situation. I can't see euro dollar going all that much further below 114. So I think we will get some kind of turnaround in the dollar in general. And the same thing here, like yesterday, we're talking about this kind of megaphone pattern that I always like. We're at the top of that on the Dixie right now. And so you tend to get that big push up and then a collapse down. We've got a few data points to come through, but I struggled to see the dollar actually climbing back into these 104s unless somehow Kevin Walsh maybe gives out some more details in the next little bit. And that is different to what we're kind of looking at now of how he's going to rewrite the entire data feed for the Fed. So
I have to. I didn't hear the last part of Pedro's analysis of and breakdown on how the circle pattern on the field wasn't very effective for Portugal. But I you know, Pedro, I'm rooting for Portugal as well. So I'm also wondering why that would happen. On a second note, you know, our brother or, you know, sibling of a team, the other Iberico, the other team from the peninsula of Iberia, hasn't made a good paper, hasn't performed well at all. I mean,
No.
0-0 against Cape Verde.
Cape Verde, yeah.
Yeah, I mean,
Brilliant.
nothing against them. I mean, I know they have a good team, but we're talking about Spain. Not being able to put in one. I mean, Cape Verde had a amazing performance. Kudos to them. I think they even though they tied, I think they won. To me, they won. I mean, that was a massive victory, right?
Yeah, it felt like a victory. Did you see the guy that bet $1 million on that game?
I didn't.
He lost it. Yeah, so one guy bet that Spain would bet $1 million, like to just make like 80K or something like that, and they lost 1 million because Spain didn't win.
Oh, that gotta hurt. I saw the goalkeeper actually cry. I mean, that was such. I mean, he cried with a tie, but I mean, it was such a massive win to tie against Spain and not being able to. Spain wasn't being able to have make a point, make a goal. I think it was very inspirational to see the underdog hold basically Goliath under control.
And the goalkeeper, which is his name is Vozinha, he's 40 years old, I believe. So he had around 50K. He had around 50K followers on Instagram. Do you know how many followers he had? Do you know how many followers he has now? Yeah.
Something insane. Yeah.
How many?
Yeah,
how many?
In 24 hours or 48 hours, he's now like on 10 million followers already.
Really?
Yeah.
What?
From 50K to 10 million, like just madness.
Wow.
that's
power
like, imagine finishing like the game, you walk off the pitch, you go answer your phone. It's massive, just like your phone just doesn't work. It's just bricked up like there's just so many follow requests.
I think there you know that scene, that very recurrent scene in Mission Impossible where the smoke gets out of the device that had the was it Mission Impossible or was it? I think it was, right? Yes. The when they get the secret message, the device starts smoking. I think something similar would happen to the phone of the goalkeeper.
Imagine.
Yeah,
I think
like the
24
locker
hours.
room would just, dude, it would just be pinging the whole time. It's like ding, 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 ding. You know.
But very
very
beautiful. I
smart.
mean, very beautiful for Cabo Verde, for what they have done on their first match. I wish them lots of good luck, and they keep on performing like this because very promising. And I hope Spain comes back, wakes up. I think they were not fully awake yet.
Yeah. Is a
Yeah.
the jet lag?
Yeah, the jet
So
lag.
I just wanted to bring things into balance. I wasn't wanting to roast Pedro. I was just amazed, that I didn't want to roast Pedro. Keeping things balanced. I'm rooting for Spain, and Spain has done I think even a worse, relatively a worse performance. So just to be fair to Pedro and all the Portugal fans out there who are asking why is Victor so critical of Portugal. I'm not. I'm just being observant. I'm just making observations here. How about Australia, LJ? How about Australia? When is their next match?
It's Saturday, I think. We're playing the US, I think, is the next game.
Ooh, that's a good
the
one.
US is, yeah, we got to beat them. They've been talking a lot of smack, right? And it's become this whole thing. I forget, what's that guy's name? Like, one of the commentators, and he was saying like, oh, US playing Australia, yeah, that'll be a layup, right? As though it would just be, a breeze and, easy points. And everyone's like, buddy. All right. Watch yourself. So, yeah, dude. And then after we played that, like, the first game against Turkey, dude, now the US is going like, yeah, maybe I think they're going to be the toughest in the group to beat. Like, it's full flip. So we're like, yeah, that's right. All right. We got to smash the US. That's all that matters, right? It doesn't matter how far we get beyond that, just as long as we destroy the US. Yeah. It's become this
There you go.
there's all these like chants and stuff now, like, yeah. That's funny. So
It's been sort of a vendetta now. You gotta win
Yeah.
this.
yeah. So we'll see.
All right.
We'll see how we go. I think it's Saturday my time. It's probably like Friday for you guys, I think.
Yeah,
Like the evening.
it depends on where we are, of course, but it is. It's going to be. It's a Friday here in Western Europe. It's going to be 9 p.m. on Friday, which for you is the early hours of Saturday. already.
Yeah. It's like 5 a.m. for me on Saturday. But I will be up to watch it. Gotta
Good.
watch it.
Good.
So, yeah. Yeah.
All right.
I will
ahead.
have to jump out as well now, guys.
Okay.
I've got some other work to get through. My internet's been playing up the whole day. So sorry about that, guys. We eventually got in. But yeah, because of that as well, I've got some other backlogged work that I gotta get to as well. So I will leave you guys here.
Thank you,
in these
LJ.
two capable hands. And Friday tomorrow, I'll see you guys in the Discord. If not, get ready for Monday with the 1v1 competitions coming up all through next week. And yeah, that's about it. See you guys there.
Good luck on your team, LJ. I hope they win by a large margin, and we'll come back and talk about it on Monday.
Perfect. All right, see you guys.
Take care.
You. Cheers.
All right, Samir. Samir joined us. How are you doing, Samir?
Hello guys, how are you guys? I'm here. Today also my internet was not working, so I just managed to get into the stream. I'm using mobile hotspot. Hopefully it is fine.
It's working so far, so good.
Yeah.
All right. So how are you guys? How are you, Victor? How are you, Pedro? Long time no see.
Yeah, I'm good. How was the trip? You went for a trip last week, correct?
Yes, it was an event. That was really good. Met a lot of people.
Made
And
a
the
lot
university
of money.
was really Yeah, there also, I was in a trade. That is a whole different story. But the crazy thing about the trip was, as some prestige university have some different kind of students in that university. Almost everyone was working on some kind of startup. We don't see in every university. So that was really a good thing. That really, I was also getting some kind of fire. I should also do something like these students. Almost everybody was working on some kind of startup. That was really good to see. So
Nice.
yeah.
That's
Very,
amazing.
very
Was it
nice.
kind of AI related? Like, do you think that India is betting a lot on AI? Like, what do the guys were doing? The students.
Yes, definitely. They was big into this AI thing, as those guys or those students was into tech.
Mm-hmm.
So everyone was talking about AI, quant, and all these things. So definitely, I think in the background we don't see it. We are just traders. We just see things around trading. I just see things around trading. So in the background, these students, they are upcoming future of a country, I should say. So a lot of people are focusing on AI, quant, and all these things. So we don't know it because I don't see it on social media, or I don't hear it from people. But in the background, on the ground, people are really working on this. I just came to know about this thing. So in future, AI thing, it is gonna definitely cover a lot of industry, like a lot of space. I should call it that way.
Mm.
That's
Yeah,
beautiful.
it's nice to hear that. And are you allowed to say what university that was?
Yes, it was IIT Madras. So it is one of the best university in India,
Mm-hmm.
where a lot of bright students have, you know, um, placed in very good companies, very good positions. So yeah, it is very renowned university when it comes to when in general we talk about universities.
Yeah, that's good.
How,
Nice.
how was their interaction towards trading? Like, did you speak a little bit about trading? Like, were they
Hmm.
curious about it? Like, some of them were trading as
Okay.
well, or not?
Actually, the discretionary trading, the trading which we do,
Mm-hmm.
almost like 10 or 20% of students was into this. Rest was
Okay.
really, focusing on quant side, how
Mm-hmm.
they can do trading with maybe AI or build a kind of model around it. So that I came to know about. And yeah, in my kind of conversation also, I said this thing, as in our trading, we have we have to optimize few things. In quant size also, they have to do the similar thing. They have to optimize a system according to the market. So that is the point that I gave them, which I think is valid. So as you asked me, discretionary trading, 10 or 20% I was doing, but other students, they was in finance, they was big into how they can develop a system that can that don't need that human interference that much. Of course, the optimization is needed, but that was really good to see. Like, people are working on this thing in trading.
Mm-hmm.
That's nice. And you were a speaker there, right?
Yes, I was a speaker. I just shared my journey, my hurdles, and yeah, a lot of the tech students I came to know, they are big in AI thing. A lot of question was regarding AI. So yes, I just came to know about it when I had a conversation with the students.
Nice, nice. Very nice of you to go back and to share your journey with those students. I mean, I'm pretty sure that would have been, or that was very inspirational for them, to see someone like you,
Hmm.
share and talk about the possibilities and the things, the successes and the pitfalls that you encounter in your journey, getting those big payouts. One of them, which was made while you were talking on the stage, you talked us the other
Yes.
day. While you were watching on the stage, you weren't able to check your phone, and at the end of the day, you check your phone, and you were like 16,000 right? Was it
Yeah.
something like that?
Actually, it was 13,000 and then I took another trade. Then it got to 16. So
Wow.
it was really good move. Um, yeah, I was really happy, after a very long time I that thing happened to a trader, You were like, okay, you took a win or whatever, but that was really in one trade I made almost like I think 10% because I was risking 1.5% and the risk to reward was crazy. I don't know, maybe there was some tweet or something like that. It happened in my favor.
Hmm.
So yeah, that was
Perfect.
really good. That I think that this is the reason I don't. It is just my perspective. I don't believe that much into fundamentals. I am purely a technical guy. So I believe if you have the right bias,
Hmm.
fundamentals make and push the price in your favor only. It is just the fuel to the market. It is just my belief because I have seen this thing. This thing also have its own probability, but it is just my point of view. I think it's okay, but you have to be wise. You should not enter right at the news or the news event. Then it is pure gambling. But if you are in the trade, as we discussed yesterday, we
Hmm.
touched this topic. So I think it is really important to see. You should not enter the trade right at the news event. But if you are in the trade, it's okay. You can hold the trade. I do that. So yeah.
Good. What are you watching or what are you expecting on NAS today, Samir? Since, or maybe
Mm-hmm.
I should ask you, the Dow Jones, right? The US 30. What are you expecting? Which of the two will you choose to trade today? And do you
Mm-hmm.
have any direction you're favoring?
Um, Before answering this thing, I already took one trade. I think it was on, oh yeah, it was on US 30, but the setup was similar only. I could have taken the same trade on NAS or the US 30. Maybe Remy can share my screen so that I can share my thoughts. Okay, this is NAS. This was the demand area. Price tapped that. I didn't took this trade, but if you look at US 30, this was demand area. Price tap here. I managed to take my entry here because if you guys follow my system or you come to the stream every day, I am big into these impulses and correction type of things. To me, this was impulsive move. Okay, I don't know why okay, now it's good. To me, this was impulsive move, and look at it. It was just correction to me. So I was expecting another leg to the upside, and this was my reference point that yes, maybe we can get a pullback around this area. So I just enter the trade here. If I go to the 5-minute time frame, let me delete everything. And if you closely notice, this was just a downwards channel type of thing, and it came to that area which I was waiting for. I executed the trade somewhere around here and I exited here. I think secured 1:2. So this was a very good trade. And again, coming to the experience thing, I have noticed in London session these type of things are happening like almost to the perfection. Of course, it doesn't happen in every market condition, but this market condition, this is really working out well. I don't know till when, but I am taking full advantage of this. So this was the analysis behind this buy setup. But if we talk about today, we already have a very good impulsive leg. We are on the supply. So the trade is right here. If I was not in here, I would have executed sell here, putting my stop loss here. I would have targeted these areas. So buys for me is sell. And the trade is right now. If I was not, you know, I if I was not trading here, I definitely would have taken sells around this area. And I'm not really looking at any time frame. 30-minute is making most sense to me, and it is giving me confidence. Why? Because I have traded these kind of legs before. So that's why I'm comfortable positioning myself here. Stop loss can be here and take profit can be here. So this can be the trade idea for today. If we break to the upside, then maybe this will be some kind of demand and I can shift my bias. So these two trade ideas for now. Right now it is sell, but if anything changes, if we get impulsive leg to the upside, I don't mind buying here also, some kind of a demand area to be established, waiting for price to pull back and I can act upon it. That can be a good trade. And yesterday was a big lesson for me. As I mentioned, this was the supply area, but as price was in the downwards channel, that's why we got a breakout to the upside. So I will not trade these kind of legs from now onwards, because previously I was entering buys on these kind of legs. I think I missed this kind of information and I paid the price. I took a loss here, but it's okay. But on NAS 100, it was a beautiful trade. I think we took the trade. Okay, let me go to the 15-minute. I still remember there was a fair value gap. I think on the 5-minute it was. Okay, this was the fair value gap where, if you guys remember, I was planning for shorts and took the shorts right here. Stop loss was just a little bit above these areas, just slightly skipped from the stop loss, and I just secured my trade right here because then there was a news also. So this was also good trade, but to be honest, this was this was not A plus setup. So I will not take these kind of trades also, but just for the stream purposes, I made the profit. So I just risked here, and also it also covered my US30 loss. But anyways, for now, sells on US30 looking decent. NAS 100. Okay, NAS is looking good also. I think we can easily tap these fair value gaps today. So for me, today's bias can be bullish. And where I would like to enter, let's find out some areas. Okay, this can be the first area where I want to get involved in bias. Let's find if I'm missing anything. 2 hour. Okay, this can be the second area where I can plan for buys. Yes, we also liquidated this area. So this is a very solid demand area for me. I definitely will look for some buying opportunity here. We are like 24 minutes away from the NYSE open. If price tap this area right now, I don't want it. I want the price to go higher and NYSE opens, tap here, then it will be a good opportunity. So this is also the point. And similarly on US30, if this was NYSE, this setup would have been little bit more high probability as we are before the NYSE, trading before the NYSE. So this becomes little bit risky here. Although this is a good selling setup, but just because the time is not right, so you can avoid this setup. And if you get another leg to the downside, it's okay. You can trade this leg. But if you get impulsive push to the upside, then definitely this leg can be traded. Right now, I will suggest just wait for some time. Let's see where NYSE takes the price, and then we will take the action. I think today can be a good session. Why? Because we have decent amount of range. This is the range, this is the range. So definitely we can target these kind of areas. So NAS 100 looking good for buys around this area. And US30, let's wait for US30. I want either push to the downside or push to the upside, and then we will trade in that push, in that momentum. So that's my plan for US30 and NAS 100. Now let's see what we get. Very simple. Story is made now. We have placed the pieces in the puzzle. Now we only have to wait and see how price reacts on these kind of areas. And then all we have to do is take action, stop loss or take profit, whatever it is, we have to accept it. So that's my plan for today.
How about you, Pedro? What are you expecting, or what are you looking for on which asset, actually, before I ask you about NAS? And the other question I have, did you catch any of that move that we had prior and after the FOMC meeting statement, I mean?
Yesterday?
I didn't took the trade.
Yes.
No, I was, to be honest, because I was watching Portugal, then I didn't really focus on the market afterwards. It was unfortunate of the timing. So I didn't really pay attention. It's good to see that price finally moved and broke some ranges, even on the dollar, or a little bit on US indices. So US indices, my bias for this week was always to close eventually the gap. So because the market opened with a gap to the upside, okay, and we finally close it. Both in here on the S&P, Nasdaq as well end up closing the gap. Even the Dow almost got really close to close the gap in here, even though the Dow is actually a bit more bullish because it's been breaking all-time highs. Now, what can I see in here? Actually, price already reacted from the upper edge of that range with this level, so that's interesting. We still have maybe the gap to close, but the level itself where price already reacted is a good one. Now we do have liquidity. Okay, I'm not sure if this was enough. This was already enough on the lower time frame to kind of work out as a Quasimodo, because we did have this slight move above this high, this left shoulder, and then we had a new low. So that was already kind of a Quasimodo. So I'm curious to see how price may react within this structure, or if price actually then just going to use all this as liquidity and then potentially try to push a little bit more to the downside or not, or actually use this level and try to push a price even higher. When I look at yesterday's move, we had a big move to the downside, correct? So we had this big move down, price broke structure, came all the way back, and already reacted somehow from this structure. So this one, at least the lower edge of this level, where am I? 1 second, 5 minutes. The lower edge of this zone in here has already reacted. Maybe you have then the upper edge of that zone. This is rectangle. We have the upper edge of this zone in here that's maybe still fresh. So if you do want to go and look for any potential sell, maybe I'll be looking at a little bit higher, 52,145 on the Dow. So it's either maybe somewhere around this level, either just a small fake out and price comes back in and go again, or if price actually then starts sustaining this level, then I'm looking for price to go at least towards this zone in here. Okay, so it's either just a quick move with correcting liquidity from these tops and see straight away price rejecting and back into this range. That case maybe can be a sell. Otherwise, if price kind of starts sustaining this level, then this is more of a continuation until eventually price push there. That's going to be my thought process, and I'm actually curious on your take, Vitor, in the sense that do you think this is going to be a Quasimodo, or for you, is this a Quasimodo pattern or not? You can be seen a little bit in different time frames as we speak. Then, of course, NAS. NAS, I would like it to go a little bit higher, so I think we may have still this range at around this level in here that price could visit and now collect all the liquidity from above this level. So maybe just continue to go a little bit higher, and then I'm curious to see how price may react from here. Either I'm expecting some reaction from this level and then price to come back into here, and then the question is going to be either this breaks and price tries to go again, or this kind of holds and price now tries to go higher and targeting the highs. So that will be a bit more of my expectation. This move, I'm quite confident it's going to happen. The follow through, that's the question mark in here. But it is possible to find a trade between these two levels once price reacts from somewhere around here. Yes, and the reason for that is because, again, this low kind of just close the gap, and it may be a valid low within this demand zone. Sorry, Victor, tell me.
No. I was just burning, had that burning desire to place that question we have in the chat for
Yeah,
all
I
the
can see that.
traders who are very interested in watching, concentrated on the charts. We have this question coming here to Pedro. What is your opinion on this setup? Is Brazil going to be the champion or not? What
No.
about that?
No, just a blunt no, like straight face, no. You don't have what it takes. I think it's lacking speed in the middle, and I don't think you have enough quality to make it. Just comparing with other teams, I don't think it. But then again, it will.
It's Brazil. It's Brazil.
It will depend. It will always depend on knockout. Like I don't know at this point who's going. What are the games on knockout phase? Maybe you get an easy run, and you can go all the way through the final. Then in the final, it's a one game match, so everything can happen in the final. But it depends. Maybe one of the teams are going to get really difficult games during knockout phase. Some others are going to have an easier path. Yeah, that's we don't know.
I saw the game England played. It was a formidable play. Formidable
Yeah,
match.
it was a good one.
That was a good match. France had a good run as well. Argentina played very, very well, I think. So there's a lot of contenders for that cup.
Yeah, I think yeah, England, Croatia. I think it was the only European game where both teams were European. I think that so far any European team is struggling a little bit either against Africa or Asian teams or whatever it may be. I think there's been a little bit of a struggle, and I think that's quite normal for us. At least maybe it gets one game to adapt or something like that. Usually, when you go play against teams from a different continent, we do struggle. At least on the first game. If you see Spain, you see Netherlands draw against Japan, Portugal, Congo, and even Switzerland or something like that against Qatar. I don't know. There's it's just different. We are not used to it. They play different speeds, different type of culture. It's just a different games. But yeah, just to finalize in here on US indices.
You asked me a question about the quasi
the Dow.
on the Dow. So let me check that out, because we have a question as well on for the two of us.
Yeah.
How we trade the quasis. Maybe we can take turns and explain a little bit how we use that pattern. In my mind, the best pattern, the only pattern you need, well, not the only one, but the best pattern you can have to trade, period. Let me go to my screen, and it was a US 30, and let me go very quickly from the higher time frame from what I see. Then I'll go to the quasi, or the possible potential quasi that you mentioned. Supply area we left behind. We don't have anything else on the weekly. We are just created actually last week, that area that we could be using if price were to come back to retest the broken level from February the 9th. But other than that, there isn't really a lot to say. I mean, we have had a breakout retest, and sometimes we come back to that retest level another time, another week, and another candle. That could be something we could be looking for a long, that is, as we come back to the order block that was created as we pushed out of it on the daily time frame. Let's check again. So we left a bullish structure. That's something great to refine the weekly structure that we just mentioned. This daily is already gone. This one as well. So basically, there you go. That's the break retest on this time frame. Retest for a second time, much deeper. But you can see already what it went for. It went for that level, right? Came shy of it, and then went back to the in the bullish order flow. What else do we see? We did hit something interesting, right? We had some, after we had that gap, I should check, after the gap, because that was the gap from Monday. Here doesn't look as remarkable as it is on NAS or S&P, but it is there. What else do we see? So we have a supply zone that was just created. The question is this enough? And that was your question that you asked. Is that enough for? Yes, it is. I would say on H4, this was the neckline, right? That's the area that you wanted to break. That was the break of the structure. That means that if the market breaks this, that's the first sign the market could be getting ready for a reversal. And if that wasn't your neckline yet, this certainly would be, and it broke both of them. So certainly there is a beginning, a door opening for a reversal pattern. Of course, it's only, on the H4 and the daily, there's a bearish order block, but it hasn't been confirmed yet. So what do we see then? I would be interested when price comes back to the upper order block on the H4. It is a quasi, so the answer is yes, and this would be my entry order block on that quasi. I would be looking for price to come back to that area, and then look for perhaps a swing back to the first swing low or the whole structure. And you could already see it. If this is were to happen, it tells you that we're likely going to be looking for lower levels as well, and closing that gap that we haven't closed on the lower time frame completely, the one you mentioned, Pedro. So yes, but I'm not interested in the current level, although I do see an outside bar there right here. So there is that level could be also interesting for a short, depending on if we are able on the H4 to close above it. Once we close above it, then I will disregard it and just I will just wait for this to be the area to be going short. And on the opposing side, you actually could look for the level. I mean, look at the lower wicks that was created after the move. And again, on the H4, tells you that the buyers are not sitting still. They're also trying to get ready for that push. And yes, you can see on the upper wicks that they have been not been as successful in getting traction as they get to this area. So if today they start and are able, for example, even if they don't break the order block, but they close above here, that could be a beginning for a push to the next level. So those are things that I would be looking for. And you can refine that area further, and I would use the H2 in that case. So this becomes then the area of interest based on the H2 and H4, which means that I would be waiting for price to come here. I could just put actually that is what I do. I put alerts there and just wait for them to be hit. Then I start looking for the short. In the case, in the case of the tighter the area here that we have, there is a nice H1 area. That would be the area for, the test for the buyers. Are they strong enough to break the structure? It's very similar when you look at the NQ. Perhaps I can show you a little bit about that as well. They have an area that changes everything. If we're not able to break through, then even if it's a little squeeze and come back and start doing something like that, it's very suggestive that we might not have seen the lowest point yet in both indices. And on the 30-minute, actually, I don't need the 30-minute. I could use the 30-minute as well for more refinement, but it doesn't really help me. There is one area here, and actually it goes all the way, so it does refine it a little bit. But perhaps the 15 doesn't really help as well. Well, it does pinpoint it a little bit, but it covers most of the order block anyways on the 2 hours. I would just wait for the market to get there. And actually, let me see if there's already some entry order blocks on the execution time frame, which in my case is the 5. So we have 1, 2, and let's zoom in. Is this too big of a structure? And it is. So that was 2, 3. So actually, we do have nice areas here that I could already put my alert to trade them as we get to them, right? So we have 1. This is the second, if I counted correctly. We have and the third was already gone, so that's not even going to be used. It is an entry order block on the 5-minute, but it's not useful. So these are the 2 areas, and this is where I would be initially looking for areas to be retested and to get the point whether or not they're going to be reacted, or the market can just create another structure and have an order block, something like this, and that also I can take for the short if it's positioning as I'm not expecting, but being ready, prepared to, in the case if that's going to happen. On NQ, let me do that very quickly. Yesterday we had we talked about it, the FOMC, it makes the market, move. I mean, it's one of the biggest news that comes out, releases, numbers or statement in this case. And boy, did the market move. I was watching both. I was watching Portugal and the market. It was a bit difficult, though, I have to say. Let me see. I wanted to send you a message, Pedro, asking you which one are you watching, because it's Portugal. All right, so on the monthly, there isn't a lot to say other than, the current candle hasn't been closed yet. The previous candles on the monthly are very, very completely closing, well, almost completely at the highest point. That means that, buyers are completely in control for those months. And this one, even it's 18 days out of the month, a lot can happen still. But this is looking quite nice. I mean, that lower wick being so big, that means that buyers are certainly not out. They're not out of breath yet, and they could push price much higher. At least on the monthly, that's what it's telling us. On the weekly, we're seeing that same with the Dow Jones. We have a reversal, or not a reversal, a supply area that was created on the daily. And we had some very cute little interaction with the monthly high of the previous month's high, something we discussed as well. And we went back as we created that order block, went back to a demand zone. We did squeeze it and push back. That's looking good for a continuation to go long, basically. And the fact is that we did close the gap, at least if you consider the gap being from the highest point from Friday, right? Not the close, but of the highest point. We did come back and close that gap, and came, you see that very often price needs to close the gap and then continues in the direction of the gap, right? The bullish gap that is. Those are indications that, looking good for NAS continuing higher. Other than that, we don't see any structure in here, at least not on the daily, to indicate one thing above the other. On the 4-hourly, we did have a beautiful quasi. And for the person who asked us, how we trade a quasi, I identify an established uptrend. In this case, this would be the left shoulder, the neckline, the head. It breaks it. I wait for that, and I wait all the way as it comes back to the area. And this is the quasi. So left shoulder, head, neckline, lowest point of the pattern. And then I identify, as price is going up, I identify the levels that I'm interested in. This was one on the H4, even though it says H2, it's actually H4. And above here, there was one big area. And that's exactly where the market went to and then reversed. It didn't get to the initial area that I was interested in, but it did start it, and I did catch a few moves, but it wasn't based on the quasi. It was based on something smaller, something intraday. And then we had yesterday. Yesterday was a nice trade, actually. It's high impact, so most people, well, not most people, but a lot of people would just sit on the sidelines, which is actually a very good thing. But there was certainly a very nice trade from that. I got stopped out first. If you're interested, you can watch back the stream from yesterday. While you're switching back to that stream from yesterday, hit the like button on that one as well. And so we, let me go back to the 15 minutes so we see a little bit of what happened yesterday as we were, discussing this on our stream here. So the market created the opening range, which was these two, right? That low, that's the candle basically, and the market gave us a initial breakdown, and we talked about that. I think Samir, we talked about how the market is, that to us, or to me, that at that moment indicated that we're likely, right, the market is getting ready for a push down. And I was ready, or maybe I should use the replay here, just a few candles, right? So there we go. So that was the opening candle, and then the market, very clearly was favoring to break down and continue lower. And I said at that moment, I'm looking for the market to either come back and retest something it left behind. And there was a couple of order blocks on the lower time frame, maybe on the 5, maybe on the 3 or 1. But ideally, the area that I was looking for was that 15-minute outside bar, or the order block created by the outside bar that was left behind. Most of the time, it doesn't come back as deep. It gets something roughly in the middle and something not even that before it continues lower. But yesterday, that did happen actually very beautifully as price was coming back. I got in on a trade here. My stop above these areas got stopped out, and then the market went to the area. As it went and came back on the 1 minute, actually I was on the 15-second, I saw the return back to bearish after sweeping that high, and I got in that short, and I capped it all the way it was a gruesome position because, or a very uncomfortable position, I should say, because price, shook me around for a long time. But eventually I held it in retrospect. I would close this position earlier. I didn't, and it came back all the way back to my break even. This is something I do on EU all the time, but not on NAS. On EU, I leave the trade to breathe the whole area, and I only put in my break even, bring in my stops to break even, like after, at the end of the day. During the session, I don't do that, but on NAS, I do usually break in, put in my stops to break even. I didn't do it yesterday, and thank God I didn't, because the market was, very impulsive. News came out, and this was fine still at that point, and we had the news come out, and we had a big spike. That was, I thought, all right, this, I got it. I was able to hold it through the news, and this went in my favor. I could just hold it, and it's likely going to come back, maybe to retest that order block and then continue lower. However, price didn't exactly do that. Went all the way back to my entry before it eventually went to my target. That was what a roller coaster. I wasn't really watching tick by tick because that's part of my management, passive. But these are the reasons why I don't put a lot of it. And EU, I don't bring in my stops to break even. Because this happens a lot on EU, not as much on NAS, but in this case, I didn't bring it in, and good thing I didn't. But eventually, hit profit taking at the end of basically at the end of the day. But what a ride was it! All right, let me continue for today. Let's see here. So let's cancel that. So after we target, this was the initial target based on a usual expansion of the day yesterday, but my target was actually based on the H4. For those who were watching on Discord as well, right? We were talking about that level. We want to be, targeting the next order block on the same time frame, but of course in the opposite direction. And there was nothing else before the gap, but there was this order block waiting to be retested, and price went basically there, and then it changed direction completely. And that's the advantage of trading price action. You can, not all the time, but where the market is likely to react and not before it changes completely. It's not random. All right, so the market opened. So let me quickly go to see what's happening on the open. The market is, and then I'll switch to one of you guys. Let me see. So we went above the levels. Actually, took out the high already, and this is the opening candle, and this is going to be interesting. How is the market? Are we going to hold steady? In the open. That's not the tool that I was looking for. Are we going to hold steady, maybe, make a range like this, but eventually do something, indicating that the market is not accepting lower lows, meaning creating higher lows, and then eventually break out? Because that's what it looks like it wants to do. Or is this going to be something, of a fake breakout and then eventually turn around? Because if you look at it on the H4, we are in a supply zone right there that we're squeezing currently. You look at on the H1, there isn't a quasi. If the H2, there isn't a quasi. So actually, that is a reason to, well, not expect it, but it gives the probability of continuing higher, actually a higher probability, because we don't have a reversal pattern, which you should. There's no quasi short. So that's going to be interesting. I'm interesting to see how the market reacts to that high. Are we holding it, or are we just rejecting the breakout? That's on my side on NAS. Back to you two fellows, you two gentlemen.
Yeah, Samir, are you
We
looking for a trade now after the opening?
NAS is looking interesting. So it is pulling back to the downside. So I think this can be a good area to look for some longs. Going to the 1 hour. Okay, 1 hour is making sense. 30 minute is making sense. We have a small fair value gap also. If you can see, that can be added as a confluence. 15 minute, yes, making sense. 5 minute. Do we have any trend line that we can take a reference from? Okay, this trend line maybe. Okay, once it touches this trend line, that can be a buying trade for me. I'm looking for that fair value gap to be filled on the 30-minute time frame. I think it was on the 1 hour also. Yeah, on the 1 hour you can mark it. Yes, NAS is looking interesting today, better than US 30. US 30 is also looking good for longs, but NAS has a little bit more confluence. So I think today's focus can be NAS. Which pair it is? It is NQ or NAS 100, depending upon the markets you are trading. Future side, it is NQ. CFD side, NAS 100 or US 100. Yeah. Okay. I'm just gonna leave a risk to reward tool, something like this. I would like to get involved in a little bit more deeper. Maybe here
Market is
stop loss will
tanking
be.
on NQ and NAS or NAS.
So are you looking for a shorting opportunity on NQ?
Not ready yet to.
Okay.
I'm looking. Yeah, I'm not ready yet to take. I'm not sure yet. I see. If you look at the H4, it looks as if we're getting ready for a continuation. We did squeeze the order block already, the supply zone, and we did create a fresh H4 below us. We went to retest it. It looks like it wants to continue higher, but I'm still looking for more reasons, more arguments for that case, and so I'm gonna come back when that is the case. All right. So maybe I'll show what I mean. On the daily time frame, there isn't anything.
Okay.
On the 4 hour,
I'm
we
in the
do
paper
have.
trade.
You're in.
I'm in the paper trade. If that win was not there, the morning one, I definitely would have taken this trade. So I will just consider this as a paper trade for me. So I would have taken the trade right here, stop loss placement as I mentioned in the analysis. So let's see now what price does.
And if anyone is wondering why is Samir paper trading, isn't he a successful trader? What the hell is he doing paper trading? Well, Samir is patiently waiting for his 16,000 payout and doesn't want to touch that payout or that account until the payout. So he's gonna
on the future side also that is the point number one. Point number two, on future side also I secured a win in the morning. So if I took more wins, my consistency score is gonna go more higher. So I don't want to make huge sum of profits when I can manage taking some small wins, and that can be added over time. So that is the reason this is a paper trade. But I would have taken this trade 110%. Impulse is there. We are seeing a pullback, trend line, VWAP, all these things combined. This is what my strategy is, and I would have taken this trade anyway. So yeah.
Samir has luxury problems. He's concerned making too much money. Anyways, coming back to what I was saying about NAS, why I'm not ready yet. We are in a supply zone, right? I should be looking for a sell setup based on that. However, the market, what is it doing? Creating the opposite structure within the supply zone. That doesn't rhyme. That doesn't fit well with the, it's giving us mixed signals, basically. And if you go to the H2, there isn't any quasi in here to be found. Yes, there is a area here, a supply area, a bearish order block, but that has already been consumed here. So that's no reason to go short to me. So if I go back on, and there is one actually one reason here. Let me mark it. That's on the H2. All right, so there is that's nice, but why is the market? This could be a second reason, the overlap. But why is the market squeezing this much? So that makes me doubt a little bit whether or not we are. I will have to wait for the close of the candle, because this looks as if we're getting ready for that continuation. And if you go to if you look for the buy side, you have enough reason. You know, you look at how the market, we created an outside bar, we went back to retest it, created another order block, and we're currently retesting that again. So that tells me, you know, price action in this section, is telling us it wants to continue higher, but the whole pattern looks like we're gonna continue lower. So we have opposing ideas here, and this is going to be, it's the open, right? It's a lot of the time it's the open that's going to give you the eventual decision of what the market decided to do. So where is that level? What needs to happen before I can be able to start looking for the short? Well, we have 19 minutes. Well, to begin with, if we can close in 19 minutes below that line, that would be my first indication, and the confirmation would be if we can close below that swing low, because that would be the invalidation of the bullish structure, right? That's exactly what we need to do. It's an hourly, so it may not happen right away, and by the time it happens, you are probably a little bit late to get into the short. But hey, maybe it can be a little trade still, and I would be able to go back to, let's see, do we have something on this time frame that we can use? Nope, there was a 30-minute quasi, but that 30-minute quasi was invalidated. See, that's bullish again. That's giving us mixed signals. So the bullish proposition is still quite strong. I would say the market is kind of 50-50 basically, and if we switch back and starts creating bullish structure again, I think we are going to have an update today then. But we'll have to see. Maybe we'll get more information by the end of this hour. Pedro, what do you say? We go back. We go lower. We break out.
Yeah, I'm curious. To be honest, I think we could. So the market basically did a little bit of what I was saying, which could be taking the liquidity from this top, and then the question mark, it would be definitely how price would react around this next structure. Which means if you actually continue to hold, so there was maybe already a quick scalp to happen from here. Okay, as soon as price maybe start breaking below these lows in here, maybe there was this quick scalp to happen, and now for me it reached the first target, which the first target it will be just the last low that created this move to the upside. Price now is reacting from that level at the one zone, and I'm curious to see if price actually wants to now continue to go higher and eventually go a little bit more into the next zone that I mentioned, which would be maybe 30,000, also 30,500, or if it's already ready and if you start breaking below this level, then I think we can do something like this and start targeting maybe something a little bit below there. So for me to be more of wait and see now within this structure how price wants to react from here. I could say I think the Dow, which somehow is kind of around the same structure. So basically all the US indices reacted more or less the same way, took liquidity and still kind of trading within this structure. So that's something that I'll be paying attention a little bit. Another pair that actually I'm quite curious is the dollar CAD. So dollar CAD, as basically as everyone can see, since the beginning of May, it reacted really nicely from this low, so we have been overall bullish on the dollar CAD, and the reason for that was literally this was, in my opinion, a break of structure from this top. Price just came all the way back to the extreme, respected the low, and since then started to trade to the upside in a really clean move. Basically, we have a clean channel, upper channel that dollar CAD created, and yesterday with FOMC, which we just spiked through it, and now actually is trading above this level. But now we are approaching these tops. We are reaching at the extreme of these tops, and I'm going to start paying attention to see if there's any type of reversal. Even if price goes a little bit higher these tops, I think eventually we're going to have a little bit of a squeeze again. This has been many days in a row just moving to the upside. This was already a big squeeze higher, and I think we're going to have a little bit of a correction to look for, and maybe in the more time frame, that's what I'm going to be paying attention to. But just to give a little bit of a perspective on the higher time frame, I think I'm still a little bit bullish. I think price made this move, start breaking these tops in here, indicating that eventually wants to go higher, just squeeze a little bit more, get really to the edge of this low, and now kind of creating this reversal pattern, and eventually I think price will go above these highs, and maybe somewhere around this level eventually going to have a bigger move down. But if we start paying attention a bit more into the lower time frame, we start having a little bit of a pause, price still kind of squeeze a little bit, and now I'm going to pay attention to see if price does manage to break below this structure. Even if you squeeze a little bit more into the lower time frame, just 1 second, Peter, we may have a little bit already of a lower time frame break of structure, but at this point the target is still within this level, so it's a little bit of a small space at this point. But if price then all of a sudden starts breaking below this, we may even have now proper Quasimodo pattern that we can maybe try to trade from and try to push price back into this move that it was basically the lows of yesterday's move before the FOMC. But again, we need a little bit of patience, because these lows definitely need to be broken. And again, if these lows kind of align a little bit with this upper channel that we have, but the upper zone, upper level of the 1 second, this is one, this upper edge, and then maybe we can come back into this range again. So this is something I'll be paying attention, to be honest, on dollar CAD, to see if you do have those opportunities.
If you go back to the, I think it was the hourlies, or maybe it was the daily. Maybe it was the daily, the 4 hourly. Yeah.
Yes.
Zoom out a little bit more. Do you think you mentioned there was the supply zone higher? Exactly. There's a supply zone higher when it breaks out. Exactly. That supply zone. What do you think is more likely to happen, and why? Do you think, because I see this? I'm expecting I would expect a correction as well, but do you think that correction will come before or after hitting the supply zone above?
Basically, you mentioned after taking these highs or still holding these highs. Is that the question, or are you looking already towards this level?
I mean the level to the left. I mean,
yeah.
Do you expect the clean breakout and then we will be correcting for a much bigger correction? Or do you expect, or do you think, is there anything you can say, is the market already perhaps, ready, ripe for a correction back into that channel, and maybe hitting that breakout, the previous breakout that they had below there, exactly there. Exactly, we come back to that level, and then we go to the supply zone above, break out and go to the supply zone, which is way higher. Is there anything we can say?
For now, I'll be looking to see if price breaks below this structure in here. I think then can open the door to try to go into that target that we just mentioned on the daily time frame, basically correct all the move from the FMC, and then potentially we can go try and break the highs and try to go higher. The only thing when I'm looking at this daily or 4 hour time frame within this supply, because if you zoom out a little bit, even maybe let me just check the daily 1 second. Yeah, even on the daily time frame, and then we can go into the 4 hours and so on, we can see that this is not exactly just a clean move, right? So we broke away from this level, but you can see already 1 candle, 2 candles, 3 candles, and every single candle is big wicks. This is a big wick, this is another big wick, all the way. So basically price had been in a big battle in between these levels, all the way before it finally made the decision to just resume the move to the downside. And when you start looking into maybe 4 hours or 1 hour time frame within this structure, we need to try to find out where are the fresh orders still within all this move in here. 1 point of reference, of course, is even those lows. Okay, so basically this level of support resistance, and it's kind of a little bit in alignment with this level as well, which it looks like it was a demand zone that price broke it, but in reality didn't just break it through completely, because you can see there was still a little bit of a reaction from this level before price actually break it. And now we have this week and we have that one, and I think there's maybe a little bit of a fair value gap. If I can just try to move away all this, I think there's a little bit of a fair value gap between these highs and the next zone. and maybe that can be a zone that price can eventually explore and go a little bit higher into the next one. Let me just see if price already reacted from it. Well, actually, price already reacted from it in here. So forget about what I said, because actually price already reacted exactly from what I was looking for. So we need to look a little bit higher. Okay, so basically there's initial reaction. The price actually already created and reacted quite nicely, actually perfectly from this level. So now maybe I'll be looking a little bit higher, since this level has already reacted from, which are those highs that we have. Yeah, that we have in here. So yeah, now I'll need to investigate all the way out. Then we already have a big wick in here. Yeah, who knows? Because this looks a lot compressed to me. As you can see, as price was moving to the downside, even on the 4-hour time frame, price already creating these big wicks before dropping. So we'll see. But just by nature, because we have such important highs from this level, even a double top, I think you're going to have some liquidity grab, and price will, after breaking, is going to find a way to retrace before maybe trying to resume the move to the upside. And I'm going to be looking for that in this case. But to be honest, within the supply, there's not exactly a totally fresh level that stands out to me. I think I'll need to go maybe into an hour time frame, 30 minutes and so on, which I think I need to do that on the MT4, because I don't think I'll have enough history on TradingView to go all the way back to check that. I don't know if I have 30 minutes in there. Do I have 30 minutes straight in there? Yeah, I still have it. That's nice. But yeah, this requires a little bit of time now for me to be looking at it. Yeah, that's a little bit how we look at the zones themselves.
I think it's a great opportunity. I mean, it's very technical. The market is very extended. The higher time frame, the daily, is looking very bullish, but at the same time, on the lower time frame, it looks scarily extended, meaning, it can quickly, as quick as it jumped on that FOMC, if it gets correction, that could be a quick move back into a correction zone before we continue later on. So it's very interesting, and I like that, because the more people, the more challenging it is to read the market, the more people will get trapped, the bigger the moves will be. So
yeah, that's actually one of the trades. If you just look at it all the way through, basically we have a couple of dodges in here. This is the only bearish one, even though it's still kind of closed not below the previous low. Everything has been bullish, even all the way here, which if you have one bearish candle, another dodgy attempt to go lower, doesn't really go through. So this is the 1st of May. If I start counting all these candles, maybe like more than 20 candles that are bullish. And now is a little bit in this compression move, but always managing to go higher and never to go lower. And now have a big squeeze. Like, so usually this big squeeze can signalize the end of it, or at least some kind of correction before price goes higher, which can be kind of not the normal. Like, I think average people that are looking at this candle and they think, okay, big candle, price is ready now to go into the next phase of bullish market, but usually it's kind of the opposite. This is usually kind of the last squeeze before corrects until eventually tries to resume. And this is something that I like to look for. You can see it exactly here. Price kind of went down, a little bit in a choppy way. Finally, really bearish, strong bearish candle. It looks like, yep, price is ready to just continue. Nope, actually start reversing, and since then reverse to the downside.
It's a contrarian sign.
Yeah, this is more kind of a retracement trade, not a big reversal. I'm not looking for price to now all of a sudden squeeze all the way and come all the way back. No, at this point it will be just more of a retracement type of opportunity, come back into this level, and then we'll see how price react. And these are quite high probability trades that you can try to look for. And of course the dollar can help with that as well. Like if all of a sudden the dollar actually starts showing a little bit of a bearish sign as well, and that can be a good correlation to combine with the dollar cut in general. So you can combine a little bit to see what the dollar X is going to do.
Yeah, it looks very interesting. At the same time, NAS has put a low on that opening range and is hunting the upper range again. Maybe you can take a look at that on the 1 minute and zoom in to see how the market is coming back since the open. Created a low right there, and then is now coming back to retest the structures it left behind. That breakout looks very feeble now. But it's only the open. I mean, lots of things can happen. This can still break out and continue higher. It's positioning itself for a, well, the lower time frame. It looks like from the open, it looks short, it looks bearish. But if you zoom out, you see that it's look at that. You zoom out, you see that it's actually not bearish at all. It's just retesting these previous highs, and it's still holding. So there's a case to be made from both sides. I could be selling the top when it comes back, right?
Yeah.
That upper area where you indicated with that line, and I could be going long as well when we go to the lowest, the low of a couple of minutes ago. Exactly, go long from there makes a lot of sense. We're looking from the left. That's the area that got reacted. So that's where you want to be going long from. And the expanding, looking further down in time, it's good. It's a great level to be. If we're coming back to the consolidation level, so if we're going to be breaking out, that's the area you want to be getting into. So it's interesting. Maybe going long from the level below and getting out, going short back on the level, the order block above.
Yeah.
Doing ping pong.
Yeah, that's literally finding a range and just kind of trading it until eventually price decides to finally break one of both extremes, right? So that can be definitely, especially as a scalping opportunity, there is money to be made in those type of setups. Personally, I either try to trade the first attempt to fill the space, and then I'm going to wait. I'm going to wait now to see which extreme is going to be broken to try to trade next. But for someone that is virtually scalping and looking, even maybe not even trading the 1 minute, you can even trade the 10-tick charts or even the 30 seconds chart, whatever it may be. Maybe you can even be a bit more clear on these opportunities, and you can virtually trade. As long as there is enough space for a good risk reward, at least maybe a 1.5 or 2-to-1 risk reward, maybe there's that trade to be taken. In there.
I'm going to switch to my. Go ahead. Sorry.
No, go ahead. I finished.
I'm going to switch to my screen to give those who want to trade this a little bit and have some pinpoint areas you want to be trading from. On the 1 hour, these are the opening ranges, right? From the open, this is the high, that's the low from the open. And what I would do is, there's a nice reversal pattern right here, the quasi. For the person who asked actually how I traded, I look for that. I think I already explained, but I look for that reversal pattern for the break of the established downtrend, the break of the neckline. This will be the left shoulder, the neckline, and the head, the break of it. And I go back to indicate what areas are likely to be reacted upon. And those are the best candidates for a possible reaction or a reversal area. And we are currently in that. This is a 1 minute entry order block on that 1 minute quasi. So it's not a huge thing, but sometimes that's all price needs for the reversal. And this could be, it could be the structure it uses with or without a squeeze. Those maybe it even squeezes a little bit. So you gotta keep your stops adequately with enough room. And that could be the reversal it needs as it moves away. So one of the idea would be to check on the lower time frame, the tick chart, or maybe the 15-second, if that's possible on your platform, and see if you have a reaction, right? If buyers are actually stepping in and taking control. If they are, you put your stop below and you target either the opposing level or you go for the breakout, whichever you want, or both of them. Take a little bit of piece of both. And whenever you hit the first TP, put the rest of your stop into break even. If that's something you do often, you know what you're doing. And at the same time, for the reversal, for the bearish reversal, you can see here, we have a quasi as well. It's quite large, but it's still, you see there's one area above here and another area there. Those are the areas you want to be taking into consideration. So that means you could be marking these, the upper order block on the entry time frame, and then the outside. It's not an outside, it's another. And you just wait for the price to wait and see if price reacts to these levels or not. If it doesn't react, you don't do anything. You just let it go. Let's do its thing. It's not reacting to the order block. It's not reacting all the time. So you want to be clear about that. So this would be one trade. Let me get the and you take long. I mean, you take shorts if and when it reacts back into the level, and you can hold that as well for the continuation, because at some point it will break out of this opening range. And if you can already catch from the extreme levels or structures, I mean, those are the good ones you want to be holding. Take some profit there and hold it for longer if everything else. And basically, you're doing that. You're taking the shorting when it's on the upper range, considering that it could just a retracement, just a sweep of that high, and before it continues lower. And you do on both sides. If you do that, and you get both get triggered, one of them you're gonna be right at one of them, right? So, and if you have a positive risk reward ratio, even if you just target just to the other side, it's already 1 to 3, and if you just consider the breakout, you're talking about much more on both sides. So if you do both of them, right, and it breaks down, you got to have both of them trigger. It doesn't happen all the time, but you can understand. You can, even without knowing right now which level is going to hold, you never know in advance, but you're positioning in, and just one of them has to trigger and needs to have that follow through movement, which a lot of the times it does. You can catch one of them. You lose one and you catch the other one, or maybe you can get out, or actually I would just leave it and prefer to just take the loss on one and leave the other one to run. And that is for today. We are, unfortunately, we had, Samir had some connectivity issues, but we're very, very grateful he has been able to join us today. And Pedro is really, thinking, what advice can he send to the Portugal coach, to do a better job in placing the players on the not on the chart, but on the field next time Portugal plays, because that circle does not make sense, right? That circle pattern on the field does not make sense. We need real effective patterns. I don't know what the name of the coach is, but you have the email, Pedro. Go ahead, do your thing. We would like to invite everyone for joining the Discord community. We have today, just like every weekday, we have a session on Discord, completely free, and we give out prizes, to incentivize, to give back to the community. We have competition, world trading competition. We have trading competitions on our websites. All of them come with prizes, free accounts, even thousands of dollars in prizes. So make sure you are part of it and participate. And we have the Portuguese channel today, right, Pedro?
Yes.
Yes.
Yep.
Yes, we are. That Portuguese stream is going to do a much better performance than the Portugal team did on the field. You will be sure of that. You can be sure of that. I'm just joking around, of course. We support Portugal. I think they have an amazing team, and I'm very, very interested in seeing how far they can reach in this championship. Who knows? Maybe they will get the cup. That would be the cherry on the pie for Ronaldo, right? These are the ones, probably the last World Cup he's going to be playing, right?
Yeah, it will be.
That would be
so. I hope so. We never know, but I hope so.
Ronaldo is not watching, so it's okay. All right, so thank you, Pedro. As always, Samir isn't here, but as always, I enjoy your company, both of you, a lot when we talk about trading and everything around it. Thank you for being here, Pedro. I really appreciate you.
Yeah, we're going to have then later on the live stream. It's going to be with a special guest as well, another Portuguese trader, which is great. It's maybe someone that we're going to partner with eventually to do in-presence events in Portugal. So that's something that we are looking forward to do in Brazil and in Portugal. We are looking to do in-person events, which is great. So we are going to do actually giveaways there. We're actually running a campaign for the World Cup. So any goal that Portugal, Brazil, or Cape Verde scores, which basically are the Portuguese-speaking national teams that are playing in World Cup, we are going to do one goal equals one account. So unfortunately, yesterday Portugal just scored one goal, so it's going to be only one account that you're going to give in today's live stream. And January, just in terms of the shape, which shape do you think has more success rate in this circle one or this beautiful one? we should play with the Quasimodo strategy in between. It's way more. We need to create some kind of triangle shapes in there so we can pass the ball in between them, and instead of just this looks like a pizza shape or whatever. Like what are they doing? This is a much better shape, to be honest.
I like that. On that note, thank you very, very much, Pedro. As always, all of you watching, thank you for being with us. We appreciate your presence, your interaction, your questions, your comments. Please hit the like button if you if you don't want to support us and want to give back to us. We will deeply appreciate all of your likes and subscriptions, because that's what we as a channel we live on. So thank you very, very much, and see you guys. Don't miss the
Next
Portuguese session today. Later on, Richard Wells, our own in-house performance coach, is going to be on Discord. Didn't mention that. That's awesome. I wish I had access to go in a group when I was a beginner trader, to talk to performance coach that can actually answer my questions. And the market NQ is, while I'm saying this, is breaking out of a nice level there. But coming back to Richard Wells, he is. I wish I had someone like him to guide me and to give me some pointers, some advice, some constructive feedback. It would have helped me big time. But you have the chance, completely free. So don't miss that. Our Discord, and that's it for today. Have a wonderful day, everyone, and I wish your favorite team wins.
Bye, guys.
All right, bye.
Good weekend.